Analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Opening Bell. Let's count down to the start of trading. And joining me now to help us break down some of the levels we're seeing is Sam Vadas, of course, host for the Schwab Network. And so, Sam, really, it's been a pretty busy week, as it is most weeks, it feels like, around here. But we're expecting to close the week lower in our four major averages. We've seen some of that, pressure really accumulate on and off since really Tuesday's session. What has really stood out to you this week?
Well, Jenny, as you say, it's been a bit of struggle street for these stocks this week, and certainly as far as the views are concerned, a bit of froth coming off the top. We've been sort of grappling with a number of moving parts, everything from the AI valuation conversation, as this US government shutdown has now entered its longest in history. We're watching, of course, travel disruptions as well, with 700 flights being disrupted today as far as that headline is concerned. Obviously, we've seen this trickling across European and Asian equities as well. In fact, we did give back a lot of the gains that we saw overnight in those regional markets as well. As we get up and running for trade today, obviously, we are looking at a jobs data Friday with no jobs data, but we've had plenty to chew on this week. Everything from the ISM services, which looked okay, so did the ADP. Obviously, the Challenger raised a bit of a concern there. But as far as what we're watching today, it's been a very earnings sort of driven type of week as well. Just as far as some of the names that are rallying off the back of what we heard from their report cards. I mean, you're seeing Airbnb, SanDisk up, and those that are tracking lower today, DraftKings and Constellation Energy, just to name a few. So there's a lot of sort of push and pull that's been going on under the surface. We're looking at FX, we're looking at commodities, as there's plenty of moving parts in those patches as well, Jenny.
Okay, and I think that to speak to some of the pressure you just mentioned, look no further than NVIDIA, as it's still, a huge barometer for the overall market.
NVIDIA to send this scaled-down version of the Blackwell actually to China. That is the B30A.
Good morning.
And now you've had Jensen, who's in Taiwan, currently talking to TSMC, which is obviously a big partner, about the fact that there are no conversations actually happening at the moment. So yes, a very busy week on the NVIDIA front.
It has been, and I mean, NVIDIA has been so much of our focus and so much of our attention. We haven't even got those earnings yet. So that's at least something I guess to look forward to perhaps for an upside catalyst. We get those earnings on November 19th. So we will be watching, as we always are, the overall price and just the fundamental stories of NVIDIA as well as the geopolitical read. But appreciate it, Sam Vadas, of course, host for the Schwab Network. We're breaking down some of the biggest takeaways really of the market this week. And now we are clicking in on, of course, the opening bell. Markets looking lower here as we go into the open. Yes, collectively seeing this pressure that is now persisting. Of course, the market was positioning us pretty much exactly where we are right now, but down about 0.5% in the S&Ps. Nasdaq also down over 0.5% now. The Dow actually our best performer of the laggards, down now about 0.4%, and the Russell down about right now about 0.9%. We're seeing this collective pressure that's also weighed on the dollar. The VIX though elevated up 5.7%. Well, again, we're still seeing our leaders be 10-year as well as crude oil up 0.5%.
Man, I said
and
we was
gold
gonna go
up
lower
about
yesterday,
0.4%. So
like
now
government
to welcome
shutdown.
in Diane King-Paul, though, for some of the individual stories to kick off the trading session. And Diane, we actually are seeing some positive news today. We talked a lot about the more downbeat tone that's characterized this week, but Expedia, it's looking sunny for Expedia as we're seeing a pretty decent pop on the heels of earnings.
Yeah, listen, this company is soaring in early trade this morning. It's one of the things I was talking to Kevin Green about this morning, not the company in particular, but there are winners in this market this week. And one of the things he was paying attention to is the broadening out beyond tech. Of course, tech is the heavyweight, so that's been part of where you've seen some cold water this week, the drawdown there. But Expedia soaring off the back of its quarterly results. Beat expectations on the top and bottom line. Adjusted EPS coming in at $7.57. The street was looking for $6.92, so a clean beat there. Revenue for its third quarter came in at $4.41 billion. The street was looking for a touch over $4.25 billion, so also better than expected. It also boosted its 2025 outlook for both revenue and margins, and that signals that there is strength in the travel sector. It shows that consumers aren't willing to give up their travel yet. So this is a big jump in profit from a year ago. You saw strength across its platforms, whether we're talking about its namesake brand, Expedia.com, or Hotels.com, or its home rental platform,
Everything fell in
business to business, driving that comeback B2B. That jumped 26%. That's the segment of its business that serves corporate travel firms and card partners. So there's been continued investment in that. They see that as a key growth engine here. Analysts calling the margin expansion that they're seeing here, quote, reassuring in a market where peers have been pressured to spend heavily here. Travel trends, room nights grew at the fastest pace in 3 years. International markets, especially Asia, actually led that growth. That was up more than 20%.
I'm looking for a balance on some of this stuff.
Across price tiers. I find this interesting because we've been talking about this K-shaped economy. So it's like unlike, say, competitors who are focused on just on luxury travelers, Expedia saw demand even. They are seeing price sensitive, but a resilient consumer, Jenny.
I mean, absolutely. And I think everything we've heard as far as consumer and some of the spending habits have actually been pretty strong. It just hasn't necessarily been rewarding. So encouraging at least to see a pretty nice move today here in Expedia. But now to shift gears actually into Airbnb. So not shifting too far as Airbnb also saw a nice earnings beat and strong forecasts. And so shares, we have seen, I mean, a bit of volatility in this name, especially going into this print. But right now off the open here, looking a bit stronger. We're up just shy of about 2%.
Yeah, so not as strong as Expedia, which is rallying 14%. But investors breathing a sigh of relief off the back of the quarterly numbers for Airbnb. And especially to your point about how shares have performed this year. There's been some criticism about how Airbnb does, especially analysts have wanted to see more growth internationally. So adjusted EPS coming in at 221. So that was actually a miss, but revenue came in better than expected at $4.09 billion. So again, that's stronger than expected. Let's talk about some of the metrics investors watching out for. Nights and experiences booked. That was more than $133 million. That was up 9% and ahead of expectations. Gross booking value, $22.9 billion. That's up 14% from a year ago. It's a sign that travelers are willing to spend even as prices still stay high. In terms of guidance for its fourth quarter, Airbnb is projecting revenue between 2.66 to 2.72 billion. Wall Street comforted by that, suggesting that there is some stability of demand there, especially when you think about the context of heading into the holiday travel season. So, people aren't completely giving up their Airbnbs.
Let's
they're
go,
highlighting
PL.
that four growth
Let's go,
pillars that they're
PL.
focusing on, improving its core service. They talked about better cancellation options and mapping options, expanding globally. Again, investors wanted to see more on that front. Broadening offerings beyond traditional stays and integrating AI. Can't be in today's day and age without trying to figure out how AI can improve your business. And they mentioned that that is one of the pillars that they're focusing on, Jenny.
Okay, and now a complete shift of gears. Take-Two. And I know there was earnings, but that was really completely overshadowed by right now Grand Theft Auto 6 being delayed again. I am personally disappointed by this story. I mean, not till now, November of 26. I know, November of 26. You can wait a whole nother year. So, I mean, walk us through the story today.
I mean, will enthusiasts for GTA 6 who have been waiting for eons now ever get that game? That's the question.
Somebody's trying to buy gold overnight.
Delayed. And
Gold just bounced right
it's
here
not just
overnight.
gamers who are disappointed. Investors are disappointed to hear this news as well. They also released their earnings. They did better than expected, but the street does not
market's so
care
falling.
about
I'm
that.
gonna
That
go
stock
to
getting
the
dinged off the fact that they're pushing GTA 6 away further. The stock down more than 4% right now. Let's take you through some of their numbers. Adjusted EPS was $1.46. That was a solid beat. The street was only looking for 93 cents per share. Revenue coming at $1.96 billion, also better than expected. Revenue jumping 23% year over year. That's thanks in part to solid demand for NBA 2K26, Borderlands 4, Red Dead Redemption 2. The big letdown, GTA 6 delayed again. As you mentioned, it's now pushed out to November of 2026, so we're in November of 2025. This is a full year after fans were hoping. Now, I will say the thing I do think is neat about that, you can connect GTA 6 with 2026, so they may need to figure out and lean in on some marketing there, because right now, in terms of investor reaction, consumer reaction, this ain't it.
It is not it. I mean, I could not agree more. And there's a reason we focus so much on the GTA franchise, as it's their most lucrative, it's their best selling. Like GTA 5 is, I believe, their best video game of all time. So there's a reason that a lot hinders on the next release of course, 6. And again, it just adds a personal interest. I am disappointed a whole year. I need to understand what went wrong here for their timelines. But well, yeah, we'll leave it there. Appreciate it though. Great way to kick off the session here today. Diane King Hall, of course, host for the Schwab Network. Now coming up next, we will discuss why investors have disliked the bull market rally, why we've seen recent weakness, and what it means for your portfolio. Opening bell, we'll be right back.
Support broke. Some of these older supports that they're gonna come and retest these. Pull these out the woodwork, boy. I be wondering why my spy be looking like this, boy. It's 'cause support and resistance is important. Bears is in control right now.
While others recap the news, I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall,
Look,
and
filling up
connect
the
with
gas
me on
always
LinkedIn
low.
for more.
Every time they get pulled back, they filling up the gas. But we're gonna have to come back
Hey,
to
Bob.
this later.
Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. I'm Jenny Horn in for Nicole Petalides on this Friday. And now here to discuss the broader market, joining me is Craig Warnemont, Chief Investment Officer at Venture Visionary Partners. So Craig, you've said the bull market has been disliked and not trusted since October of 2022. Why do you think we've seen so many very vocal skeptics that have remained?
Yeah, good morning, Jenny. Thank you. This whole way, and maybe it's been this way actually since 1900, not just since 2022, because there's a saying about how the market climbs a wall of worry. There's always something to worry about. But I think that a lot of Wall Street strategists have become competing over who can spot the first big risk that's going to take down the market before the other firms, instead of trying to help clients identify opportunities that they can make a lot of money off of. The sad part about competing over who can think of the biggest risk that might take the market down is that clients miss out on opportunities to make reasonable returns while they're sitting on the sidelines waiting for that big opportunity to come along, the big sell-off. And
be careful on the short
if
term.
they wait for that forever, the money they left on the table that they never made, the opportunity cost of being uninvested, ends up being more money that they lost, quote unquote, lost out on making, than what people tend to actually lose when we get a 10, 20, or 30% pullback in the market.
Okay, and you mentioned you tend to focus on revenue, earnings, and try to find, I believe, numbers to really speak to your overall conviction instead of just paying attention to the noise, which is something I very much appreciate. We have seen technology and financials lead with about 24% annual earnings growth. Industrials also have delivered the biggest surprise to the upside. So what sectors are you really watching, again, as drivers of overall performance as we head into this year?
Yeah, those are sectors that are really big part of most of our client portfolios here, depending on client risk tolerance. And so those were aggregate figures for the total sector, but you can find individual companies inside of there that are doing far better. I wanted to just share a couple of examples, because one of the big complaints about the market is that it's too expensive, and PE ratios are high. I'm not here to tell anybody that PE ratios are a screaming buy, but when you look at the results that companies are delivering that justify those higher PE ratios, if you pick on a company like, and I'm going to use a couple of examples, not all clients own these, but they've been big winners for a lot of clients. And also, I'm choosing these as examples because they are not part of the Mag 7 that everybody talks about and says and implies those are the only companies that are working. But if you look at AppLovin, for example, who grew revenue 78% year over year recently, and compare that to their forward PE ratio of 58 all by itself, that's a high PE. It's about double what the overall S&P 500 trades at. But if a company can deliver 78% top line growth and 153% EPS growth, it doesn't need to do that every year into infinity. That growth rate is going to slow, but even if it drops by half and it slows down to something in the 30% range, top line and earnings will eventually trend towards whatever the top line is growing. You pull that PE ratio down to a reasonable number so quickly that if you're willing to just take a little bit of a long-term view on something that's still in its super growth phase, you can make a lot of money before it normalizes to let's call it a typical S&P 500 PE ratio. I will go to one of the Mag 7 and just talk about it. You don't have to have a great memory to be able to remember how many times people were calling NVIDIA overvalued as it marched up hundreds or maybe even 1,000% to become the largest company in the S&P 500 index. If you would have stuck to the academic research So I'm just saying that PE ratios are relative to growth rate. And if you look at PE to growth rate for a lot of the high PE companies, it's very reasonable. And then you just need to have a sober, realistic view of how long can super growth continue before it reverts to something that looks more like the typical company.
Okay, and just so speaking on that, I wanted to throw another example at you. Palantir is one that has historically been, at really elevated levels for its valuation, but there's been the argument that its growth has really justified this, and that, it's been a pretty frothy name for now years at this point, and again, it has had growth to back that. But what do you then make sense of, some of the moves we saw to the downside on the back of its earnings, or just like, for example purposes, obviously, because a lot of these names we say, well, it was overvalued, but does that really necessarily speak to the pressure? Is that just right now the market environment just punishing some of these frothy names?
No, look,
and
every morning, bro.
So the market has punished it on the way down since reporting earnings. But if you go back to the monthly core earnings, the stock tore off to the upside because investors were thinking, okay, this company has delivered a revenue and earnings beat for 6 quarters in a row. How likely is it that they're going to go for the 7th quarter in a row? And so people wanted to buy into that before buy the rumors, sell the news, or buy the expectations, sell the news instead. So the prior quarter, when Palantir delivered the huge beat and raise, so the earnings triple play, better than expected revenue, better than expected earnings, and better than expected
black
forward
businesses
guidance,
around here. You get me?
The stock rallied on the news, but because, again, market is made up of a bunch of people who are always trying to be right a little bit quicker than the rest of the competition. So this time, everybody bought it leading into the quarter, got the good news that everybody expected, and sold off. Pretty interesting. We're far from day traders here at Pension Partners. We try to take a long-term view, and that actually helps us be willing to buy when the noise is scaring others into selling. But if you take a look at a stock like that, it's pulled back to an interesting support level. Just like if you're watching a football game and they've got the first down marker on the field, you can see it if you're watching TV, but that line doesn't exist in real life. So there's no guarantee that stocks are going to stop just because they touch a support level. But we'll see how long the negative headlines persist with people second-guessing valuation. When negative headlines like the government staying closed for a 38th day and saying, record after record for
I really tell everybody, like,
things remain shut. There are plenty of things that you can find that make people nervous and unwilling to take risk. But if you take a look and try to find some intelligent places to take risk, you're probably getting some pretty good opportunities already, even though this pullback hasn't lasted very long. There's a pretty interesting chart in, again, this very short-term kind of commentary. But the market switched from overbought conditions on the advanced decline line to touching oversold just this morning at the open, and it did that in a matter of days. So the markets do move fast these days, and not everybody's going to sell the top and buy at the bottom perfectly. But if you are deliberate in your process of looking at what a client's long-term asset allocation goal is based on how much funds they withdraw to live off of in their retirement, and you have the rest invested for long-term growth over and above what's needed to cover that need. Every time you make extra or better than expected profits, you have an opportunity to take a little bit of money off the table and build up the safe side to sock away another year's worth of living expenses. But if you get a pullback this far, this fast, you might end up turning around and taking some of that money that you just put in safety side within the last couple of weeks and buying a couple of beaten down stocks. So it's a pretty good situation for a nimble investor. It can be a pretty frustrating situation for somebody who's always waiting for the perfect time to buy. I mean, you just covered the market open in the prior segment. They ring a bell every day at the open and at the close. No one rings a bell at the bottom or top. It's tough. So you need to have a process that you can stick to that leads you through all of that noise.
Yeah, and a great place to leave it as. I think that's such an optimistic approach. I mean, there's a reason that these pullbacks really haven't lasted that long, to your point. So we so appreciate your time on this Friday.
Wow, the market is falling.
Visionary Partners. Now, coming up next, we'll take a look at key levels to watch as far as the technicals are concerned and having dreams.
Still, goodness.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
I'm not getting liquidated.
Welcome back to the opening bell. Let's take a look at key levels to watch just after the open. Joining us now is senior markets correspondent Kevin Green. Kevin, what levels are you watching today?
That's
and of course, given all the volatility of this week.
And AI coordinate work together.
Well, Jenny, we are actually seeing 60% of the stocks in the S&P 500 in green so far here. So seeing the market down 0.7%, if you're looking at the S&P 500, obviously it's just still showing that we have a lot of weight on those mega cap names, especially for NVIDIA.
Visit us at
aggressive selling pressure taking place there. To the downside, looking at 6650 as your area of support, potentially be able to hold this market. Now, we are in this thing called negative gamma, where dealers are basically selling with whatever the primary trend is. And the primary trend is right now, if you're looking at the shorter term time frame, is to the downside. And you can see that by the put activity that's taking place in the S&P 500. A lot of buyers buying those puts at this point in time, which once we do find a bottom, actually could be a pretty decent catalyst for us to rip a little bit higher. We just have not found that low yet. But you are starting to get a little bit more optimism if you're looking outside of the tech names, outside of the communication services names, starting to see a little bit of a broadening rotation taking place in this market. And I think that's actually
helpful. I just said that. 650. I just said that yesterday.
Even though, once again, we're kind of correcting some of those market weights. To the upside, first area of resistance, 6,700. To the upside, beyond that, you're looking at 6,780. So a pretty wide range what you're looking at for today.
For a retest and rejection
volatility, which we are seeing VIX above 20. So we're implying around a 1.3% move either to the upside or downside. But there is opportunities in this market. It seems like it's just not in tech, and we'll see how this actually plays out here. We're hitting some technical areas of support for the S&P 500 too.
Bird flag.
Okay, and walk me through some of the levels you're watching between the relationship of course the dollar yields. What sticks out to you?
Yeah, when you're looking at the dollar yields, if you're looking at the 15-year chart here, obviously if we inverse the 10-year Treasury futures, which is going to kind of represent yields, and you look at that compared to the dollar index here, we have seen the dollar, inch up a little bit higher, but we do have this really strong correlation over the last couple of months here, where yields and dollar are for the most part actually moving in tandem here. And if we actually do the dollar actually moving a little bit aggressively higher, do we actually start seeing yields actually re-rate a little bit higher as well? That's something to be mindful of. That could be in an environment where the market's pricing in the economy's good, or the market is pricing in that we might have some headwinds here in the near term. That could be also causing some turbulence here when it comes to the equity markets.
Okay, appreciate it, Kevin Green, for all of the technical help. Let's now go through what we are really watching for the remainder of today and this week with our market meetup panel. Joining me now is Alex Coffey and Kevin Hinks. And Alex, we will start with you as we are seeing, still some pressure looming here in the markets with the S&P now down about 0.6%. So what are you watching as far as some levels to keep on your radar for the S&Ps?
Well, I think Kevin Green, that is, just laid out a couple really important takeaways. One is if you're in a negative gamma situation, the moves can be sharp and brisk. So you just saw the S&Ps recover 15, 20 points on what seemed like a flash. They bounced off the 50-day simple moving average for the S&P 500, but I wanted to highlight something that we really haven't seen happen since February, and we talked about this on our program a few times. One of the things that I look at, and I don't pretend to be a chart master, is the relationship between the 1-week EMA and the 1-month EMA. If you just use that one technical indicator, it would have gotten you out of the S&P 500 on February 21st, around 6,000 or so, and it wouldn't have gotten you back in until the end of April, and it would have got you in the mid, let's call it 5,400 range. And you would have basically missed that entire drawdown. Well, it's below it again today. Now, I think technicians would like to see it close in this way to confirm that, but a little bit alarming considering the fact that NVIDIA's lost $700 billion in a few days.
Yeah, down 7% plus this week. And so, yeah, that's, I think, speaks to the overall market weakness. But Kevin, Do you think that we pay too much attention to some of the negative headlines, and there's still actually a lot of reasons perhaps to be optimistic in this market?
Yeah, headlines are so important and the news flow. But that said, Jenny, think about this. Right now, there's 5 sectors of the S&P 500 are actually up on the day. Only 6 are down. But within that 6 is consumer discretionary with Amazon and Tesla. It's information technology, which is basically NVIDIA, Microsoft, Apple, Broadcom, and then communication services, which is Google, Alphabet, and Meta. So I basically just told you that it's really a Magnificent 7 sell-off right now because the others, consumer staples, energy, they're all slightly higher today. So it's a mixed market in terms of the number of sectors, but the big sectors that take up almost half of the S&P are heavy. That's why we're down on the day. We need some new shock, like a government reopening or some plan to do that, to change the discussion going on in the market right now, Jen.
There it is.
No, absolutely correct. And NVIDIA now today's 2% moves to the downside, now down 9% this week, which is a brutal move. And even today's overall pressure now weighing on all the Mag 7, which are all, at least as it stands, facing to close out this week lower. But appreciate it to Alex Coffey as well as Kevin Hanks for all those takeaways. Thank you for joining us this morning on Opening Bell. Morning Trade Live with Sam Vadas is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Literally make hundreds of dollars off this little baby stock like I did.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
everybody doing?
I'm Sam Barnes, live
You guys
from the
staying
floor
strong?
of the New York Stock Exchange. We have plenty to hit on, both here and abroad, over the next hour. So here is a look at what is coming up on today's show. The U.S. government shutdown is officially the longest in history. We did not get the October jobs report today because of that, and we'll dive into the other potential recession indicators that investors should be watching out for. And over the next hour, we'll bring you example trades for Tesla and Expedia. Tesla shareholders approving a new pay package for Elon Musk, and Expedia is rallying today after its earnings. Let's take a look at where markets stand about half an hour into Friday's trade, and we are on the back foot. So we're looking at to actually be on set and on track for a weekly loss here, snapping a couple of weeks of gains there, 0.6% lower for the S&P 500. We're at 66.81 right now, so we've broken through and below the 67 mark right now. The Nasdaq 100 are down 1%, so it has been a bit of a struggle street there for some of the technology stocks this week, certainly as far as the Nasdaq is concerned. In fact, I saw that it's having its worst week since April. The Dow Jones down 0.25%, and then we've got the Russell 2000 down 0.5%.
Just a
So
pullback.
plenty of moving
Fox
parts.
is
We've
actually
had
doing
AI
good.
valuation conversations creeping into the minds of investors. We've got this longest
is
government
actually
shutdown in
doing good.
history. We're seeing travel disruptions, flights being cancelled. So this is all the information that we have on top of course, some alarming
Just a
data prints,
pullback on
particularly on the jobs front. The ISM services looked okay. The ADP was fine. But then obviously the Challenger jobs data did raise some eyebrows here as we are, of course, in this sort of data void or vacuum with the official numbers. Here's how Europe and Asia are faring right now. So we did actually see global equities regionally giving up gains for this Friday session. The Hang Seng Index closing out the week lower
the VIX
by
is going
1%.
up.
The Nikkei 225 also down 1.2%.
for the market.
So we did see certainly a reversal of those gains, particularly off the back of some of the concerns on the Wall Street session yesterday. Some follow through in Asia. We've got the FTSE 100 down 0.8% right now, and the German DAX down 1%. We had some export numbers out of that country. I'll get to those throughout the course of the program. So we are looking at a risk off across global equities. Let's take a look at some of these futures products, because a lot of attention, of course, in the commodities patch. So many moving parts. We're going to get to KG in just a second to talk us through some of the key stories there, and also a lot of attention on FX this morning, given we did have some critical data points out of China, Germany on the trade front. So we are seeing some euro strength coming through this morning. The US dollar index at 99 right now, so taking a bit of a breather off the back of those multi-month highs we've seen earlier the week. 10-year yield tracking higher now, but we are off the 416 levels that we saw earlier in the week. We're at 411 right now. Gold catching a bit of, we're seeing the DXY coming off. We're just reclaiming 4,000 there and holding above that line at the moment, which has been that key level. Crude oil ticking up, but we're still below $60 a barrel. Plenty of moving parts in that patch. And also Bitcoin, which actually did tumble past that 100,000 mark earlier this morning. It's just holding above the line at the moment, but still down 0.4% in the trading session. So we have got the VIX picking up right now, just over 20 at this stage. So let's get to Kevin Green, who joins me now for a look at some of the data that we are getting this morning. No jobs, no worries, because we've got the University of Michigan Consumer Sentiment Survey out. What is that telling us today, Kevin?
Yeah, well, this is a report that actually doesn't look that great here, Sam, when you're looking at the high-level numbers. If you're looking at consumer expectations, right now it's at a 49, so that's actually below that 50 level, which means it's in contractionary territory. She was looking at 50.3. That's exactly what we actually saw for last month here. If you're looking at consumer sentiment at 50.3, Street was looking at 53 for that one, so once again, coming in lower than the Street's expectations. Current conditions, that index came in at 52.3. Street was looking for 59.2. And if you're looking at the one-year inflation expectations, that actually inched higher to 4.7%. Previously, it was 4.6%. So this is not the report you really wanted to see. You are now seeing consumers thinking that inflation might be edging a little bit higher. And then obviously, not only just the current conditions, but what we are seeing in the future here, potentially, is also getting a little bit grim, if you will, if you're looking at the consumer expectations. Now, this also is probably coupled with the U.S. government shutdown as well, probably leading to maybe some of this pessimism in the market. But this is not really the report you wanted to see, especially on the inflationary front, as consumers do believe that prices are moving higher. prices tend to move higher over time, and that's an unfortunate situation. And Chairman Powell is aware of that. He actually made mention of that, I believe, around this time last year when he was talking about some of the consumer sentiment data that he had been seeing here. So not a really good report that you would want to see to start off today. Obviously, markets have seen a little bit of pressure here, and that's really coming from the technology as well as communication services sector.
Yeah, I'm just seeing, as you say, consumer sentiment certainly deteriorating, and this is across the population as well as age, income, and political affiliation as well. There seems to be one key exception, which is a trend that we've continued to see, and those who hold some big stock portfolios are feeling a little bit better about things. And it's interesting that they've actually noted here that the release closed prior to Tuesday's election, so you wonder if anything certainly changed on that front. But
things can change.
Look, as we are in this sort of data vacuum, we've been keeping track of what we have been getting. I mean, the ISM manufacturing, there were some metrics in there looked encouraging, and the services look good.
So me personally,
data
I can't
out of
tell
China
nobody,
overnight, the exports didn't look pretty. However, Germany was a little bit of a bright spot. I'm just wondering, as you look across that sort of the energy commodities complex this morning, what stands out to you there? Because I've seen that iron ore is heading for its worst week, or at least a weekly loss here in quite some time. What do you make of it?
Yeah, so the China data did show that we saw actually a contraction when it came to exports, so that was a little bit of a concern. I think the commodity picture is a little bit mixed this morning. If you're looking at the energy patch, we are seeing oil up a tad bit, up 0.6% here, fading a tad over the last, let's say, 3 hours or so. And you are seeing some of the metals actually catching a bid. I mean, silver is actually moving a little bit higher.
I love the market. It's my happy place.
It was moving a little bit higher.
If I lose money, I know they're going to give it back.
I think the commodity patch is really trying to show you the demand picture that is out there. If you're looking at the industrial metals, yeah, we are seeing a tad bit of a pullback. And unfortunately, China is going to be in a contractionary territory when it comes to exports. And there's concerns there when it comes to consumption. Obviously, it's going to push prices a little bit lower here. And then obviously, we have a lot of economic data here in the United States, the privatized data that is mixed at best when it comes to the outlook. But we are actually seeing a little bit of an adjustment when it comes to the White House. They did actually put a couple of critical minerals, added a couple of critical minerals onto their list. Uranium now being added. You are also seeing silver being added to that, as well as copper. So that could actually change or transform maybe some of the optimism when it comes to U.S.-based companies that have mining operations here in the United States. They could actually catch a little bit of a bid. Maybe if that theme comes back that we saw about a month ago for a couple of those names, just because of, once again, that readjustment when it comes to designation of critical minerals is going to be very key for the domestic consumption portion here in the United States.
Yeah, and I think the operative word here is designation. I mean, copper, silver, uranium becoming the new rare earth. I mean, this very much signals continued emphasis very much on how these industries are looking at, being a national security issue, that these are strategically important in order to compete with the likes of China. So we've seen that hegemony there. I do want to switch gears because, as you say, plenty of moving parts in these markets this morning. I've noticed that Hungary's PM, Viktor Orban, is going to be meeting with Trump. Now, no doubt some of the purchases of that Russian oil is going to be part of that conversation. But I've also heard about the potential for natural gas deals there too. What are you seeing, and what sort of impact could that have on the markets?
You know what I'm saying?
Yeah, Viktor Orban is a very interesting individual, to say the least.
Or
you
they
could
can
say
break
that
down.
he's probably a little bit more favorable to the Russian
price.
side of the equation, but President Trump is fairly fond of him. And so when you're looking at Hungary, it's not so much the country actually importing a lot of energy. They're actually more of a hub for transmitting oil as well as natural gas to the European states, and that's actually going to be a very key thing for them. I'm not sure how much this is actually going to impact the energy market today, but this also could be a geopolitical risk
the government shutdown.
We have moving forward.
So I'm not surprised that things are going back.
Readjust when it comes to Russia-Ukraine conflict. Once again, Viktor Orban is more on that Russian front, if you will, rather than maybe the
this is where, if you know how to trade,
just in general.
You know, you
not
make
looking
money
at a big
and hedge your
major
account.
adjustment when it comes to oil prices because of this meeting. But I think if you look at maybe some of the defense
many
names
options
that
to make money in the
probably
market.
will catch a little bit of a bid if something does spark
there's
from
puts.
this meeting today.
Oh, okay, good to know. As I mentioned, we've seen the VIX picking up. We're above 20 right now. What are the charts, technicals telling you this morning, KJ?
Yeah, if you're looking at the S&P 500, we are actually testing the 50-day moving average. And so we haven't really broken that 50-day moving average or tested that aggressively and broken below that since actually before the the tariff tantrum, if you will. And so let's see if some buyers actually step in at these current levels. Volatility continues to inch a little bit higher, and it's not an aggressive re-rating higher. It's just
I don't think they're going to go down. I mean, they might bounce
today. You are starting to see put activity obviously increase over the last couple of trading sessions here. In the near term, it could provide downward pressure on the market. Dealers will sell with the trend. But when we do find an area of support and those puts are actually taken off the table, that actually could be a pretty decent catalyst for an upside move here. So technically speaking, we couldn't get really mad or upset with somebody that's trying to take a shot here at that 50-day moving average, just because we have tested it in the past, gotten fairly close, and then started to make new all-time highs. So this re-rating lower obviously is causing a little bit of angst, but not everything is selling off. We are seeing a broadening of this rally, and I want to just kind of call out here too, we are getting some news headlines from Senator Thune. They will be voting on a package to reopen the government today, and he basically, from these reports, told the Republicans to kind of get on board here, and he's willing to make
Tesla trying to go.
Democrats, and he actually says he's willing to make all concessions to the Democrats too. So keep your eye out on that. That could be a news headline later on today. You are seeing United Airlines as well as some of the other airlines moving aggressively higher from their lows. So UAL actually moved around 3.5%, 4% off their lows after we started seeing these news reports coming out. So we get some favorability.
We're gonna get some rain, y'all. Let's go.
Okay, all eyes on that. Certainly some of the conversation and the view out there has been the suggestion that what we're seeing as far as air traffic control could actually move the needle as far as, these two sides coming together and trying to work this out. I mean, the big question has just been how uncomfortable can it get? And we're certainly seeing that as far as some of the travel disruption. So key to keep an eye on. Thanks so much, KG. I'll check in with you a little bit later. Coming up, we will take a closer look at the economy and what signals to monitor with no official government data due to the shutdown. Morning Trade Live is back after this.
Let's go, let's go, let's go, let's go.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management. No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com.
We're back on Morning Trade Live. Block is moving lower this morning after Q3 earnings missed expectations on the top and bottom lines. Adjusted EPS coming in at 54 cents, well below the 67 cents that the street was estimating. Morgan Stanley, BofA, Goldman Sachs, and Oppenheimer have all lowered their price targets now on the stock after those earnings. So it is down over 10% in trade this morning. Let's take a look at some of the winners and the losers on the session. As we've seen in these stocks. So Expedia is flying high today, 15 or so % higher off the back of its quarterly beat. It very much continues to show this consistent theme that travel is holding up despite some of the challenges we're seeing right now because of this government shutdown. But we've heard sort of similar type of stories out from the airlines, the cruise lines, and Airbnb yesterday as well. So let's just take a look at the winners and the losers, I should say, on the session now, and those that are in the red. And as we mentioned, Block is tracking lower by about 10% this morning. The trade desk, interestingly, lower now by almost 6% off the back of its earnings just yesterday, and Take-Two also lower by 8%. All right, joining us now is Jeff Schulze, who is the head of economic and market strategy at ClearBridge Investments. So we're talking about this longest the government shutdown in history. We're now starting to see some travel disruptions, a little bit of an impact coming from that. How worried should we be at this stage as to just how comfortable this is likely to get?
We shouldn't be too worried. Things started to really ratchet up when we entered into November. SNAP benefits are no longer being paid out, and although about $4.5 billion is being earmarked from alternative funds, it's going to be delayed before it hits those recipients. You're also starting to see travel delays, as you just mentioned, and I don't think that either party really wants to move this through to the Thanksgiving travel season. And when you go back to the previous longest shutdown on record, which was 2018 into 2019, travel disruptions is what brought both sides together to forge an agreement. So I think we're probably a couple of weeks away from that agreement, but I think we're closer than farther away at this point.
Okay. And just as we look across some of the data that we did get this week, I mean, the ISM services looked good, the ADP held up okay, the Challenger jobs cuts didn't look too pretty. However, we've just got the consumer sentiment out of the University of Michigan this morning. We are seeing a deterioration as far as how people feel about the economy right now. When you bring all these data points together in the absence of the official numbers, what do you make of it?
It does create a little bit of a mixed picture, especially on the labor side. The Challenger jobs reading was the worst October that we've seen in about 20 years. So that was obviously one of the reasons why the market sold off yesterday. But we did get state-level unemployment claims yesterday as well, and that appears to be right in line with where we have been over the last couple of months. And that is one of the best high-frequency data points to gauge the labor market. And it tells us, although you are seeing some weakening still in the labor market, people aren't being fired. And ultimately, when you look forward to next year, with a very potent combination of a Fed cutting and the peak fiscal impulse of the One Big Beautiful Bill, we think that the economy and the labor markets are going to start to get stronger as we get closer to that inflection point. So ultimately, although it's been a little bit of a mixed bag, we see things getting better as we look forward.
And what are you and the folks over at ClearBridge, what are your recession checks telling you right now?
Yeah, so we have the ClearBridge Recession Risk Dashboard, which is a group of 12 variables that have historically foreshadowed a looming recession. Stoplight analogy, where green is expansion, yellow is caution, and red is recession. And we're flying a little bit blind in October because 5 out of our 12 data points are not being released because of the government shutdown. But when looking at alternative data sets, it does appear that all of those indicators had the same color as what we had coming into the end of September. So right now we have a really strong green expansion color in the dashboard, which is consistent with recession odds of only 30% over the course of the next 12 months. So we see the economy hanging in there.
Yeah, it's been an interesting earnings season. Talk about a lack of data. What we have got is some reports that have sort of given us some clues as to what's going on here. I mean, certainly fascinating when you take what we're seeing is in travel. Expedia, good numbers. Airbnb, not too shabby. Avis, airlines, cruise lines. I mean, it does very much point to the fact that travel is holding up. But then you look at McDonald's talking about the challenging environment, Chipotle as well. It seems like people are traveling, they're buying Coach bags, but they're not exactly going out and buying a burrito bowl. So can you speak to, I suppose, the conflicting earnings that we're seeing as well as far as the trend?
Yeah, I would say the most discretionary thing out there is travel. To see a pickup there is a really good development, and that's consistent with what we got with the CPI release last week, where you did see a pickup of pricing in airfares and lodging away from home. So although the low-end consumer is struggling right now with high prices, as we look forward to 2026, We're expecting less of a K-shaped consumer and much more of a uniform consumer because a big part of that peak fiscal impulse that we're going to get from the big one beautiful bill is going to come through the form of higher tax refunds in the front end of the year, which is really going to help the low to mid-end consumer spend in a little bit more of a durable manner. So although you are seeing signs of that K-shaped consumer right now through earnings, again, we're expecting more firmness in 2026.
Okay, looking at that 2026 story. Jeff Schulze, thank you so much. Happy Friday. Have a great weekend. Thanks for joining us here, Head of Economic and Market Strategy at ClearBridge Investments. Appreciate your time. Coming up, we'll get a closer look at the big picture with the team over at Charles Schwab. Morning Trade Live. We'll be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Hello.
How's it going?
First day, so
Sometimes, you know,
Next. Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Everything into court. And, you know,
Whether
we
you're
try
a
and do this
bull or a
co-parenting
bear,
thing.
you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
So I was.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network. We're back on Morning Trade Live. NVIDIA CEO Jensen Huang is batting down talk of any immediate China comeback, saying flat out there that there are no active plans to ship its prized Blackwell chips. This comes after he raised eyebrows with a comment that China will win the AI race, which he now says was more of an observation than a prediction. NVIDIA shares are up 40% so far in 2025, but have been struggling this week off the back of some of the comments that we've seen and also worries about AI valuations creeping into the conversation here. So we are seeing NVIDIA shares down 2.5% and around 7% or so for the week. AMD lower by almost 3%. Broadcom is also down 2%. And Intel is up today on some news around that company. It's the little bright spot there. And if you actually take a look at some of the memory names as well, SanDisk is actually at a high this morning as well off the back of its earnings. A lot of focus on memory right now. Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research. It's so nice to see you, Cooper. Happy Friday. Thanks so much for joining us. So we got a little bit more information out this morning from the University of Michigan Consumer Sentiment Survey. 49, so it seems below the boom or bust line, and it just looks like we're seeing a deterioration as far as how people are feeling about this government shutdown, as well as inflation and jobs, which sort of goes hand in hand with the reaction we saw yesterday off the back of challenger data. How do you tie it all together this morning?
Yeah, you know, I see it as kind of a continuing pattern of what we have seen, to where a lot of the soft data hasn't necessarily been matching up with the hard data. The University of Michigan numbers are obviously on the soft data side. They weren't good. So we saw a little bit of a deterioration in the current conditions, expectations, and then also a little bit of a move up in terms of inflation. So that's not a positive of what the economy and the market is looking for. But without that hard data that we normally would expect to receive, I think really what that means for where Treasury yields are likely to go they're probably going to stay range bound for a period of time and kind of hover exactly where we have been. So we know if the government was open, we would have received jobs data or the non-farm payroll report today. We obviously didn't get that. So like you mentioned, Sam, we have to look at alternative measures.
I tell you
like
right now, they ain't liquidating me. I would take my money out of every team.
Those aren't the gold standards.
Because I know we in the government shutdown, so you got to be precise.
Kind of been in a holding pattern for some time.
Look, I'll show y'all what's moving.
Yeah,
look,
these
right
jobs reports are certainly, as far as the alternative data, taking on sort of a disproportionate amount of weighting.
I'll take hundreds of dollars out of
it's all we've got to work with at the moment. We don't typically spend so much time talking about Challenger, but here we are.
What was I talking about?
You and I have been talking about the fact that, these bond yields
right here
we're
already
seeing there as far as treasuries have been a bit directionless because of that sort of data void that we've been in. But you said for a period of time, once we get that data, is that going to be some sort of catalyst for a big move in treasuries, do you think?
The first target right here.
We'll see what the data flows in as,
gain.
so I think that's obviously
on the
going to
bottom
be the important
right
piece of it. But our team does think that in terms of longer term yields,
people
they're
at
likely
work
to remain elevated. And if you look at a couple factors in that, so one, you can look at global yields remain elevated.
That's why I
so
say
that's likely to keep capital flows moving to different places and keep our yields elevated. The other piece of it's the term premium. And this
I was
really
in a
gets
trade
into
just like this one day. I was scared as fuck. I had like
103, 104 level, so a little bit wonky.
Here go the stop
but
loss.
It's really the additional compensation that investors demand
they break this,
for
I'm out.
uncertainty in the market.
If I was in it.
And what we've seen is a lot of uncertainty in terms of fiscal policy, what's going on the federal side of things. Also a lot of uncertainty in terms of where the Fed funds rate is going to go. So I think so long as that uncertainty remains, that's likely going to keep the term premium at an elevated level.
It's a little early to tell y'all.
Give
it a couple minutes. Right here.
Okay.
If we get a breakout, y'all, this might be a really good breakout.
About some of the positive returns we've seen in municipal bonds. Just talk us through what you're seeing there right now.
Yeah, so we have seen a couple good months in terms of the muni market. Now, I will be honest, they are still lagging other major parts of the market. So, for example, the corporate market.
Shut up, I'm on Twitch.
And we don't think that the lagging in terms of year-to-date returns is a reason to overlook munis right now, Sam. We do think that they can be an attractive alternative or attractive investment option, I should say, for investors who are in higher tax brackets. This is always something, or usually something that we have a stronger conviction for, or stronger view of. But right now, if you look at relative valuations compared to corporate bonds, they do look especially attractive. So one of the metrics that we commonly watch is what tax rate would an investor need to be in for the yield on a corporate bond after taxes to be equal to that of a muni, and that's about 24%. That's fairly low historically, so we do think that they can be an alternative or a fairly attractive alternative for those investors looking for more conservative investment options that have some tax advantage to them. Obviously, the type of an account you invest in is going to be more tax advantage.
Coop, always appreciate it. Thanks so much for joining us. Happy Friday. Have a great weekend. We'll catch you next week. Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research, there joining us. I appreciate your time. Well, coming up, it is time for the morning trade. And we'll take a closer look at Tesla after shareholders approved that fresh new pay package for CEO Elon Musk. Morning Trade Live will be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, to SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start Start learning today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
We're back on Morning Trade Live. Let's focus on Tesla. Shares are lower this morning after shareholders approved a new pay package that could reach $1 trillion if Musk and Tesla get certain incentives and stretch goals. Shares have been volatile over the last 12 months, hitting an all-time high last December before dropping 50% over the next 4 months to April's low. Since that point, the stock is up more than 100% and is now moving closer to the all-time high level. So quite a roller coaster ride for these shareholders over the last 12 months. Tesla is the focus of the morning trade. Joining us now for a closer look is Schwab Network's my co-host Marley Caden for a look at this. I mean, as far as the performance of the stock today, it feels like maybe this was largely priced in, and I suppose everyone's looking now if they can actually meet and achieve what are just eye-watering, ambitious targets here. What do you make of all of it?
It certainly is. The pay package is the headline news, Sam, but there were a lot more headlines that came out of this shareholder meeting. So first, let's walk through the pay package, and some of those milestones that you mentioned have to be hit. Now, Elon Musk could become the first trillionaire in history because of the approval of this pay packages, but there are some very ambitious performance targets that he has to hit over the next decade. So the board of directors has made it so that Musk has to deliver 20 million Tesla EVs to the market in that decade. That's more than double since founding the company. He also has to deploy 1 million of his humanoid robots that he's promised that will transform work and home, which he calls his robot army. Currently, there are 0 of those. He also has to reach a $2 trillion valuation to get that first payout. Then he has to hit 9 more increases of $500 billion each to eventually hit a market cap of $7.5 trillion and then add another trillion to $8.5. That's the final goal, and sustain that level to max out this potentially $1 trillion pay package. Right now, Tesla's market cap is $1.43 trillion, and Musk is currently estimated to be worth $493 billion. But there were some other really important things that came out of this meeting, one of which I thought was pretty substantial, was Elon Musk saying that, quote, maybe we'll do something with Intel. He said, I'm super hardcore on chips right now, as you may be able to tell. I dream about chips literally. Now, one of the things I'm trying to figure out how we do is make enough chips. Then he went on to say that he has a lot of respect for Tesla partners, Taiwan Semi and Samsung, but maybe we'll have to do something with Intel. He said, quote, haven't signed any deal, but it's probably worth having discussions with Intel. He also then paved the way for SpaceX to potentially become a publicly traded company, saying he wants to figure out a way for Tesla shareholders to, quote unquote, participate in SpaceX space ambitions, saying, quote, maybe at some point SpaceX should become a public company despite all the downsides of being public. Now, those were 2 big headlines that stuck out to me. There were also some EV commentary here. Cybercab production expected to begin in April, saying that they're planning to do it with no pedals or a steering wheel, which could face major regulatory scrutiny there. Also goes against what the head of the board had previously said, that there would be a steering wheel. But Elon Musk says that there will not be. It doesn't have pedals or a steering wheel or side mirrors. It's optimized for the lowest cost per mile in autonomous mode. He also said that the manufacturing line could have a 10-second cycle time, meaning that he could produce 2 to 3 million Cybercabs in a year. In addition, also planning to unveil the Roadster 2 in April of 2026, then saying that production of that vehicle would begin 12 to 18 months from the date of the reveal. And then finally saying that he believes that they'll win approval in China for full self-driving by early 2026. They have a partial approval right now. He said they're hoping to have full approval by February or March. So a lot of really important headlines there. Obviously, this $1 trillion
pay package the main headline because of the size of that number, but a lot of really significant announcements out of the shareholder meeting.
I dream about chips as well, but they're the salt and vinegar variety, so a little bit different. But I suppose that explains the 1% move higher in Intel this morning. But as you say, so many moving parts and stuff to digest from this shareholder meeting. And yes, the China development is important as well because they have had to actually partner up with some of those local carriers, the Baidus of the world, in order to roll some of that out. So, certainly key stuff. Thank you so much for getting us across all those developments, Marley. I'll check in with you a little bit later. Let's trade it now with Dan Deming, Managing Partner at KKM Financial. How are you approaching your example trade for this name, Dan? Good morning.
Man, I had it.
Good morning,
I was
Sam.
running from the mic.
I think this is
at
creating
first.
an opportunity here, some of the selling pressure that we're seeing from a broad market perspective and moving Tesla off those near highs that we did see. And so I think there's an opportunity here to put on a wide range type of exposure to Tesla, define the risk, but have a big capture zone on both the lower end as far as the top end. So I'm looking at a trade example today in December. It's 42 days out till to expiration. Buying the 440, 490 call spread, and then selling the D 400, 360 put spread. You can do that for around $4.50 versus $4.30 on the stock. So it gives you a nice capture zone to the upside, and also allows you to get put into the stock at a better level should we see some weakness. But you also have some defined risk bands on this type of trade example. So even though they're pretty wide, but at least there is some defined risk metrics to this trade example.
And just as far as this stock is concerned, I mean, as we've been saying, I mean, some wild rides that these shareholders have been on, everywhere from 214 up to 500. So, no doubt that this has been well priced in as far as the expectations that this $1 trillion pay package would certainly be voted on and approved. But, where do you see the stock going from here as far as, some of these ambitious milestones and targets that they have to clear? I mean, what do you think is sort of going to be next as far as the catalyst is concerned for this one?
Well, I think it's getting pulled down by the momentum in the market as well. I mean, we're seeing some of the froth coming out of the market. This is what we call on the floor back in the day as a tummy tester type of market right now. We're seeing the NASDAQ down about 4.5% off the highs just a couple of weeks ago, and the Russell realizing even heavier selling pressure. So, we're seeing some of the froth coming out of the market. I think that's pulling Tesla down, but the momentum longer term still appears to be the upside here. That's why I'm focused on this trade example today to capture a move higher here over the next month and a half. As we see, I think the market will stabilize. There hasn't been too major technical damage as of yet. I think it's just some of the froth coming out of the market, but overall, you're still seeing equal
Apple
parts
is
of the market
like it's going to break out
strength today, even with the selling pressure. So the underlying fundamentals are also, I think, pretty solid when you look at this market. So I think Tesla's getting pulled down by the recent momentum, but longer term and even in the short term, if we see some stabilization, I do think Tesla will go back up in Tesla's recent highs.
Yeah, hard to decipher when most of the Mag 7 peers are actually lower today. I mean, Google 2.5%, Microsoft as well, Nvidia down almost 3.5%. So yeah, you raise an interesting point. Dan Deming, happy Friday. Have a great weekend. Thanks so much for joining us. Managing Partner KKM Financial. Coming up, we will take a closer look at the sectors on the move this morning and the latest trade data from overseas. There's moving foreign markets today. We'll be right back after this.
find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis, Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Bardas, coming to you live from the floor of the New York Stock Exchange. It's now time to look at the sectors that are moving markets. This morning I'm joined by Alex Coffey. Coffey, happy Friday to you, Alex. You can't really call it a sell-off despite the red arrows we're seeing across the major indexes when you've got about half of the sectors in the green. We certainly seem to be seeing a bit of a rotation into defensive, cyclical types of trades. Can you talk us through what you're seeing there beneath the surface?
Yeah, it's a really good point that you're making. When you look at the performance today, the areas of the market that are doing better, consumer staples, energy, materials, real estate, utilities, either interest rate sensitive or traditionally a little bit more defensive sectors like consumer staples and utilities. When you look at the components of the S&P 500 and the breakdown there on an advanced decline metric, what you'll see is there's actually more green on the screen than red, as over 50% of the names are higher, close to 58% of the names are higher. A little bit different if you look at the NASDAQ 100 where it's sub 40%. But this is an example, Sam, of where market cap matters and where that weakness is really, really matters, as the Magnificent Seven is dragging on the index down 1.8% as a group, and that's leading to this 0.8% decline for the S&P 500.
Yeah, the Mag 7 certainly seems to have been on a struggle streak this week with all these sort of AI valuation type of conversations creeping into the market, and also, of course, what we've heard as far as NVIDIA. I mean, you see that name continues to be lower this morning.
The Mag 7 is pulling back.
Can you speak to some of this performance that we're seeing in some of these big names?
On the bull side,
well, for example, Apple is now green on the day, and it's contributing positive 3 S&P points basically to the move.
They can go lower
NVIDIA
on the market.
Down 6.5
some of this other stuff that's
is contributing essentially what is 18
similar
points to the downside, which is about 1/3 the move that you're seeing today. So just that one stock is responsible for about 1/3 of the S&P's downward trajectory today, where every dollar for NVIDIA is almost $25 billion. So, we're talking about over $150 billion on just a run-of-the-mill day. It goes to show just how important, how big NVIDIA has gotten.
Oh, absolutely, and down quite substantially as far as NVIDIA is concerned for the week on some of those headlines we've been tracking around Blackwell in China. Alex Coffey, thank you so much for that and breaking down some of the key sectors and names in the market this morning. We are also watching the reaction across global equities, as I mentioned earlier, currency and commodities markets as well this morning after trade numbers out of the two world's major manufacturing powerhouses painted different pictures after the summer. Chinese exports surprisingly contracting in October, falling 1.1% to the lowest since February. The market had been expecting growth of about 3%. We've seen steady demand for most of the year, but that drop suggests the front-loading effect we've seen to get ahead of tariffs is perhaps starting to cool off just ahead of the holiday season. Chinese shipments here to the U.S. fell 25%, while exports to the rest of the world grew 3%, highlighting how other markets really aren't managing to make up for a pullback from America. While the U.S. is reducing tariffs on Chinese goods now by 10%, it's unclear how much of a material impact that's actually going to have. Now, Chinese imports, which are a key indicator of domestic demand, grew at their slowest pace in 5 months at 1%.
I don't know how much further this can go.
Inbound shipments of soybeans from South America hitting a record. Iron ore and crude imports also rose, but that was on lower prices. Germany, on the other hand, saw exports grow in September for the first time since June, thanks to an almost 12% rebound in trade with the U.S. Now, global shipments grew 1% demand there, as I just mentioned, although Germany did import more from China. Despite the rebound in September, though, German exports are still below the pre-liberation day levels.
These breaking out.
So that's a snapshot of what's happening globally. Coming up, it's time for Inside Out, and we'll take a closer look at Expedia, which is rallying after earnings. We'll bring you an example trade for that name when Morning Trade Live comes back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
We're back on Morning Trade Live. Expedia opening at a new all-time high this morning after the company beat on earnings and lifted full-year sales guidance. Gross bookings were up 12% year-over-year and revenue increased 9% in the quarter. Piper Sandler upgrading shares to neutral from underweight off the back of that. So let's just take a look at the board across the sector. So Expedia shares are 17% higher right now. And if you take a look at some of the other travel names, we're seeing a bit of a mixed picture, you could say. So bookings up 0.8%. Airbnb is lower off the back of its earnings report yesterday, which didn't look too bad, down 1.2%. TripAdvisor also tracking lower by 0.7%. So it's a mixed picture across the board off the back of what has largely been a fairly good season as far as some of the travel demand is concerned. So let's go inside out on Expedia and that name and the travel space. Joining us now is Francis
See if we get a bounce on a
economic
retest
strategist
right
from
here.
Oak Financial. Thanks so much for joining us, Francis. Happy Friday to you. What were your major
Small cap like they might be able to break out. I don't know about
I
the
just think
market.
that it's the business-to-business growth that was very interesting because that's not a sector of the economy that's really hurting as far as access to credit,
No.
liquidity, and
Market
all
might
of
bounce too.
those benefits. Whereas the lower 60%, the consumer that might be getting tired, if we just got the data out earlier this morning, is not where this growth is. So that tells me that as long as we have a lot of liquidity in the system and the global macro scenario tends to favor this, it's probably their increase in expectations for the fourth quarter to 6 to 8% are probably valid. And then the other thing that was surprising is they beat Airbnb and Booking.com on rooms, which I think was really interesting, and that was a surprise to investors as well.
Look at the VIX, though. The VIX looks bullish.
Yeah, it certainly paints a bit of a mixed and sort of confusing picture
So,
of where we're at.
the trend is definitely down. Like, they're pushing
it
this down.
in the broad scheme of things, particularly
This is the
because
trend.
it's very consistent with what we've heard across the travel space. I mean, the airlines, the cruise lines, even car booking websites like Avis, for instance. I do see
That's how it
that
looks
they
on the
talked
5
about
minute. This is the 1 minute.
the discounts. And
The
some of
bulls
the
are trying to
incentives
come
here.
in.
How much of that was driven by that?
Yeah, Yeah, so some of the other
Support and
booking
resistance
companies
right here.
where that people focus on luxury didn't do as well, and so there's some speculation that's chasing bulk orders and discounts and the business internal deals and stuff like that were pushing a lot of this growth, and that makes a lot of sense because businesses are still spending at this moment in time. As far as the consumer, I think I heard a statistic on Bloomberg this morning that 25% of America is a subprime borrower. They were talking about whether or not the Fed is going to lower rates, obviously in December with their lack of data, and would that really affect the subprime borrower? So that is going to end up there's some reckoning for that that part of the consumer and that part of discretionary spending, but it just remains to be seen how systemic that becomes. And so just looking at the technicals here is really interesting. Obviously, new all-time high today. Looking to see that it maintains, its October 6th high, which was 240, and that should become support. Looking at today's trading session, there's not a lot of volatility in this trade. There's a lot of certainty in this massive up move based on earnings, and so, this looks like a hold for now.
Okay, yeah, I mean, it's up at 40% or so year to date. Certainly the move we're seeing this morning is helping things out there. But even before that, a couple of days ago, it was sort of neck and neck with the S&P 500. So I'm just wondering, what's going to be sort of the next catalyst here, particularly as we are now entering quite a disruptive, sort of challenging environment for travel with the flight delays that we're hearing about with regards to some of the airports due to the government shutdown. Do you believe that that's going to have a material impact on some of the strength we've seen from these companies?
Yeah, it could. I guess today about 3% of the flights have been canceled. So even though that ends up being 700 flights, that's still, percentage-wise, it's very low. I'm knocking on wood. I haven't had delays and cancellations in my recent travel, but
this is bullish
this
as heck.
is only going to get worse if the government shutdown continues. I have no idea
I like
about the
Shurs
roadblocks in
too.
Washington. I'm not terribly optimistic that we're going to reopen the government. Maybe, hopefully before the end of the year. But again, I'm speculating like anyone else is. I just think Republicans and Democrats are too far apart right now. Eventually, the longer this goes on, it's going to affect travel. It's also going to remove liquidity from the system. And then to the extent that some of these furloughed employees are not receiving benefits or don't have access to benefits, that could actually ultimately put credit markets at risk. So this is an uncertain time. And anything you're buying right now during this time period should be watched a little bit more closely just because of these global macro risks. But as long as business travel stays high and, they're looking for discounts and internal deals, and Expedia is kind of a one-stop shop for all of that, I do think that this stock, was mispriced, is appropriately priced this morning, and I expect it to remain elevated.
Yeah, and as you point out, I mean, trading slightly lower as far as forward earnings are concerned to the rest of their industry peers here as well, which perhaps gives some justification to what you're saying. So thank you so much for that, Francis. Have a great weekend. We'll catch you later. Francis Stacey, economic strategist at Scarlet Oak Financial. Let's trade it now with Tom White, host of Fast Market. Happy Friday to you, Tom, and an example trade for us on Expedia there.
Yeah, maybe not as bullish as your guest was with this example trade. Stock's hitting all-time highs. It's up, 36, 37% so far this year on this massive pop and beat on earnings. So looking to take advantage of maybe some consolidation, maybe a slight pullback. There was short open interest of about 6% in the shares, so maybe that's causing a little bit of a pop here. So I looked at out in the November 21st monthly cycle. So these expire in just 2 weeks. And if you think this stock's going to consolidate, maybe pull back a little bit, this strategy takes advantage of it. But you're still risk defined, so you know exactly what your risk is going in on
a call
this trade.
vertical. Okay.
Do
your research. A call vertical.
260 strike call, and then buying the 270
Swaminton get into
strike
it.
call.
Okay.
So $10 wide neutral, the bearish call vertical. You're going to collect roughly, I got about a 270 credit. That's where it was trading earlier. The stock has continued to move higher. So it's trading closer to $4 right now. So you can collect a little bit more option premium, more profitability, and it lowers your risk. But if you collect that 270 credit, it takes your break even up to 262.70 to the upside. That's about 2% above the current share price on this one. So you've got a little bit of a cushion. This is a little bit more aggressive. Maybe you want to adjust your strikes.
The bulls are trying to come in.
But this takes advantage of maybe the move that we're seeing today with the expectations that, okay, it's at all-time highs. It's overbought on a technical level. or maybe you own the shares and this can hedge a portion of your position to the upside. But your break even on that, you got about 55% probability that that short 260 strike will be out of the money at expiration, which is what you want in this type of strategy. You want the stock to consolidate or fall. You still got a little bit of a cushion to that break even. Like I said, you can actually adjust those strikes. Now, if you collect a 380 credit or a 270 credit, the credit you receive is what you can make on that trade. You've got, between $600 and $740 worth of risk on a trade like this. So if the stock does continue to move to the upside, that's where you start to get hurt. You're still risk defined, as I mentioned. And these type of strategies, when you've got overbought conditions on a technical basis, maybe make sense. If you own stock, these type of strategies make sense also. But this is a neutral to bearish stance here in Expedia on
hold
this
up,
massive
hold on.
pop today.
Don't smear my reputation.
Yep, sitting up 18%.
Hey, Frost is
So a bit of a Friday cheer for Expedia off the back of those
No.
earnings. Thank you so much for that example.
Don't be smearing my
Tom White,
reputation.
as always, I'll catch you a little
Frost
bit
is
later
right
on.
here.
Let's just check in with where
I
the
keep
markets
telling y'all
stand
that.
right now, because
I'm streaming
we've
I'm
seen
streaming
a
the
little bit of
stocks.
a move
I
certainly
came
over
in
the
here
course of the
asking for
hour. See the
support.
VIX picking up right
Trying
now.
to tell
We're
you
about
guys about what I do.
seeing stocks pulling
You know
back
what I'm
this
saying?
morning, and actually, if
I
you
got a
take a look at the
YouTube
2-year
channel.
yield, the benchmark,
You know
we
what
have
I'm
started
saying?
the day off
Trying to
at
get y'all
about
to
411.
subscribe
We're
to
at
your boy.
408 right now, so a bit of a sort of risk off. We're
Ain't no
seeing a little bit
politics.
of a
We out here
rotation
getting to
trade,
the
as
money
we've been
right now.
mentioning, into some of the defensive
I'm listening
and
to
cyclical
Schwab.
names this morning, so not a lot of Friday cheer.
If y'all got any
in
extra
the markets
devices,
today
go
for
ahead
the
and follow
major
me on Twitch.
averages. Thanks for joining us
You know
here at
what I'm
Morning
saying?
Trade
That help me
Live. I'm Sam Vardas.
help
We've
y'all
got
even
Trading
further.
360 coming up next with
Especially when
Marley
these
Caden.
finances
Have a
real,
great
man. I
trading
got
day.
the elbow. Trying to get monetized
Whether
on
you're
this.
an experienced investor or
And
just
that
getting started,
we on
Charles
we on
Schwab
YouTube
offers
and
a
Twitch
webcast
right now.
that's right for you. The Platforms and Tools
You know what I'm talking
webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab.
Yeah.
You'll learn
I already know
tips
y'all
and
trying to
tricks
hoop,
to help
you know what I'm
navigate
saying?
Schwab.com,
I just, I'm at work.
Thinkorswim, and mobile-based
The market closed at 4. We gotta get this
Best
money
of all,
first.
you can
And then
ask
right after that, I'm ready to hoop.
questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and
Here,
start
I'll get
learning
my
today.
cousin in here.
Welcome to Schwab Network.
Oh, word.
Real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Well, they said I was politicking.
Inside the minds of pro traders.
My point is,
I told this
a higher rate
one
of change in
girl,
sales
there's gonna
based
be
on
a
their
bunch of
guidance,
girls
but
in
not
that.
the same rate of change
Because
on
my
ETF.
actual friends, family,
Live
won't nobody come to the chat, right? I said, girl, you guys chill out, because there's gonna be a bunch of girls who come in this motherfucker like that.
In real time, with speed, accuracy,
It's
and
crazy.
I think one of the most important things is you're making a play in a risk-defined
playing.
way here going into earnings.
So that would be a further downside area to watch.
smart insights, actionable data, veteran traders, and trusted
Yeah,
financial journalists.
they thought I was
Streaming
playing about
live
something,
and
boy.
on demand.
Schwab Network, streaming
Let me get a
24/7,
drink.
any screen, anywhere, free.
None of this stuff fake, boy. We get into it regardless. We can play video games all day.
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. the trading day, and welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have coming up in today's show. In our 360 Spotlight, we're taking a look at Workiva, a cloud platform that reported top and bottom line beats on its latest earnings report and raised its guidance for the full year. The chief strategy officer of the company will join us in just a bit. For today's disruptor, we've got Block as shares are under pressure following a miss on earnings, but the company did up guidance for the full year. Kevin Green will join us to break down the numbers and give us an example trade. Then on our 360 round, we're going to take a look at DraftKings, discuss its partnership with ESPN, and look at its quarterly report, which saw them cutting guidance for the full year. Before we get to all of that, though, let's check in with our markets, see how things are shaping up this morning. As we populate here, we are seeing a lot of red. The S&P down 1%, 6652.95. The Nasdaq trading more than 1.5% lower, 24,720.44. On the Dow, trading 0.5% lower at 46,689. And the Russell 2000 trading more than 1% lower, 2391.31. As we take a look at how some of the futures products are faring up today, also taking a look at the 10-year, down to 409 on the 10-year after spiking almost as high as 416. The dollar at 99.39, down 0.2. Gold up just slightly on the day at 39.98.10. Crude oil trading at 59.59 a barrel. That's up 0.25% so far this morning. And Bitcoin down just slightly, but still way off of the highs we saw at 101,020 right now. I do want to bring in Alex Coffey, co-host of Next Gen Investing, our senior equities contributor here on Schwab Network, to talk about one of the top stories today. That, of course, is the approval of Elon Musk's $1 trillion pay package for Tesla.
Yeah, the first of its kind, but it was also a landslide vote approved with over 75% support. And as you mentioned, could make Mr. Musk the first trillionaire. So we're no longer just talking billionaires, potentially trillionaires. But it is important also to note that Tesla's got to reach a series of several pretty aggressive milestones for this to be possible, typically tied to market cap weights and values, but also specific milestones from an operational standpoint. For example, one is a $2 trillion market cap and 20 million vehicles delivered. Another $3.5 trillion with 1 million robo-taxis in commercial operations. So various degrees going all the way down to the last one being an $8.5 trillion market cap. So when you start thinking about, okay, he's going to own a sizable portion of the company, kind of makes sense that it would potentially get you to that $1 trillion mark. So exciting stuff. Also, though, within this, a lot of bold promises from Mr. Musk, ramping up car production by 50% next year, accelerating the development of the Optimus humanoid robot, and aiming for Tesla technology to potentially expand bases onto the moon and Mars. So always a forward-thinking individual.
Yes, there's always a lot whenever Elon Musk speaks. A lot of headlines come out of that. One that really stuck out to me, though, was this commentary where he said, maybe we'll do something with Intel.
Yeah, and this is probably one of the bigger takeaways. This is new information. So at the same meeting, Mr. Musk revealed that Tesla may build a massive AI chip factory, potentially partnering with Intel for that to meet future demand for chips powering autonomous driving and robotics. He says that the current suppliers like TSMC and Samsung aren't enough for Tesla's ambitions, claiming that Tesla's next-gen AI chip will be more efficient and cheaper than NVIDIA's, with production potentially starting in 2026 and scaling up in 2027. So we might be talking about Tesla, the AI chip maker now as well, which is a whole new can of worms.
Well, Elon Musk has long been saying we are not a car company, so it appears that he's trying to prove true on that. Alex Coffey, co-host of Next Gen Investing, our senior equities contributor, thanks for being with us to break all of that down for us. I do want to welcome in our next guest, though. Joining us now, Patrick Mueller, the RFC and president at Bella Advisors. Patrick, great to have you back on the show. I'd love to just start with your thoughts on this week's action as we see the markets under pressure again this morning.
Yeah, I think we're just seeing a normal pullback where we just have Wall Street taking profits, taking some chips off of the table to start redistributing it here in the near future. But we've been overdue for a pullback, and I think it's to be expected. How far down it's going to go, I don't think we're going to see too much of a retracement here. So I think we'll start seeing a positive move forward here in the near future. But I think a little bit longer term, we're going to be in for 10 to 20% correction. I think somewhere within the next 6 months or so.
So Patrick, you're in line with that commentary that we got from Goldman earlier this week, saying that we are overdue for a pretty significant correction, as much as 20%.
Absolutely, we are so overblown, I think, right now. The pricing is overblown, and we're going to see a pullback at some point. What the trigger of that's going to be is going to be hard to tell. It could be some type of black swan event, some type of catalyst that's going to start driving things back down here. But we've just been so overdue for a market correction, and it's hard to believe, right? We're 16, 17 years from 2008, and since the markets went down 50% at that standpoint, and we did have a little bit of a pullback in 22. 22 wasn't great whatsoever, down 20%. But from where we're at now, I think it's just a normal move that we're going to see that haircut.
So how are you advising your investors right now in terms of how they're supposed to proceed as we still sit pretty near to all-time highs, even with this pullback we're seeing this week? Where's the best value? What's the play right now?
Great question, Marley. And when it comes to the folks that we typically work with, our clients are typically retired or maybe 5 years away from retiring. So we're always very cautious. So we always want to keep a certain amount of money that's safe and protected from market losses. But being in the market, it's good to diversify. Something that's been doing really good. Utilities, you see Berkshire Hathaway sitting on over $380 billion in cash right now. They're ready to pounce, right? I think they were a little early, but they're not going to get it wrong. But they're going to start throwing that cash out there when we start seeing the markets coming down. And so companies like shares of Berk B long term are going to be really good. Value companies, things that you can close your eyes and 5 years from now they're going to have done well. So those are things, because people say, Marley, when markets are down, phrases I can't stand, which is it's only a paper loss. But nobody ever tells you that it's only a paper gain. It's not a gain until you realize it either and take some of those chips off of the table. So I think this is a good time to be taking some of those profits and some of those chips off of the table and moving it over and diversifying.
And so you mentioned Berkshire Hathaway there, and I know you're a big fan of Buffett's investment style, traditionally sitting on 10 to 20% cash. Do you think that is a good move for the average investor, or is that more specific for institutions that have dry powder to deploy?
I think it's good whether it's institutions or individual investors. I think right now with markets being at an all-time high, when you see everybody doing the same thing, you're sitting next to somebody in Starbucks and they're starting to give you stock tips, right? Have you bought your NVIDIA yet? That's when you should start being cautious. And so I think it's good for people to be taking some chips off of the table and have that dry powder, have that extra cash to throw at something, so when we do have a downturn, take advantage of buying opportunities. But more importantly for our clients, they can't afford to take the big losses at this stage when they're retired. They need this money to live off of.
And Patrick, we always have this tech conversation. Is tech king? We've seen this pullback on some of these AI earnings recently. I guess, is tech still king? And are you still bullish on tech? What's your investment thesis here?
With AI and everything that's driven around it, you have to be bullish on tech. Long term, I mean, that's where we're seeing things move, and we're seeing. You saw the earnings that came out for a lot of these companies that were fantastic, and I think we see the biggest growth in earnings coming from that particular sector. So I think long term, like we're seeing a little bit of a pullback right now, but long term, I think we can see that moving forward. Hasn't been too great for a lot of companies right now, or from an employment standpoint, where you've got Amazon and Microsoft and big layoffs that are going on right now, mainly to do with technology and the AI rising and cutting back on the workforce. So that's something to pay attention to as well.
Yeah, certainly. And outside of tech, are there any other sectors that you're bullish on right now?
I really like utilities with all the AI and all the data centers that are popping up. Like, we're the Silicon Valley of the South here in Atlanta. We have a ton of tech companies here, and we've got these huge data centers popping up everywhere. And you've got companies that are up big time this year, and utilities. And utilities tends to be very stable. So I like that a lot. And I think, another thing is silver. That's been, people have been more bullish on gold than they have been on silver, but I think moving forward, I think that's a good place as well to be diversifying to.
And with the metals, we've seen this massive surge to the upside, a bit of a pullback of late, but I mean, gold, I'm looking right now, is back above the $4,000 level. And do you think that trade is getting crowded? I mean, I think last I checked, we're seeing gold miners up triple digits pretty much across the board, or is there still more room in that?
This company was just acquired by somebody.
I think there's still more room because there's so much uncertainty. Like the consumer sentiment report came out this morning.
Oh, yeah.
And it was a sleeper where people don't have a whole lot of confidence right now. So I think moving forward, as there's uncertainty, the tariffs, inflation, how much is this stuff going to be affected? I think people are going to keep putting their money into gold and precious metals as until we can see a clear picture of where the economy is going to be heading longer term.
And Patrick, I know we talk sometimes about the potential for a credit crisis here, and you mentioned inflation, so I do want to talk about it. A lot of consumers fighting it with debt and using their credit cards specifically. We are seeing some pretty powerful credit card numbers, at least in the last decade and a half or so. How big of a red flag do you consider that is for the broader economy?
I think it's huge, and I don't think people are talking about this.
I just bought a leap on
highs and credit card debt, and these interest rates are insane. 20+%. How in the world do you pay that stuff off? It's crazy. And what's crazy right now is you have people that are refinancing incredible mortgage rates of 2 and 3%. That sounds like a dream to be able to get right now, but you seriously have people that are refinancing out of their 2-3% mortgage rates, and they're moving into 6, 7, 8+% at refining into those higher interest rates to battle the credit card debt and to pay that debt down and to try to survive and combat inflation. And this bubble is going to pop here, and I would say within the next year or so, there's going to be a reckoning from that.
Patrick, always great to talk to you. Thank you for being with us today on Trading 360. That's Patrick Mueller from Bella Advisors. And we've got a lot more for you coming up in the show as well. Next, it's the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will walk us through the technicals, and Tim Bowen will take us through the trades for Micron, Palantir, and Motorsport Games. That's next on Trading 360 on Schwab Network.
I do like DoorDash Leap too, but I didn't do that one.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts, and here to take us through his picks today, Tim Bowen, Chief Technical Trainer for StocksToTrade.com. Great to see you both. Tim, as always, let's kick things off with a big picture thought on the market this week.
Yeah, well, obviously not what we want to see. The viewers know, you guys know, I'm very bullish AI, technology, all of this stuff from a lifelong background of having an internet company, building the internet. But, been a pretty shaky week. But I always like to give a little bit of perspective to a lot of people. I think when, you see these weeks like this, I mean, at the end of the day, these stocks can't go up every day, every week, every month. I think, especially from a technical standpoint, I mean, they have to pull back and consolidate to build bases for next levels higher. Now, I always want to be cautious about this. That doesn't mean, you ignore everything and close your eyes. I mean, that's where a lot of people got in trouble back during the dot-com boom, is when these stocks started to turn, they got bullheaded and were like, no, the new highs are coming. And then that trend was down for weeks, months, and basically a decade. So that being said, always have to respect price action. That's why I like the technicals that Rick breaks down. But I think at the end of the day, it's healthy. These stocks are up, hundreds, thousands, tens of thousands of percent. They gotta kind of cool off and rebuild that base for the next level.
All right, so that is a very interesting setup for your first pick here. You've got Micron as your first pick.
Yes.
They're trading near all-time highs, keep setting all-time highs. I feel every time I talk about them, they've hit another one. They are up 170% year to date. Walk us through this pick.
So the reason I like Micron, number one, a lot of exposure to DRAM. I'm sure a lot of the viewers have seen, the explosion of the dynamic RAM that goes into a lot of these, AI, the actual computers, the hardware of that. Micron, big exposure to that. And I think the biggest reason, this was kind of my number one idea this week is I like the fact that this stock is kind of disconnected from everybody else. I mean, you look at, I'm going to talk about Palantir in a minute. You look at NVIDIA, you look at all of these high flyers, all pulling back hard. Here we got Micron, sure it's a red day, but it's just down single-digit percent. So I like to see that when you've got that story accompanied with that kind of, hey, I'm not going to pull back with everybody else. I want to keep trending higher.
All right, Rick, so as we look at the rapid ascent that we've seen from Micron, and as Tim noted, some less significant pullbacks than some of the other big tech names that we're seeing, what are the technicals showing us?
Right, as Tim said, one of the reasons perhaps this one is pulled back less is Micron makes chips that are more based on memory and storage rather than processing. So a bit of more of a picks and shovels types of play here. But nevertheless, we are still within our channel here, our upward sloping channel between our two white trend lines here. For the most part, it's been pretty consistent, but we are on the verge of slipping lower here. So if we were to go too far below that 225 level, that could open the door to retesting our recent lows right about here near 218. That's about where things bottomed out recently. Beyond that, there was another gap that sticks out a bit near 193, but to the upside, the highs, 246.41 would be the mark to beat if things do start to recover on what's been a pretty rough week so far for many companies here. Our moving averages that we follow, not too terribly much help in this case because of the speed with which Micron has risen, but we can see our 21-day EMA here comes in just below 214. That could be one supportive area. When we look at RSI, this is a good example of why bearish divergence does not necessarily mean a price collapse is coming. You can see that we've had repeated forays above that overbought level, which is typically a sign of strength, even as the overall momentum is trended downward here. So mixed signals there on the part of this RSI momentum indicator. But for now, the thing to be looking out for would be if we started making new relative lows on the RSI and price starts to break lower as well. And then eventually, if we were to slip below that 50 midline. So finally, when we look at our other studies here, volume profile, not really, again, too much help in this case here because of the relatively short amount of time we spent trading at these levels. But the biggest node anywhere close to current prices, right around here near 193, which is our light green line there to the upside. Our highs came in pretty close to the +2 standard deviation channel, our orange line there. That comes in at about 240.
Okay, 240, and we're trading right now at 227.81, and like Tim mentioned, down about 4% today, but not a massive move to the downside. So let's move to your next one, Palantir, who has seen a pretty significant pullback this week despite strong earnings. Walk us through this pick.
So, this is that one of those stocks. I was actually on the big three back in August, the day after Citron Research, Andrew left, went short. And I don't really understand this with Palantir. I'm a huge fan, love their tech, love their CEO, Alex Karp. But this has been one of those stocks that just everyone loves to hate for some reason, going back to 20, 30, 40, 50, 100. And that day that Andrew went short, it was at, it dropped to about 150. I was on the big three. I was like, buy it. I think this thing is just going to squeeze the shorts. Now we have a very similar situation with Michael Burry this week. And listen, I'm not smarter than Michael Burry. I'm never going to ever say that. But I think this is another one of those trades that reminds me of the big short. And one of the lines was, I'm not wrong, I'm just early. And in my opinion, he's early on this one. I mean, Palantir is as real as it gets. The AI story is as real as it gets. And, I think a lot of small retail traders can kind of get twisted up in these ideas because they don't understand that, he can ride that out. I mean, I hate to keep quoting the movie, the book was even better. But he can ride out that trend up and still make money, where I think a lot of retail traders either panic sell or short into these pulls, and they just create that next leg higher. And in this instance with retail traders, the old quote is the market can remain irrational longer than you can stay solvent. And that I used to be almost 90% a short seller. I lived that many times. You can look at these stocks. Next stock's going to be an example of, if you don't respect the price action and you're early, you can be right a year later, but it doesn't help you right now.
All right, so Rick, let's take a look at the chart for Palantir, because we know they've seen a massive move to the upside, but of late you can see that, all those red candles moving down.
Yes, this is one of those where, perhaps the line of best fit doesn't tell the whole story here, because for the most part, price has stayed within the boundaries of our channel. The key caveat there being, for the most part, this is one of those things you don't want to really gloss over as a big surge to the upside like that. But I believe this area right around here near 150 is around where Tim was referring to here. We did some stabilization there and then made our next push back to the upside. But in this case, we found a familiar ceiling. It was our old highs right there near 187. We also had this low point after our gap up near about 170. So this floor, 170, around that general point, is the same area, once again, that Tim was referring to here. So we've been within this range for quite a while here, 187 to 170. But with a push to the upside, we topped out near 207.52, even breaking out of that channel boundary here. But now we find ourselves back near 170. So indeed a crucial test here for this stock. When we look at our other studies, we can see that we have moved below our two shorter-term moving averages, yellow 21-day and orange 63-day exponential moving averages here. So those could be potential resistance areas to consider going forward. RSI has also made a shift to the bearish side as well after breaking below the trend line and the 50 midline. Finally, when we look at our other studies here, volume profile and standard deviation channels, our blue teal line right here is our linear regression line, our line of best fit based on closes, our idea of some kind of fair value that comes in near 191. So that could be another area to watch to the upside. Volume nodes here at about 180 and here at about 150. So once again, the 170, 180 levels and that 150 level are the main points of interest.
And right now trading at that 170 level, but even with this pullback, we're seeing in the last 12 months, Palantir still up more than 200%. Now, for your last pick, Tim, I actually had to refresh the chart because I thought there was potentially a typo here, but Motorsport Games is up more than 70% this morning.
Yeah, and listen, I don't blame you, Marley, and Rick's going to hate this stock. He's going to hate it. I already know. I can feel it from thousands of miles away. But listen, when markets get shaky like this, it's, as a 20-year day trader, I know that, the money flows out of a lot of the quality names, like we've talked about, all these AI plays over the last few weeks, and goes much more speculative because people get out of the kind of longer-term holds, they, cash those profits out and go into speculative plays. And this is very, very speculative. Keep that in mind, anyone that's thinking about trading this. But this is that rare intersection in small caps of a company that's actually making money, okay? As a 20-year small cap trader, I mean, it's always, 99% of them are failing, they're bleeding out cash, they're doing stock dilutions and offerings to stay alive. But when you've got this stock that actually is making a little bit of money with that move last night. And then what I like about today is it's setting up for what we call a day 3 surge. So we see these stocks gap up huge on day 1, then kind of consolidate and go to sleep on day 2. It's also Friday, so a lot of the times these speculative companies follow up with Monday morning press releases. So I'm anxious to see how much Rick hates this one, but keep an eye on this into Monday, especially if it can push back to 4. I think that'll bring a new onset of buyers. And as always, a lot of people like to short these small caps. That could definitely be a squeeze point there as well.
All right, Rick, do you hate this one?
The only thing I hate is that it messed up my lines because it moves so much. That's the only thing I hate about it. And, there's all kinds of different ways to trade. I would never say that one strategy is right or wrong necessarily. This would be more of a momentum type play here. And we did have this big push to the upside. So the level that I had my eye on initially, 392 was the high point here. We have crossed below that right now. You could still see it stabilize around that level. That would be kind of the closest point of interest, or perhaps even 380 because that was our previous best close. So about 380 to 390 or so is the area that the bulls would want to remain above in terms of our closing prices here. To look at what we saw during the past year, though, some big pushes to the upside. This big surge here in April was a $2.5 million investment for increasing their VR capabilities. This is a company that makes basically racing video games, like car racing games, like more advanced simulations, not like Mario Kart, for example, but more realistic. So down here we can see 222 was a previous low point. That was another low there. That was where things stabilized before we had this earnings push to the upside here. So now we can see that many of our other indicators not terribly helpful in this case where we've had such an extreme gap to the upside. But I will point out RSI is now overbought, typically a sign of strength when a stock is making a trending move here. So be on the lookout for what happens with our moving averages as well. As they start to catch up to price, they could be supportive footholds during downturns here. Finally here, standard deviations help us measure how extreme the move is. So by this measure, we came quite close to 2 standard deviations away from our fair value line, our linear regression line. So that would be the upside boundary perhaps to consider. We don't really have a whole lot of near-term price activity to base our trading on. So around $5, $4.97 is where that indicator comes in. To the downside, our linear regression line could be supportive. I do feel like I would be remiss if I didn't at least show the longer-term chart for this name. It's had a significant decline. They lost their license to produce the NASCAR video games, which was a big blow to them. But it kind of doesn't matter, though. If you're doing it from a momentum perspective or any other viewpoint you have, it can still be a good trade. It all depends on where you get in, where you get out, how you play the trade, etc. I don't hate any trades at all.
All right, right now, this one up 72%, but only trading at 375 for some perspective there for Motorsport Games. Want to thank you both for being with us. Tim Bowen, thanks for always joining us on Fridays. And, of course, Rick Ducat, our lead market technician here on Schwab Network. Coming up next, we're going to spotlight Workiva, a cloud platform that just reported earnings and raised its guidance for the full year. We'll be joined by the Chief Strategy Officer next to discuss the company and more. Stay with us.
Man. SheldronFrost here. I got the VIX pulled up. This is looking wild. I'm nervous for everybody. Be careful. VIX going up. Market going down. I don't know. Careful.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the cloud platform Workiva. Joining us now is Mike Frost, the Chief Strategy Officer and Head of IR at Workiva. Mike, thank you so much for taking the time to be with us today. If you wouldn't mind starting by just telling our viewers a little bit about your company.
Sure. And first of all, thank you for having me. So Workiva is a cloud platform that operates in the areas of financial reporting, sustainability reporting, and governance, risk, and compliance. Workiva directly connects data, processes, and teams in one secure, audit-ready, intelligent platform that really helps organizations work with their data and delivers trust, transparency, and accountability across their regulatory reporting and risk and compliance processes.
And Mike, you're coming off of another strong quarter, 20+% revenue growth. Can you walk us through some of the highlights from your most recent earnings?
Sure. Yeah. No, we were very pleased with the quarter. We announced on Wednesday. In Q3, we increased our Q3 subscription revenue by 23% compared to Q3 of 2024. Our total revenue was up 21% year over year compared to Q3 of last year. We have a GAAP operating margin and a non-GAAP operating margin. The non-GAAP operating margin was 12.7%, which is up quite significantly from last year. We did it was a beat and raise quarter, raised our guidance for Q4, and again, very pleased with the overall top and bottom line performance as we focus on things.
And so with that growth that you're seeing, that 21% revenue growth, 23% jump in subscription revenue, what's driving that momentum right now, especially considering that we have a choppier macro background?
Yeah, so when you look at Workiva, we have a very broad platform of solutions, and as we talk about in our earnings calls, our demand is very broad-based. This goes across all of our different solutions, whether it be the number of solutions we have in financial reporting, governance, risk, compliance, sustainability, or some of our vertical-specific solutions that we have that support, for example, financial services, banks, insurance companies, and investment firms. And some of the call-outs we have in the quarter were significant strengths we saw in our multi-entity reporting product that is serving organizations that have to report to multiple tax jurisdictions. We saw good strength again in financial services. We saw a slight uptick in our capital markets business, and also had strong performance across our governance, risk, and compliance business.
So with some of those clients you mentioned in the financial space, how are some of the CFOs and finance leaders actually using your AI tools? Do they cut costs, improve accuracy, speed up reporting cycles? How are they used in real time?
Yeah, so I think there's a couple buying drivers that we're seeing behind this, and which drives the value that our customers receive from the platform. First, I would say it is, there's still a lot of move to the cloud. One of the things that we've seen is as organizations look to adopt AI, they need software that AI will be capable of working with. So there's a lot of legacy on-premise solutions out there that are not AI enabled, and this migration to the cloud and adoption of SaaS software is still continuing, and we believe that is one of the drivers. Specifically for our solutions, it's also taking away manual processes and leveraging best-in-class new technologies, such as those powered by AI in our platform, to really eliminate a lot of manual work and drive productivity in their organizations by leveraging technology.
And as we start to see this AI adoption accelerate, how are you balancing innovation, but also making sure that you're following proper governance and security? Because we hear a lot of concerns about the safety and security of the data, especially when your clients are dealing with very sensitive financial information and regulatory data.
Yeah, so I think it's a very measured approach with our audience. We sell to the office of the CFO, chief audit executive, a lot of teams that are very sensitive to the types of information that they are holding on behalf of their businesses. So security is first and foremost part of what we are focused on. We have embraced the LLMs from multiple different vendors. However, we will not share and do not share any of the data that our clients have to train the models of those LLMs. So first and foremost, the fact that it's contained and the AI is contained in our platform with that level of trust and our trust layer in our platform is very critical for our clients to adopt it. The second piece is, the outcomes that organizations are looking for the audiences we serve are very deterministic. And personally, as we utilize AI tools, there's a lot of things that are nice where you get kind of different answers at different times, and that doesn't work when you're thinking about financial close or financial reporting or regulatory reporting, right? So the no randomness, no random answers, and our clients leveraging their data that the LLMs are working on is also very valuable to them. And I think the third area that we've seen is just overall the ability to save on time and cost, right? By leveraging the LLMs to, for example, create drafts of policies or create drafts of controls for inspecting their earnings releases, for inspecting their Qs and Ks compared to other periods. Leveraging the tools to do that sort of work and save time and value has been great for our clients.
And you've called Workiva, I saw in the notes that you sent over, you said you're uniquely positioned at the intersection of AI, secure data, and financial transformation. Can you paint that picture for us? More specifically, where do you see Workiva in the broader financial tech ecosystem, say, 2 years from now?
Yeah, so we have, we've been around for 15 years and have been, embraced by a large number of organizations, including 90% of the Fortune 100 and 85% of the Fortune 1000. So we have a large and loyal client base, and we are critical parts of their workflow for financial reporting, sustainability reporting, and governance risk and compliance. So first part of that is, yes, we see ourselves sustaining as part of that.
Look, that's why I'm working on getting some,
our clients' workflows as part of that. Second, I would say is, we are really are focused on the data side of things and the AI side of things as organizations look to transform how they're managing their processes and workflow around these given areas. And we've seen solid adoption already for our AI solutions, and believe that clients will look to continue to adopt AI as we move forward.
Mike, thank you for taking the time to be with us today to tell us a bit about your company and walk through your earnings with us. That's Mike Frost, the Chief Strategy Officer and Head of IR at Workiva. And coming up next, we've got the Disruptors. Kevin Green will join us to take a look at Block, which was under some pressure after its earnings. He'll break down the numbers and give us an example trade next on Trading 360.
Bro, that shit fucked my stomach up, bro.
To the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Certain parts of the year, yeah. It's more, Louisville is like more of a somewhere you want to get away.
Welcome back to Trading 360. It's time now for the disruptors. Kevin Green, our senior markets correspondent, is here with today's company Block. It was a top and bottom line miss for earnings yesterday. Shares are lower in reaction, trading down close to 10% right now. KG, can you walk us through your take on the report?
Yeah, we are seeing the shares kind of getting hit after missing both on the top and bottom line here. And as you kind of talked about, this is actually a very volatile name to say the least, especially when it comes to earnings. And you can see that when it comes to the report itself. Revenue came in at $6.11 billion, up around 2.3% on a year-over-year basis, but did miss the street's expectations of around $6.31 billion. And adjusted earnings per share came in at 54 cents. Street was looking for 67 cents. And we are seeing gross profits for the most part. They are up on a year-over-year basis, but the concern that analysts have right now is that the gross profitability is actually lagging the volume growth, and the concern is that we will see potentially volume growth actually decline or decelerate here over the next couple of quarters because of the uncertainty when it comes to the economy as well as tariff impacts, and their CEO actually has mentioned that. And so the uncertainty when it comes to the macroeconomic environment over the next couple of quarters could actually impact the stock. Now, they did actually increase their gross profit outlook slightly here, up to $10.24 billion here. That was previously at $10.17 billion. But once again, concerns about the macroeconomic environment, to say the least. Jack Dorsey also talking about raising CapEx spend in order to invest into the ecosystem as a whole. And when you're looking at their Bitcoin operations here, that actually did fall down to $1.97 billion. This time last year, that revenue for Bitcoin was at $2.43 billion, and they did actually take a charge on that business as well, a charge of $59.6 million here. So once again, a mixed report at best. Outlook a little bit bleak when you're listening to the commentary here, and that's why investors are a little bit concerned about this company and why we are seeing the shares down almost 10% in today's session.
And KG, as far as, not just the street's response, but the analyst community response here, are they seeing any faith or long-term potential, or do we anticipate this? We've talked about how volatile Block is when you take a look at the chart. As far as their long-term potential versus short-term pain here, what's the outlook?
Well, I'm seeing a lot of analysts really kind of focusing on the near term. If you look at Truist, they are concerned about that bottom line miss as well as the popularity of the stock. Just not a lot of retail investors really focusing on this name, and that could actually hinder, obviously, aggregate growth when you're looking at market cap over the long term here. So that's from Truist. You also have Morgan Stanley just basically talking about the clarity and sustainability of profitability moving forward here, and that it's a little bit murky right now. We kind of talked about the increase in expenses in order to invest in the ecosystem. The fact that volume could be a little bit of a concern.
The VIX is like literally going
really
bonkers right now.
Block or Square, if you will, their operations. So I'm not seeing a lot of optimism from the analysts that I actually follow and cover here, and that's once again maybe a sign that a lot of these companies that have small business and mid-sized business exposure might be a little bit
I see bullish divergence
when
on
you're
the
talking
VIX.
about some of the
This
stock
is
price
really scary
valuations because of this uncertainty moving forward, especially when it comes to the tariff policy and how it's impacting not only consumers but also those small businesses that need to make purchases from overseas.
Yeah, I'm seeing similar things in the reports that I was going through. The only sort of bright spot I've noticed mentioned a few times is that Block has, a pretty good access to the younger generation of spenders, and so they have a demographic that some of the other companies don't have. They like those easier to use digital platforms, but we will see how that goes. So knowing that we're down 10%, it's a highly volatile stock. There are some short-term, near-term concerns here about Block. How would you look to trade this?
Yeah, so this is actually a combination trade. You could say that it is, for the most part right now, neutral to bearish, but you are looking for an opportunity for a longer-term stock hold for this strategy here. We're basically combining a put spread, a bearish put spread, and then selling a put below that level as well. So looking at buying the November monthly $64 put, selling the $60 put, and then selling the $55 put. Now, this is for a debit of $1.15, so $115. The max loss on this trade is if the stock does go to zero by the time of expiration, so $5,215, with a max profit potential of up to $285 here. This is a strategy to try to get some downside exposure, but if the stock does go below $55, you have the opportunity to actually purchase shares for a longer-term investment. If you're looking at the technicals, around $55 is a consolidation zone where buyers have stepped in the past. So trying to leverage some of that short put premium in order to bring down the cost of that debit spread on the put side in order to obviously capitalize for continued move to the downside up to a point. So we have 2 break-even points to the downside, $52.15. And if we actually do see a little bit of an upside move, the other break-even point is $62.85.
And trading just above that right now at 63.62, but down 10 1/3% for Block following their earnings report. Kevin Green, we appreciate you being with us to break all of that down for us and for that example trade. Coming up next, it's time for our 360 round. We'll be talking DraftKings. Shares have rebounded from its post-report decline, so we will break down those numbers for you and discuss its partnership with ESPN. That's next on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Man, these puts are just going crazy if y'all can put.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the 360 round. For that, let's bring in our panel to discuss DraftKings. Joining us, Chad Bainan, the Managing Director, Senior Gaming, Lodging and Theaters Analyst at Macquarie U.S. Equity Research, and Zach Waring, the VP Equity Analyst at CFRA. Zach, let's start with you. You have a buy rating on shares. What are your takeaways from the report?
Yeah, I think it was a little disappointing in terms of the quarterly results and the guidance revisions. But we do think that, shares have a lot of upside potential. A lot of investors are scared, of the prediction markets. They think, competition is going to really, hurt revenue growth. But we really think it's an opportunity for the company. We think, they're moving quickly to kind of take advantage, and it might open up some opportunities for the firm.
And Chad, you are also bullish and outperform rating on shares, $50 price target, almost 2x where we currently are trading. Can you walk us through some of your thoughts on the report as well?
Exactly, thanks. Look, I think numbers don't lie, right? So
Q3 was a little bit disappointing because of the customer-friendly outcomes, meaning some of the customers did really well on those September NFL games. And then obviously they guided down for Q4 because some of that has slipped into October. What we did like about the print were a few things. One, the handle growth in terms of number of wages that are going through their system are up over double digits in the NFL and NBA. Secondly, we think the live betting and in-play, which is a higher hold, basically a better product for companies like DraftKings, that has been increasing. And then thirdly, in terms of the strategy, so the strategy now will include ESPN, will include prediction markets. So we think the core business, while it wasn't a great Q3 and start to October, we think that should bode well for 2026. And clearly management is reacting, being opportunistic. Stock's down 40% since August highs. And that's kind of what we've seen across this digital betting space. So that's one of the reasons why we think the stock isn't reacting more poorly on the print.
And, Chad, I want to follow up there. With it being down 40% off of those highs that we saw on the summer, do you view this as a potential buying opportunity for investors, or is this potentially a red flag that maybe some momentum is stalling?
We do. We like it. Look, I think clearly there's been a disconnect in consumer with the luxury customer and kind of that lower end customer. With a company like DraftKings or the digital space, all of the cohorts are doing really well, and this is still a growth industry. There's still states on the map that have not legalized sports betting. Prediction markets, they will be offering this in markets that currently don't have sports betting. The multiple that we're looking at isn't expensive compared to other growth companies when we kind of broaden out our coverage to the software space. So I do think it's a good moment in time. I think the wages that are coming in, their market share, and the overall fact that viewership on whether it was the World Series, whether it's the first 8 weeks of the NFL or the start of NBA, that all bodes well for companies like DraftKings.
And Zach, coming back to you, the guidance story was sort of the punisher we saw when we saw the stock fall sharply after they reported. It's below expectations, but does this suggest to you that growth is just finally normalizing after years of hyper expansion?
Yeah, I think so. And I think, part of the story is that you've seen the slow, kind of the deceleration in states legalizing sportsbooks. So that's part of it. But we think that's a positive for shares. We think they'll become more profitable. Obviously, as you enter more states, and if more states were to legalize, it would hurt their profitability because of the marketing spend that they have when they go into these states. So we like a slow trickle of legalization. We think that's much better than, say 4 or 5 states in 1 year, because it would just hurt profitability so much. And we do think that the prediction markets provides, significant opportunity if they can, kind of react fast enough and get a product out that consumers can use within the first 6 or 7 months.
And Zach, staying with you here, this acquisition of Railbird Technologies gives them a toehold in this prediction space. How significant of a move is this strategically?
I think it's huge because it not only kind of fights off the competition, helps fight off the competition, but it also enables them to kind of gain access to some of these states that haven't legalized sports books and may not. You haven't seen, Texas, Florida, and California, the largest U.S. states, pass legislation yet. And so, it could potentially give them, entry into those markets. And we think it's a great move. We think valuation here is pretty cheap too. Shares are trading at under 3 times forward sales, which is kind of under, even some of the brick and mortar casino operators. So, we think, in terms of valuation, it's not too heavy. Obviously, the forward EBITDA multiple is a little high, but it should be because they're going to grow that number, much higher than their peers, their brick and mortar peers. So, overall, we really like the company here.
And Chad, last question coming to you. I want to talk about this exclusive partnership that they now have with ESPN. How transformative could this be for DraftKings in terms of its reach and customer acquisition?
It's a tricky question because Penn Entertainment had this deal with ESPN for about 2.5 years. It was expected to be a 10-year contract. and the goal was to get ESPN Bet to high single digits, if not double-digit market share. They stalled out around 3%. So yesterday, they canceled this deal. Penn did with ESPN. And now, minutes after that press release came out, DraftKings struck this deal. So I think DraftKings has been better in terms of top of funnel. They have been better with retention. Their product, kind of going back to the in-play, the live betting, just the overall menu of options. I think they'll have more success with ESPN. Jason Robbins talked about how his fantasy product was really, successful, kind of using some of the data points from ESPN. So I think it's an interesting way for DraftKings to increase their market share above where it is right now. They're obviously a top 2 leader in the space, and I think they'll do a better job than Penn was able to do during the last 2 years.
Well, we appreciate you both being with us to break down DraftKings earnings on the heels of that sharp decline we saw, but now trading up 1% higher. That's Chad Bainan from Macquarie and Zach Waring from CFRA. And I want to thank all of you for joining us today on Trading 360 as well. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. I'll be back with Sam Vadas from Market on Close at 3 p.m. Eastern, but stay with us because Fast Market with Diane King Hall is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
I'm Sam Vadas, live from the New York Stock Exchange.
That
When the
lead that I
market
had on the
moves,
market,
we're
I'm
on
getting
it.
ate up.
Getting
I'm about
the
to take a loss
reaction,
on
the
that.
strategy, and sentiment
Get
in
in the
real
put
time.
that money.
Stream Schwab Network at schwabnetwork.com.
I said that lead, the lead that I had on the market, the one I took yesterday, is getting liquidated because I woke up today, the market was down $3, and then the VIX is showing bullish divergence, going higher and higher and higher, just being crazy today. So I just don't know if I, well, hold on, they rejected right here, hold on. We might get a pop in the market. And I need them to break this this trend because the VIX is making the market go down, bro. Seriously. I'm finna take a loss on my shit. It's not good. I'm getting liquidated. I don't have no money. It's not good.
Welcome to Fast Market here on
I
Swap
can't be
Network
getting
of
liquidated.
Banking Hall. Coming up on noon Eastern at the New York Stock Exchange. And the Bears are clawing another slice out of Wall Street today, led by weakness in tech. Let me give you a check.
Look, financial advisor told me I should have had my puts ready a week ago.
The S&P 500 is under pressure. It is off by more
He
than
keep telling me that. I keep telling y'all
1.2%
text.
in terms of the weakness.
But ain't nobody
that
listening
is
to
being paced by
me.
information technology.
I told y'all to get y'all puts
Services,
ready.
and consumer discretionary. Those are the three weakest components of
your
the
ass
11
is silly,
sectors
boy.
in the S&P 500. So
But
similar
look, it's
to
about
the
to
weakness
rain
we've
over
been
here.
seeing all week.
My mama's
Dow
on the
right
phone
now
too.
off by more than 0.75%. NASDAQ 100 down about 2%.
I had to tell her
right
that
now
Tucky
as the
fucked
pain
up
trade
our
continues
our
in the tech
acorns.
sector.
We were supposed to get some damn money.
Small caps losing ground off
I
by
got my mama and my cousin to
1.5%.
invest on
Here's the
acorns,
roadmap for
and he
today's
done messed
show.
up the
We'll look
referral
at
system.
example option strategies for Tesla.
Come to find out, I don't think he had no money in his bank account. And he's working the whole time. I don't know what he be
from
doing.
Mike Folio will be along with new sentiment data on Instacart.
Yeah, he's gonna
and
tell me
Meta
that
Platforms is also
he
under
gonna tell
the
me that
microscope
acorns,
today. Now that we've got the roadmap,
you know, they
for
got a
today's
problem
trading
with
action,
something.
time
I
to bring
got
in my
money in my
co-host
bank
and
account.
trading veteran Tom White
Robin Hood
in
know
our
I got
Chicago
money in my
studio,
bank account,
and Kevin Hinks
but they couldn't
joining
take it.
live from the
Everybody
Seaboard
was
Tech
able to
Coverage
withdraw and
Firm
put money on
Exchange
acorns, but
and
him, bro.
beyond. All right, guys, let's talk big picture here. Now, today would normally be a jobs report day. We don't have that once again.
Bro, when
we
you
did
when
get
you
consumer
when you do the
sentiment. That's
referral,
at the lowest level in a few
all you gotta do
years.
is deposit
Tom, I'm
$5
curious
into
your
the
take, and I
account,
also want to give
and then when you
some
start their
context. I was
plan, they
talking
won't.
to
You know, you can
Jan
do $5
Hatzius,
for
this morning, the senior
the
economist from
bronze
Goldman.
plan.
And one of the
So
things he
total
pointed
is
out with the lack
$10.
of the jobs report is if we don't
So
get that
he
by
couldn't
a certain
put $10
time, we run the
on
risk
there.
of not getting at least one component of that jobs report.
That's what happened.
When you need to collect the survey data. So what's your take overall?
All it takes, bro, it was the referral system was referral two friends, my mom and my cousin. My mom did it. We all put our money in. All you had to do was put $10 in, and we was gonna split $425.
We all know that.
He couldn't even put his $10 up.
Negatively
and he told me that Acorns trying to cheat him and cheat us. I said, bro,
ever seen in this
what are you
number.
talking about?
I believe it was 41.
You think I'm gonna believe you over the business?
It was lower at 50 even. But yeah, I'll kind of throw that data point out. Now,
I said, bro, I could have asked somebody else and gave somebody else $10 to do it, and we all would have had the money. But he done wasted.
The Fed needs some data.
He done fucked it up.
That's going to be,
He talking about he had the money the whole time. That's
volatility levels
stand him.
start to elevate. You got the VIX above the.
I had two other
level.
people online
But
too
remember
before
this,
that.
you know,
Can't
even though
stand
the
him.
Nasdaq's
He
down
tried to jump in the way and
4.7%
say,
this week,
"Oh,
S&P
I'll
down
do it."
3%.
You said we'll split
You know what? On a
420,
valuation basis, when we were
425.
hitting all-time highs just over a week ago, everybody thought everything was good. Everything is going to go up higher, and November is typically a really good month for equities. Well, typically we see a lot of volatility
He
in
ruined
September and
everything.
October. We didn't see that at all. So it's coming
I
back
said he
to
ruined
bite us a
everything,
little
but
bit.
it's all good
But you
though.
got to start taking a look
We still
at
gonna get the money out the
context of
market.
where we are and where we've come from, and that parabolic move from those April lows. So maybe a little bit of profit taking is not a bad idea here at this point. We've got those headwinds, whether it's tariff talks, whether it's the government shutdown.
But the good thing about Acorns,
earnings are
Mama,
still
I had
good. And I think
I had put
I think the
like
concern
$5
lies with
in
the
my round
consumer
notes
right
in
now.
there,
I think that's going to
and I put
probably,
like $10 more
drive the
in
sentiment
there.
that we've seen.
And plus,
until we
Acorns
get
is
some
talking about if you
resolution to the
keep
government
investing in
shutdown,
yourself,
the
pretty
weight
much
of the
invested
market
in
might be
the
on
market
the
and
consumer,
everything.
which they've
In the
been
next
showing
5 or
signs of
10
pulling back a
years,
little
you
bit.
can make like
Consumer certainly showing some
racks.
signs,
Like
but not all
the
consumers.
chart was crazy.
And
On
just
5
to-
years, just putting
Kevin,
money in on
just to
yourself,
give you a little
saving
bit
money,
more context,
and
too, when we
it
think about the
going
jobs
up with the
report.
market
Jan
by
was
ourselves.
pointing out that
They
the
were saying
other
in
risk
5 years you can
now
have
coming
like
is the
100K
November
or
payroll report,
just
because
the chart was
reference
ridiculous.
week when they would collect the survey data for that includes the 12th. So we're coming
It won't
closer
take
and closer
5
to
years
the
as
12th.
much
That's
if
next
you
week, right?
put more in
So
there,
we
but
run the risk of maybe not getting a full
that's how it was.
jobs report, even if the government reopens for November. What's your thought on kind of the murkiness of all
So
of this?
I said, why not use Acorns? Why not use Cash App? Why not use PayPal? Invest in everything. Whatever the fuck.
Have over the U.S.
Whatever's
economy.
gonna take my money
the,
up.
The numbers are,
Damn it.
I guess, their estimates about $15
I'm trying to find whatever's taking my money up,
The U.S.
boy.
economy is losing. Why? Why are we doing that? Why is this?
And whoever ain't talking about that need to get up out the way for the people. Oh,
that this
I'll
is.
tell you.
I agree with
sick
Tom.
of it.
The the consumer sentiment data that has the sentiment going down, inflation going up,
That's why
when the market's at or near all-time highs. Just every time that comes out like
That's
that,
my cousin,
it lessens its importance in the market to me. I'm already not a big fan of sentiment data or soft data as it is, and all this does is reinforce why we don't really pay much attention to the consumer sentiment data. Now, I believe the market needs data. Now, we did get
she invested now, though. We don't talk her into it.
We did put out
after we made that video about her. Now she invested. That's the good thing
now.
about
They
it.
think it's 4.36% was the Chicago Fed's estimate, and we can get a lot of data that shows like challenger job cuts, something we don't normally pay that much attention to, but it jumped off the page at you yesterday when it came out 153,000.
I can't see
so we're getting information. We're just not getting the granular. Remember, the first Friday of every month
y'all communicate
for
in the chat
my 40-year career has been payrolls day. Payrolls in November. And remember, you got wages data in that. You get a lot of data out of that payrolls number. So, yeah, it's a shame that we're doing it. This is 2 now. And then, you're right, Diane, once we get to a certain level, you're not going to be able to trust the November number when it comes out in December.
This is trying to go higher.
And so the economic data, the good
really
news is
the
information we are getting, like our
really
earnings, are doing extremely well. But I grow more and more frustrated with this process that the financial markets, the most important part of our economy, have to rely on politicians to make these big decisions. It's just very frustrating, Diane.
Definitely. I'm sure a lot of people feeling that frustration, whether we're talking about here operating within the markets, from Main Street to Wall Street. Let's hone in on the tech sector, you guys, and NVIDIA. I mean, when I look across the Mag 7, I'm just seeing a lot of red. NVIDIA under some pressure today. Jensen Huang, the CEO, coming out with more comments about its relationship with China, saying just flat out there are no active plans to ship those prize Blackwell chips. Right? So it seems like this matters in terms of investor reaction. It just doesn't help the downbeat sentiment over the tech sector that we've seen all week. Shares of NVIDIA down more than 4% right now. Tom, what's your take?
Yeah, that pullback, we're down 15% from all-time highs that we saw just over a week ago. Getting into sell-off territory here in NVIDIA. And, you take that information that Jensen Huang, they're not going to be selling the Blackwell chip over in China. I think that was kind of on the table already. The information actually came out with a report that the White House is going to block the scaled-down AI chips, so not even the Blackwell chip, those H20s, that they're not going to allow them to sell to China either. So that's causing some headwinds. It seems like that euphoria that we got during the GTC conference just a couple weeks ago is gone from this stock. But the pressure that we've seen from tech in general, that's kind of weighing on NVIDIA also. It was at elevated levels, all-time highs prior to this week. So that's also putting some pressure on it, maybe some profit taking at this point. But you can't argue with the demand and the hyperscaler build out here as far as AI CapEx that all these companies are putting into the mix. And NVIDIA is still the leader in this space. They got 90% of the high-end AI chip sales.
They can change. Everything can change.
Back at all at this point as far as investments from those hyperscalers.
None of this means anything.
What's your take on NVIDIA?
I think that
options
Jensen
is a different
Huang
story.
has got a little more verbal this week, with some saying that China's going to win the AI race, and then walking back that statement. And then,
what's bringing the market down the most is the Max 7.
We cannot arm the Chinese government with these chips, and now they're coming out. The story is today that even the B38 chips, when clustered together, used in large clusters, can basically simulate the large language model that they need. So, Jensen Huang has to walk very carefully when he treads near national security. And that's just the way it is, right? He's got plenty of demand for his products here in the United States. I thought it was a little odd how verbal he was this week on some of the concerns. So I think all that does
Everybody
is
need to get into this one right here.
disrupt
This
the
is
trading.
bullish.
I think his sales are still going to be great. Stock's down, I've got the stock on my chart down 11% in a week. So pretty significant, pretty violent correction here in NVIDIA, and that's not normal for a stock like that. So remember, I think the 5 trillion level was a little over $200. It's back to 180 here, so we're nowhere near 5 trillion now. I think with their earnings coming up on the 19th, I think there'll be a lot of attention given to NVIDIA over the next 2 weeks.
Yeah, great point. And maybe for the believers, this will end up being a buy the dip opportunity. Let's talk about Constellation Energy. You got a mixed report card over there. It is weighing on the stock today. It is down more than 4% right now. This one's been a high flyer. This is, of course, because of the rising need for nuclear to power AI. Tom, what's your take on its quarterly results and how it's performing today?
Yeah, it's still up 50% so far this year, so it's had a great run. You mentioned the mixed earnings. EPS of 304 versus 312 expected. Q3 revenue came in at 6.57 billion versus 6.55 billion. So basically a meet on that side. They see fiscal year operating EPS 905 to 945 versus 942 expected. So coming in a little bit lighter than that. Remember, they're in talks right now to buy natural gas, Calpine. At this point, so that's still in the works at this point. But then they did come out and they said they see another hyperscale deal before the Q4 earnings call. So before the next earnings call, they expect another big deal to be announced in here. Stock's down about 4% on a day where the market's down over 1%. So maybe just a little bit of profit taking here. But still, the outlook for the amount of energy that's going to be needed to kind of, be there for this AI infrastructure build out is massive, right? And everybody keeps talking about it, that you don't realize how much energy that we're going to need. They're in the nuclear space already, and they're continuing to expand to their operations into natural gas and other sources of energy just due to the demand. So maybe the outlook's a little bit good, but pulling back here a little bit, maybe some profit taking.
Okay, Kev, your take on Constellation?
I think this stock has had an incredible run. It's backed off here in the last week or so, but they didn't announce any new deals. And that sounds very petty, but guess what? The market is very petty. And the fact that they didn't announce any shiny new deals, I think, disappointed. They tightened up some of the guidance. It looks like, if you do the math, pretty close to in line to what it was before. All they did was kind of tighten it up. So I think, all things considered, this is still a company on the forefront of energy, which AI, data centers, they're all going to need energy. Nuclear energy is the obvious long-term choice for clean energy that we have going forward. Even though it's a scary word, it's never been more safe. And I think nuclear energy stocks or stocks like this are still going to be extremely volatile, but the future is moving towards them for sure. But I think the market's reacting to a little bit of no new deals announced by them. The market doesn't like when they get expectations. They don't like to be disappointed.
Okay, all right. Thank you, Kevin. We got some breaking news crossing the wires as it relates to Meta. It's not shoring up shares right now. We still see shares under pressure, but Meta making this announcement of a $600 billion investment in American infrastructure and jobs. They talk about industry-leading AI data centers and committing billions through 2028 to support AI technology, infrastructure, and a workforce expansion. Tom, I know we're going to be talking about Meta later in this hour, but I want to get a quick thought from you on this. We see shares trying to recover a bit, but not by much.
Well, it's $7 off of its session lows, so it's having a good little pop here on this new $600 billion by 2028. Their investment to support AI technology and infrastructure. I mean, this is a big deal, but this is what companies are doing. They're coddling up to, the administration right now with promises of building out infrastructure. The deregulation that you're seeing in this space has helped a lot of these hyperscalers.
It ain't much that's going up today, y'all.
The stock has been under pressure since earnings due to the fact that they upped their guidance as far as AI infrastructure build out, CapEx build out, and the cost related to that, $70 to $72 billion this year. That was a little bit above what the street got from them last quarter. So this is a continuation of these big tech companies going to Washington saying, hey, this is what we're going to do over the next several years. Allow us to get, CEG's probably right in the mix here, right? They're part of the energy discussion with these hyperscalers. They need to build that out. So the deregulation is going to help them. But this is, just kind of, more pounding of the table from some of these big tech companies that, hey, they're here to invest. They're going to continue to grow, and they're going to help the U.S. become the leader in AI infrastructure build out. And I think that's what, that's why you're seeing the pop in the stock here.
Okay, all right. Thank you for your reaction to that. Kev, I want to pivot to the airlines and the flights that are being canceled across the country. You got more than 700 flights canceled amid the ongoing government shutdown. It's not all bleak as it relates to travel because there's still strong demand for Expedia's lines of business. Those shares have been rallying today off the back of its quarterly results. United, you got some pressure here. Delta, you got some pressure here. Those two, along with American, the bulk of these cancellations. What's your take, Kev, when you look across this space, including Expedia?
Yeah, the headlines that they made this morning, American Airlines canceling 220 flights. That's out of 6,200. So it's a hassle for the people involved, but I mean, the promises are for more. United Airlines, fewer than 200 flights, although over Saturday and Sunday, they could be down as much as 4%. Delta canceling 170 flights today. So this is a problem that's really not going away, and it's only going to keep getting worse. Listen, we all know what this market needs is the government shutdown to stop, to get the air traffic controllers. Because the good news, you see it in Expedia's earnings. There's demand for travel. People want to travel and are trying to travel. What's not happening is the ability and the waits. And these waits, if we get close to Thanksgiving, people aren't gonna. You know what's the news is? Rental cars are spiking. Why? People are gonna drive. People want to travel. Employed U.S. consumers want to travel, but they have to have the means, or they have to have the ability to travel. So, listen, all this market sell-off, all this is solved by one thing: open the government. Diane.
Oh, that's a great point, and I think a lot of people would rather have it open sooner rather than later. All right, great way to bookmark this conversation. We got bull versus bear coming up. The guys will get their example trades put together for Tesla after shareholders voted in favor of a new massive pay package. We'll be right back.
Thanks, Patrick.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
We gotta see if there's a breakout right here or rejection right here at this area. It's a key area.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. A green light from Tesla shareholders. Stakeholders overwhelmingly approved the first of its kind $1 trillion pay package for CEO Elon Musk. More than 75% of the votes were cast in favor of the massive pay package. The agreement clears the road for Musk to potentially become the first ever trillionaire, provided he meets certain milestones. Among those, re-energize its car business and increase market value. All right, let's put on the trading glasses now. Welcome back in our co-host Tom White and Kevin Hinks. It is bull versus bear time. Before we get to your example trades, we've got to talk about your take on this green light from shareholders for this massive compensation package. Kev, I'll start with you, and I'll start it with this. Rick Ducat says the first trillion is always the hardest. What's your take?
$1 trillion is just not what it used to be, Diane. You know that. But this pay package that
a lot
of people feel is unattainable.
Let's go.
But they thought the last pay package was unattainable. But think about this. The size of Tesla will have to be 2 apples. Apple started the day $3.99 trillion in terms of market share. It would have to be more than 2 apples. He'll have to sell 1 million robo-taxis and 1 million robots and 12 million vehicles. I mean, that was a big, shiny, sexy headline, right? But some of the other little things he talked about, remember, whenever we talk about Tesla, I always talk about what's in the pipeline of Tesla.
This is a very good time to buy
talking about something to do with doing something with Intel, talking about a SpaceX IPO and allowing Tesla shareholders to participate. He talked about a lot of little things that really sparked a lot of interest. Now, the stock is down with the rest of the market today, although it was weak yesterday as well. But think about where Tesla stock has to trade to be worth $8.5 trillion. Just think of the wealth it will create among investors that are. It's hard to wrap your mind around it, Diane. But all I can tell you is this, in a nutshell: bet against Elon Musk at your own peril.
Oh, that's a great point. Bet against Elon Musk at your own peril. Because look, that's fair. But at the same time, you really have to brace yourself if you're an investor as it comes to Tesla, because it can be very volatile, especially when the critics are loud around it at times. Tom, what's your take before we get to the example trades?
Reminds me of an old 80s song, Promises, Promises. That's what, Elon Musk does. He comes out with these bold statements. He's going to have 1 million robots. He's going to start mass production of the robotaxi, the Cybercab in April. It's going to take time. I think the key thing why it probably passed, a lot of retail investors were on board with this. They need Elon Musk to be leading this company. 12 tranches that are going to get paid out based on, production, right? And hitting goals. Well, we all know he sets a lot of goals. He rarely hits them lately. His first pay package, he hit those. But at the same time, this is a little bit different because it's different areas within his company, whether it's the robots, whether it's the cybercabs, whether it's productions of more EVs at this point. So he's got to meet those goals. So it's based on what he does for the company. So that's the good part of it and why shareholders probably voted for it. But at the same time, he set some lofty goals. I mean, it'd be amazing if he can meet them. But the stock's already run up. Maybe this was already built into the shares. That's why you're seeing the pullback here today, back down to its 50-day simple moving average. But you know what? It's probably a benefit for Elon Musk if he stays, and for shareholders if he stays in control of that company, and I think that's why they voted
liquidating Archer.
Okay, all right, let's dive into these example trades. Kev, why don't we start out with yours? What's the approach today?
I think it's so loud here, but I think you're talking to me, Diane. So I'll go with my trade. And here's the one question I would ask Elon Musk if I ever got to interview him. What do you see that makes you agree to that pay package? He must see something. That's what I'd want to hear from him. So along with that kind of a theory, the trade that I looked at for Tesla is a 2-week long call diagonal. Buying the November 28th 4:30 call, which is, it was at the money for a little while. Yeah, it's pretty much right at the money. And then selling the November 14th, next Friday, 460 call. The expected move out to next Friday, right at $31.60. So you've got your short strike right in line with where the stock is projected to be if it goes higher. It could also go lower or somewhere in the middle. But that helps us with our strike selection. So the 2-week 430, 460 call diagonal, the debit was about 1825. It's about 1840. Pretty close to right where it was, Diane and Tom. So Tom, this one collects data. It's risk defined, but as you know, it's a $30 call diagonal in line with the expected move. And these are some bigger numbers in Tesla, Tom.
Yeah, definitely. This is a bullish example trade here. We've got a few weeks until expiration on your long option. November 28th, weekly options.
I got
buying the 430 strike call, basically at the money, as Kevin mentioned. And then selling the near-term November 14th weekly options that expire in 7 days. The 460 call, bullish $30 wide call diagonal. Paying roughly $18.25 debit for it. There's your risk. $1,825 with the goal that this stock goes up near about 460. That's going to be your apex of profitability where you have that short strike in the near term on this. Anything above about 440 is going to be potential profitability on this. And because, as Kevin mentioned, you're paying a lot less than the width of this $30 wide bullish call diagonal, you're paying only $18.25, right? So anything above about 440 is going to be profitability on this trade. You do have some assignment risk on that short 460 strike over the next 7 days also. But this is a way to take advantage of, even though we had the event, the investor event's over, we still have event risk because the overall market implied volatility levels are elevated. So you still have a little bit of volatility skew on this, where you're selling about a 65% implied volatility on aggregate in the 460 call, buying about a 64%. So just a little bit of a vol difference there, but the expectations are that the stock rebounds, and then you have the ability or potential to roll that short option a couple times into expiration, or if it starts going up, it'll expand the price of this call diagonal. So it's definitely a bullish trade, and you definitely need to move higher over about $12 above the current share price to start to get into profitability on this one. Time decay in your favor on this bullish example. But Kevin, I did something where we could both potentially be profitable on these two example trades here, but I looked at an unbalanced call butterfly that I'm actually going to do for our credit. So going out to the November 21st weekly or monthly options that expire in 14 days, I'm going to buy one of the out of the money 450 strike calls. I'm going to sell two of the 455 strike calls, and then buy one of the 480 strike calls. So on this, as a package, three-legged unbalanced call butterfly, I'm going to collect a credit of roughly around $350, right? That's what I can make, $350 per spread that I do. Anything below 450, you're going to get to keep that credit that you collected. Now, you can see here for the risk profile, got a little kicker right at that short strike, which is right at the 455 level. Now, where's my break even on something like this? Well, I need the stock to remain below 463.50 to remain profitable on this particular trade. Now, your risk. What's your risk? Well, $1,650, but that's all the way above 480, the 480 level. That's where you run into potential problems on this type of trade. So while it's neutral to bearish, You get that kicker, Kevin, to the upside right at or near that 455 level. That's over $25 above the current share price, so you do have a big cushion to that break even of 463.50.
Yeah, when you say call butterfly, right, you think bullish, but this is actually a short delta spread because the 455, 480 call vertical is much bigger than the 450, 455. So you actually short deltas and would prefer the stock went down, all things considered. Yes, can you manage a small rally up to that 455 level? Yeah, that's where this would peak out, right? The call vertical would go to 5 and the short call vertical would go to 0, and you'd max out there. The risk is definitely on the upside, Tom, but you do get the benefit of that call vertical going to $5 before you start getting hurt on the short call vertical. So you don't lose as much money as you would think on a $25 call vertical, because you make about $8 or so, $8.50 on the credit plus the long call verticals. But yeah, this is one that collects theta, and all you want is for it to sit here, maybe go up a little or go down, Tom, and have everything go to 0.
Break even, about a 75% chance that break even is going to be out of the money at expiration, which is what you want on this type of neutral to bearish trade. There it is, Diane. Bull-bear debate continues here in Tesla.
Bear debate is on over that one. Coming up, cash tags. The team from Lifefolio will be along with new sentiment data on Instacart ahead of its earnings. They'll come on Monday. Stay right here on Schwab Network. Fast Market. We'll be back after this break.
You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I think the market is trying
I'm Sam Lattis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Are we going to get a rejection right here? I'm really pulling for the market to break out and try to
No
recover.
politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
If we can get where we were.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. Taking a look at Instacart, Maple Bear. For that, let's bring in our next guest. That is Megan Brantley, Vice President of Research at Lifefolio. Megan, throughout this week we've talked about DoorDash. We've looked at recently at Uber, which obviously includes Uber Eats as well. So now our eye is on Instacart, especially given they've got earnings coming up on Monday. Shares are higher today and really a sea of red. But it's been an underperformer year to date. What does your data tell you about how it stacks up against competitors?
Yeah, when we look at Instacart, stock, as you mentioned, is down about 14% year to date. Last quarter was actually a really nice report. I think the company beat on earnings and revenue. Stock initially jumped, but it's given back a lot of those gains. And when we look at where data stacks up comparatively in the delivery space at large, we've partially because it's now partnering with Uber Eats, but also because it really specializes in groceries. It really specializes in those big ticket items. But when we look at just the momentum at large, you can see Instacart, that demand has shifted lower by about 4% year over year. So a bit of a loss of momentum from last quarter, but some of this you could argue that maybe priced in with the stock pullback that we're seeing right now. And I will say that this is typically a bit of an off season whenever we look at where Instacart sits now. If you think about, right around the corner.
Man, XRP is ready to go. Look, every time it gets down here at this $2 level, somebody's buying it up. SheldronFrost is here, boy. I'm telling y'all, we on YouTube and Twitch now. SheldronFrost. You get me?
Strong, and we saw a little bit of uncertainty there. So I think that expectations, even though the bar appears low, they may be higher than we would typically expect. And so we are actually, heading into this with a bit of a neutral front just because of that mixed bag. But we are optimistic long term because we think Instacart has carved out a really nice space for itself in grocery with those larger ticket baskets versus peers like an Uber Eats, like a DoorDash.
Megan, it seems like, everything's getting a little bit bifurcated. DoorDash had a pretty good report, but they gave a little bit lighter guidance. Their costs went up because of the investments that they've made. But with Instacart, it just seems like the underperformance is probably, because partnerships that they have, those partnerships and Kroger and Amazon actually doing free delivery now for their Whole Foods brands and, their own in-house brands. The competition in this space is really dire at this point. They're supposed to grow revenue, they're supposed to grow EPS, but when you look at guidance moving forward and the consumer getting stretched a little bit, are you guys seeing the data that just kind of makes maybe these delivery companies, valuations a little bit rich here based on data?
I think that it's interesting because if you look at the chart where I showed you the kind of the year-over-year change in consumers kind of leveraging these tools, we see some nice momentum in DoorDash. We see nice momentum in Uber Eats. We still see consumers reaching to splurge there. But an interesting note, those basket sizes are getting smaller. I think Instacart even noted that on its last report that while orders were up, the actual size of those baskets were lower, partially because it lowered its bar for the Instacart members. I think now it will deliver up to a $10 order. So, that's something to certainly keep in mind because really where the profit is made, and Instacart kind of highlighted this, is when baskets exceed $75. And so when you have those bigger items that you're shopping for, and that's why we like to look on these big holidays for these big, grocery drivers. And, we did see a bit of a pop on Labor Day. We saw a bit of a pop on Halloween, but at large, the quarter just showed a little bit lacking momentum versus prior quarters. So it's going to be really interesting as we head into the future, what Instacart has to say about the health of the consumer, certainly. But I think from a sentiment perspective, which is another angle that we can kind of, give some insight into, Instacart also is higher versus peers. Consumers like Instacart. They like the shopping experience. Whenever, we look at our long-term gauge, we have an earnings score, but we also have kind of like a long-term heat score. That actually trends bullish, partially because of the experience that consumers feel like they receive whenever they shop with Instacart. And they seem to be reporting faster delivery times and things of that nature. So from a long-term perspective, the health of the consumer, the health of the Instacart consumer for us looks nice. But near term, as you mentioned, there certainly is some strain on the consumer, and so a bit of uncertainty heading into this report.
Megan, let me ask you this, and I'm curious to know if other consumers have a habit like I have. I go in and out with Instacart because I don't find it to be, something I need all the time. So I wonder if there are other consumers like me who are bumpy with it. And the reason I go in and out with it, it's because, like, usually I'll use it for, like, if I'm sick and I need to have something get to me, like medicine, whatever, and then I'm like, okay, I don't need it anymore. I just needed somebody to get something from the drugstore to me. How much of the consumer base, or how much insight do you have about, kind of, I guess, any bumpiness in the
level that barrier to entry to say, okay, yeah, if you're a member now, we'll deliver an even smaller basket size is certainly enticing some users to jump on, but could weigh near term on that profitability. So I think that, for us on a consumer sentiment perspective, Instacart looks really healthy, but on a demand perspective, we certainly recorded a pullback in the quarter. So guidance, I think, is going to be critical, which for Instacart, it's heading into perhaps the busiest season of its year. So certainly be interesting to watch over the next few weeks. But us, for this earnings event at least, we are sidelined. Our signal is neutral. If you look at that web demand chart with the stock chart, the two are converging nearly perfectly right now. So we don't have a clear edge, bullish or bearish on this one. But I will say long term, this is a name that if we do see a pullback, while we are watching competition from the likes of DoorDash, from Walmart, from Amazon, as Tom said, Instacart in our data at least still appears to be the big leader here in consumer sentiment, and that tends to be the longest term indicator of bullish success. So I would say that we're cautious near term, but long term, at least for right now, we are bullish because Instacart seems to be making its consumers very happy.
All right. Thank you, Megan. That's Megan Brantley, Vice President of Research at Likefolio. Appreciate the insight there. Now, for the trading perspective on all things Instacart, I'm going to yield the floor to you, Tom. Let's get Kevin back in here. Tom, I know you have a final thought on the data from Likefolio before you guys get to the example trade.
Yeah, and just like Megan mentioned, 25% of Instacart's gross orders now have partnerships with Amazon, DoorDash, and Uber. That's not going to be good maybe going into this report. I think it's going to be about guidance. I did mention they're supposed to grow EPS by 19% year over year. Revenue is supposed to be up about nearly 10% from year-ago level. So they're probably going to give good numbers. I think it's going to be based on guidance. But Kevin, I was looking at the chart in Instacart, Maple Bear, as it's called. It's bounced off the 35 level repeatedly over the last 10 months or so. That's been a big base for this stock. The option market pricing in about a plus or minus 83 cents. Either way, on a percentage basis, I guess it's something, or that's just for today. Next week, about $4.10. How do you want to look at this one from an example trade?
For our viewers, I want to start with two words: price discovery. The markets on this are wide. Tom, here's a stat that I don't think I've ever saw before. If you look on today's option stats, about 2/3 of the way down the page on the Thinkorswim platform, the percentage of puts that trade in between the bid-ask, well, I mean not in the bid-ask, 92%, Tom, trade in between the markets. I don't think I've ever seen something so incredible. So the bid-ask are wide, and you really got to use price discovery. So what does that mean? That means put a limit order in where you would want to buy it and don't move it. And leave it there, and if you don't get filled, then it's not meant to be. So, Tom, what I looked at is just a 1-week 32 put calendar in Cart or Maple Bear. And I looked at it, it's trading about 15 cents. It's looking mid-market, but it's all over the board. Now it's 10 cents. It was 60 cents a few minutes ago. The markets are incredibly wide. So, but this is, the expected move for next week is about, it was 390. Now it's a little higher. I think it's up to 410. Yeah, 408. So that takes you, maybe you want to do the 31 strike if you're bearish, or the 39 strike. This is the 32 as the stock was a little higher, Tom, but very low.
Boom, boom, boom,
net
folks.
debit on this trade, Tom. I don't know if you can get it on or not. The markets are not terribly liquid, so make sure you use price discovery.
Yeah, let's break this one down. Giving yourself downside exposure in case the stock falls, kind of like what DoorDash did, for inexpensive, right? So if you pay 15-cent debit for it, that's your risk. $15 per spread on this. But let's break it down. November 21st, monthly options that expire in 14 days. Buy the 32 strike put. Sell that same 32 put in the November 14th weekly options that expire in 7 days, where you're going to capture that earnings. Sell that same 32 put, 1 week wide 32 strike put calendar to the downside. You're paying 15-cent debit, $15 in risk. Now you got a range probably between about 29 and 35 for this to be profitable on this. And it looks great because the profitability looks like you can make over $100 per spread. But remember, the option that you're buying will fall also on the vol crush post-earnings on Monday morning. So keep that in mind. But this is just an inexpensive way, taking advantage of that vol dispersion that we talk about where you're buying a lower vol, selling a higher vol due to that event risk. But it gives you downside exposure, about that one standard deviation that the option market's pricing in. On Cart or Maple Bear, Diane, for some downside exposure, it needs to break through this 35 level that's been a big area of support over the last 10 months.
All right, thanks, guys. Coming up, the breakdown. We are taking a look at Meta Platforms. That stock is under more pressure today. We'll be right back.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check on where your markets are at this hour. We are still seeing pressure across the board. The S&P 500 down more than 1%, down lower by more than 0.5%. NASDAQ 100 bearing the brunt of the losses in today's session, down almost 1 3/4%, but off the lows of the session, if you will. Russell 2000 down by more than 1% at the moment. Meta continues to be plagued with headaches, sending the stock lower once again today. According to a Reuters report, the company relied on numbers showing that about 10% of its annual revenue would come from running ads for scams and banned goods.
Somewhere around here, the market gonna fill the gas go higher. Oh, never mind.
Suspicious revenue puts the spotlight on a lack of regulatory oversight. Time now for the breakdown. For that, let's welcome in Sam Bonnet for a deeper look at Meta. All right, so Meta also put out a press release today saying they're going to make a big investment. So you've got shifting sands around it. What's your take?
I mean, look, let's start with that because it is the breaking news just in the last hour, as you mentioned. And it looks like very much Meta seems to be trying to reassure investors out there about some of the concerns that they have. It's been coming out to say, according to a statement just in the last hour or so, that we're investing $600 billion in American infrastructure and jobs, including industry-leading AI data centers. Obviously, we've seen this big push as part of Meta's sort of super intelligence group, and also, it's a huge amount of capex that's been throwing out there to really delve and make its foray into this side of the equation. But it's interesting timing that has come out with such a statement like this, Diane, which I'm sure you mentioned at the top of the show, when we have very much seen shares under pressure. Now, suffice to say, we are seeing a lot of pressure across the board today for mega cap tech, and that has certainly been the case for most of the week as we start to see these AI valuation type of concerns creeping into the conversation, a bit of the froth coming off the top perhaps. Certainly a rotation into more of a defensive and cyclical type of trade today, but no doubt trying to reassure investors, as you mentioned, as we have seen very much this Reuters report shining a spotlight on some of the regulatory concerns here around fraudulent ads. Now, let's just keep in mind here as the sort of caveat that Meta does rake in a lot of its revenue from advertising. And so, when you come out with the headlines like this, no doubt people are paying attention. Let me just read you a couple of perhaps the cliff notes from this report, because it is a huge investigation that Reuters has broken here. They're projecting 10% or $16 billion of its 2024 revenue could have come from ads or scams of banned goods. Internally, these estimates are showing that its platforms have showed users 15 billion scam ads per day. So, I mean, you and I could have seen some of this. Who knows, Diane? But, for at least 3 years, they're claiming they failed to identify and stop an avalanche of ads
here. And they go on to say that fraud does get detected by Meta's internal systems, but only bands that the system thinks are at least 95% sure to be committing fraud. The others, which they're not too certain about, they actually tell them to pay a higher price to try to dissuade suspect advertisers from placing those ads. That's the interesting part. But I would just take a step back and say, of all the hyperscalers we've heard from so far, Diane, this got punished the most after earnings. And this is obviously because this is a margin story. There is this thinking out there that right now the Google, the Microsofts have better spending discipline, particularly because they have more advanced AI partnerships as well. Microsoft and Google have the cloud revenue, but Meta does pull a lot of and generate a lot of its revenue through those ads. So as I said, no doubt a concern when you're talking about that. But, as we see this pullback, a lot of analysts have actually been saying today, as we've seen the sort of tech wreck that people have been referring to, that maybe it's a healthy line of questioning that, investors are wanting to show proof of all this spend right now.
Yeah, absolutely. And even with the news about the spend and the investment in infrastructure and jobs, right now it seems like the market is taking it as a punishment cycle, not a winning cycle. We'll see if that, page flips again back to where this is actually seen as a good thing. So, all right, let's put a pin in that. Thank you, Sam. That's Sam Vadas with the breakdown on Meta Platforms.
Hopefully we can get a rejection rate.
All right, let's get Tom and Kevin back in here. So, Tom, you've got the example trade in Meta Platforms.
They really like it.
It's interesting that we have all these things swirling around it. One good, one not so good. What's your approach here?
Yeah, we got the bonus package today because we were going to talk Meta anyway before this news came out on the stock, and now it's about $6-7 above the session low for the stock, but it's still down nearly 24% so far from those recent all-time highs that we saw a couple months ago on the back of those earnings, which were good earnings, right? They saw solid growth across all their metrics, including the over 3.5 billion daily active users across their platforms, and then ad revenue continues to surge, right? Because they have the eyeballs, so that's where people are going to advertise. But the stock is now in bear market territory, below its 200-day moving average for the first time since early May, and it's oversold on a technical basis. That's kind of why I wanted to talk about this stock, because the RSI on it's down to 23. So I looked at a strategy in here where the current IV percentile is still below the 30% level. So we're in the bottom 1/3 of what implied volatility levels have been over the last 52 weeks. So I looked at a strategy that takes advantage of upside if you think the stock's going to rebound, because it is in bear market territory and oversold on a technical basis. So I went out 4 weeks. December 5th, weekly options that expire in 28 days. I'm going to buy the in-the-money 600 strike call and then sell against it the 650 strike call. So a bullish $50 wide call vertical. You're going to pay roughly, I've got $18.50 debit on it. That's where it was trading earlier. It's trading closer to $19 now because the stock has popped on the back of that news. But if you pay an $18.50 debit, $18.50 in risk per spread that can expand to $50 if we go back above the 650 level in this stock over the next 28 days. Break even, $618.50 to the upside. That's only about $11-12 above the current share price. Kevin, give me your thoughts here on the bullish call vertical. You're offsetting some of the costs on it, but it's still one of those trades you need to move to the upside. You need the stock to rebound a little bit.
Bullish play, giving yourself about 28 long deltas. So it's a bit chunky in terms of the premium, but you've got a chance if Meta were just to recover slightly. Remember, it was trading $7.50 when the earnings came out, Tom. If it gets to $6.50, you make 150% on your money if you buy it under $20. So pretty solid return if you're right, Tom, as you know.
Yeah, that break even we've got up there, $618.50, $619 if you pay $19. That's only about 2% above the current share price in there. The idea here is the 600 strike call slightly in the money. It's got the higher delta. This has got a big delta on it. but at the same time, with only a 2% move needed, giving yourself 28 days, and because you're buying this, it gives you that flexibility, Diane, where, hey, I don't have to wait 28 days to get out of this trade and hope it's trading 650. If I get that move to 625, 635 over the next couple weeks, I can close this early if the market's open also, so it gives you that flexibility.
Okay, so the flexibility where you don't have to wait almost a month to get out of it. Thank you. Good stuff, guys. That is going to do it for us today on Fast Market. Happy Friday, everyone. I'm Diane Kinghall alongside Kevin Hinks and Tom White. Download the Schwab Network app, send the App Store, tune in 24/7 on SchwabNetwork.com. Stick around. You got Next Gen Investing coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Horn alongside Alex Coffey, and as we do check in on markets, we've been in pretty much a sluggish session all day as we've seen weakness that has sort of lingered around actually at these current levels, with S&P is down just shy of 1%, and then we also do see the Dow down about 0.5%. The Nasdaq has picked up some of that pressure throughout today, down now 1.5%. The Russell down just shy of 1%, but what this does mark is a pretty monumental week because we're closing out a week lower, which I believe is the first time in quite some time we've been able to say that.
Yeah,
absent some massive intraday turnaround, which you could never say impossible, but maybe less and less likely with just 3 hours till the closing bell. But make sure we leave the door open just in case. That said, we were making it looks like a run at the lows just about 10 minutes ago, but a nice little intraday pop off those levels. We're about 20 points higher than where we were just about 10 minutes ago. So S&P's right now down about
give me 1 second.
of 1%. NASDAQ down 1.5%, the NASDAQ 100 that is. And a lot of this comes down to Magnificent 7 weakness. From what I can see, 7 of 7 are lower on the session, Jenny, even though Apple tried to stage a rally earlier, was unable to hold on to that green candle. The Mag 7 is down about 2% today. We've talked about that correlation basically being 1.98 over the last 3 months. Doesn't hurt that over 50% of the names are higher in the S&P 500, but it hurts bad that 7 of 7 Mag 7 are down.
It does, and it hurts bad that NVIDIA is, pacing for a pretty substantial repricing to the downside this week. NVIDIA has, of course, been a huge, really read and point of strength for the overall market, but now contracting about 9.7% on a week-to-date basis, and off of those highs that we made. Just at the really end of October, we're down now about 14% from those levels. So I think that speaks to the broader market weakness we've seen throughout the week. But we'll dive through all of the various NVIDIA headlines throughout this show today. Really, we kick things off. We'll dive into some of these earnings movers as well as recap some of the biggest headlines for NVIDIA of the week. We will also then dive into 2 of our Mag 7 names, which are looking less than magnificent as of late. Meta has plummeted about 17% from Wednesday's close last week. Microsoft is now down for 8 straight sessions. So we'll be diving into the technicals on those names, as well as really diving into Tesla, as we have seen shareholders approve, of course, that $1 trillion pay package for CEO Elon Musk, as well as really discussing some broader trends we're seeing in right now these more, I'd say, new age era of aviation, Archer Aviation tanking after they did see a share sale, as well as earnings that were a pretty mixed picture, showing the expense right now of growth.
Yeah, no George Tillis today, but in spirit, I'm sure, as I know we normally talk Joby, so I don't feel as bad. We're talking Archer.
I was thinking to say that it's a good day to pivot away from George because he's our Joby guy.
Yeah, he's chief Joby correspondent. Jokes aside,
I'm trying to adjust the. I was adjusting my screen.
Let's get some of our movers. There is some green on the screen here around earnings. We'll start with it.
Welcome to the stream, y'all. My bad, y'all. I was just adjusting my stream.
It's last month of trade today.
Yeah, she outside.
20% of last month, almost 18% today.
Yeah, talk about an optimistic note to start on. We're up almost 18% today in Expedia shares, as we did see earnings were pretty broadly ahead of expectations Thursday after the close. Also, very important is they did signal
you know what? When my friend from school, when he came over, my childhood friend, bruh, when I was living in the hood, tell me why he went for a run around the whole hood, like.
And they did say this reflects an
he showed the whole block that y'all can get fit, boy. Y'all can get to it.
Some of their strategic
I said, boy, you don't want to be running around the hood like that.
Delivered standout performance with 26% growth. Business to consumer bookings rose more modestly, but still.
He had a good old time running around.
And this strong performance was really in the Expedia brand, which drove about a 15% rise in hotel reservations, plus repurchasing $451 million in shares in the quarter, declaring a 40 cent per share dividend payable on December 11th. So I think that right now you see so much of the travel really demand and really strength led by such a niche and very I'd say a more so insulated consumer, that being the more high income consumer. We've heard it from cruise lines, we've heard it from airlines, we see it from hotels, but they gave a bit of a different tone, saying that across the board they're seeing this demand. They didn't really give specifics, but I think that was also really encouraging.
Yeah, I think it was seen as just better than the space. Like, you can be in a category that is showing weakness and be an outperformer, and sometimes that's more than enough. This is a stock that I think the performance around earnings gives credence to that. Over the last year and a half, so 6 quarters, it's been up 5 of 6 times, and 3 of those times have been over 10%, with 2 of them over 17%. So really nice report out of Expedia.
Give me 1 second.
Today where there wasn't a lot of
It's very true. There was not a lot of moves
not this big.
Yeah, at least not this big, and at least not, I would say also this
Can you hear me?
we could say safely. And now Airbnb, or excuse me, now we're seeing Block as our next name. I'm diving into all things Airbnb because that name is actually reversed its earlier strength. But Block today is one where we are seeing shares having fallen as much as 10% this morning after actually missing on its top and bottom lines. But now we've eased off of lows by a bit. Still a pretty brutal day. All things considered, revenue saw a 2% increase year over year. Missed estimates though. Adjusted earnings also did miss those forecasts. And Cash App again though did the heavy lifting really for the quarter. We saw gross profit jump 24% year over year. That was a pretty sharp acceleration from the 16% last quarter.
Let me know when you're ready.
I'm here. I was wondering, can you hear me?
And a 134% surge in borrow originations. Monthly transaction actives also
thanks, you can hear me. I'm having technical issues with her. Give me 1 second.
And primary banking users did hit around 8.3 million in September, with another 400,000 added in just October alone. So all that to be said, the most interesting part of this entire report, maybe just from like a personal
Hello, can you hear me?
is that they reported their G&A costs rose 14% on a GAAP basis.
Can you hear me? Hello?
Yes, now I can hear you.
I'm sorry about
Is your
that.
camera working, or did you not get it working today?
I'm using it for the stream. Do you want me to turn my camera on?
Can you hear me?
Yes.
1,300 through the end of last year. That totals out to be around $6,000 a head.
Yes, I can hear you very well.
I have tried to find details.
You may have to log out and log back in and see if that'll work for you.
Yeah, analysts weren't super fast.
I can hear you though. I can hear you.
Hold on 1 second. I gotta go get something. I'll be right back.
I can hear everything.
Not enough though, and some of it due to that one-time event we talked about. Let's talk Affirm. This stock's going in the right direction in terms of to the upside here. Impressive numbers out of a company that I think.
All right, so I'm seeing some bullish divergence on the 1 minute on the market. It almost looks like a trend reversal. Right here, y'all.
Deemed as a pretty much all-around beat by the street. They did raise their 2026 outlook for gross merchandise volume and operating margin, as they now expect GMV to reach more than $47 billion. That was up from the $46 billion expected. And they also did guide for adjusted operating margins that improved by about 1% from last year at 27.1%. And the street did applaud their strong profitability and that GMV growth, which again rose more than 42% from last year. And driving a lot of the enthusiasm was its 0% APR product, as well as its Affirm branded debit card, and expanding partnerships with these various payment service providers. The CEO did also say they have not seen a slowdown or degradation in consumer spending or consumer habits across the board. But again, I think that anytime you see a surge in Affirm, it's saying that you're basically making purchases that you cannot afford at that given time.
Well, maybe. I guess how I look at this is, hey, credit is good until it isn't. This is just, I think, objectively seen as lower quality credit. So if you do start to see the net charge-offs and things start to balloon at a company like Affirm, in this buy now, pay later sort of almost layaway 2.0 type of a space, perhaps that's indicative.
All right, now, can you hear a little bit better?
Yes, ma'am. I can hear you 100%. Can you hear me?
More of just my general take on like the consumer habits, but I mean to their point, they are continuing to be a very strong company, and from
let me know when you're ready.
I don't think she can hear me.
Today, this is a clear win for
It's my
Affirm.
mic.
It's not always been such a winner on the back.
Your mic is not working.
Volatility
This
several
is.
times over the last several quarters to the downside. Now, last name today.
All right, can you hear me now?
But we said the same thing last week, Alex. It might as well have been. I mean, we're up.
Yes, I can hear you. Can you hear me?
Yes, ma'am. I hear everything you're saying, but the weird thing is,
Oh, I didn't know you could hear me.
yeah, like I'm hearing what you're saying, but my mic is trying to multitask, and so I'm trying to switch it back and forth. I can hear you, but it's very important that you hear me, of course.
Yes, I can hear you. I was like, well, wait a minute. I was like, maybe you need to log out and log back in.
Which had previously been around China.
No, I'm fine.
He went on to say
Does all the links work to our
has very good
for our appointments?
Researchers. So he's
Yeah,
clarifying
everything
they're
was
not
working.
winning
I've
the
always
AI
been able to
search,
hear
but
you. Just
it
your,
does come
of
shortly
course,
after
your
the Trump
camera,
administration
of course,
reportedly
sometimes
decided
doesn't
to
work for you.
block
But yeah, I
NVIDIA's
always hear
sale
you.
of its latest
No, I'm saying
scaled
like
down AI chips to China,
the
which was in
same
response
links
to
work.
reporting that
Oh, no, no,
Amazon
no. Remember, I
surpassed the
went
US
from
in
doing
terms
the
of the
recurring
AI
one
race.
because some
But
people were
they
having
have been permitted
issues
to sell
getting
those
the reminder
H20 chips
emails.
in China.
So I don't
Fox
do
has repeatedly
recurring ones
noted the
anymore.
company
I
has no
literally do
interest in NVIDIA's
4 each
products,
week.
and that
So like
leaves them with
today or
little to
something,
no
or
share
latest
right
Monday,
now
I
in
would have
China's
the link
advanced
out
AI
for you
market. But
for
as we've
the
talked
next
about several
Friday.
times throughout the
I
last
never do the
several
recurring
months,
anymore because
they've
people
given
aren't
guidance
getting
that does
those
not include at
messages
all
like,
any
"Hey,
benefit or
you
impact from
have a session
China.
tomorrow
So I
at
feel
such and
like
such
any
time." It
easing
wasn't doing that.
relationship there would be a huge win for NVIDIA if they do then continue on their plans
Yeah,
to
so they're
sell
always
years
going to
more
be
advanced chips
different
in the
week to
nation.
week.
So a lot hangs
But it's going to be, of
on the
course, the same
geopolitical
time.
fray,
Though,
which
yeah.
has been the story for
Are
several
you cool
weeks
with
now.
that, or did you want the reoccurring one?
Through
Yes, ma'am.
And
I'm
you
just
could remember.
wondering if I'm supposed to be
Yeah.
getting my kids today, so I was wondering if we can like
$7 billion from its high.
have like I want to have our appointment, but I was just wondering if we can have like a bit of a shorter one.
Is Oracle in terms of
We
market
can have
cap.
a bit of a shorter one.
Oracle,
That's
the
fine.
total
When are you
value of
supposed to be
Oracle
leaving to
is
get the kids?
$670 billion.
They're actually
So
coming to me.
It's lost all of the value of
Okay, kids
Oracle
coming.
just since the highs.
Yeah, we can make it shorter.
And Oracle is in the top 20 for sure biggest companies on the planet.
That's a
And
positive.
see,
So
that
how are
goes to
you
show, and I
feeling
think
right
that's
now?
everyone's fear.
I'm feeling
yes,
good,
you've become
like
such a
always.
massive
All right.
$5 trillion at your feet
All
now,
right.
$4.5
Feeling
trillion, back down
good,
to
like
levels before
always.
we
That's
went
you.
OpenAI. This is all
Then I was going to ask you too.
weren't we just celebrating this company got a
Are you
$500
having any
billion,
like sad or depressed thoughts or behaviors, anything like that?
Nope. I'm feeling good as always. I'm where I need to be.
Okay.
Just since the highs, and
All right.
I know there's been some headlines, but not really.
Mentally,
it's ridiculous.
physically,
The risk of being so
financially,
massive,
Okay.
like, the harder
emotionally,
you work,
spiritually.
like, you do see that in real time in
All
the
right.
overall market. Again, no massive shift from the company. We haven't gotten like
Keep telling people that.
update. We haven't gotten an earnings
All
release.
right. All right. Nothing wrong with that.
Outside of course, GTC last week, which was actually a pretty big positive, of course. for
Now,
shares.
what
So
about your
Still higher than
your
where it was.
medication? Did you ever get a chance to look at it?
I would say it's
Because I
about
remember
back
you
to where
said
it
that there's
was.
medication that you sometimes take, or you don't always take, or you don't take the full amount of it. Did you get a chance to look at the medication bottle?
Every gas on the network.
I could get it for you.
There's always areas of opportunity.
Okay, yeah, because I want to write that down because basically by next month we have to like I gave you the adjustment disorder for anxiety and depressed mood. So basically next month I got to actually give you a diagnosis that'll stick with you a little bit longer than that. So that's why I was trying to figure out what medication you had because it could be we could go back to a previous diagnosis if there's documentation to be able to prove it.
Both expecting to close this week out lower.
Yes, ma'am.
Or it more than likely would be where we can just put you with anxiety, because pretty much your anxiety has been low, and that's because you changed the way you've done things, and that could be it too. So it just all depends. That's why I was trying to see about your medication. So then that'll help us with the whole diagnosing process.
All right, that sounds good.
And, all right, are you online right now? Is that what you're doing?
Yeah.
Okay, I should have known.
Yep. So I'm gonna send it to you in a message. I also got yeah, I'm gonna give you all that information.
Okay.
And I also spoke to the I forgot her name already.
Oh, is it Terica?
Yeah, like she sounds awesome.
Oh, really? Oh, really? When did you speak to Terica?
She
Was
called.
it this week?
She called yesterday.
Okay. All right. And she sounds awesome. I told you she was cool.
I'm excited. I'm trying to see what she's gonna do.
All right. Yeah, I'm trying to see too, because like I've never seen it where I know what the case manager side of things are, but like with the CSA, it seems like it kind of crosses over in the case management, but it's a little bit different. So that's why I'm wondering, like, when you do start meeting with her to see how it is, it may be that she's not the same thing as that other guy who came in your home and stuff like that. It could be somewhat different. And she don't have to always come in your home, is what they said. They said you can meet her somewhere else or something like that. It's always up to you. So have y'all scheduled your first appointment?
You talking about with the doctor?
To invest and trade on your own.
No, I'm talking. Have you scheduled an appointment with Terica yet to come to?
Oh no! Oh my God!
Insurance and
she's supposed to come right after this too.
Oh gosh, what time she's supposed to be coming?
I believe it's. I think it was 2:00 or 1:30. It was. I scheduled it.
1:30.
Yeah, I had scheduled it today after this, and because she wants me to sign some stuff, and then the kids thing came out of nowhere. I was calling, you know, my kid's mom today, and like I was trying to tell her, you know, we need to get this co-parenting together, you know, because she's just like mad over everything and wants to fight. And I told her, you know, that's getting in the way of me just trying to be a dad to my kids.
Okay.
You know, I came and, you know, what I got one nonverbal kid. You know, she's autistic. I got a son who's 4. You know, she's trying to just make me talk to the oldest child, and I'm just like, you know, it's cool. I miss and love her too. But some days she be tired, and you know, I can't really get a, you know, a hello to all my kids.
Right.
Long story short, so she be somewhere mad.
Some of these old areas of interest that
Miss Terica, she's gonna come and help out with a lot. She's sounding like, but I want to see in person when she comes what all that she's gonna do. But with my kid's mom, I told her, you know, I'm trying to get us to where we don't have to go back to court and don't have to do mediation, because if we can just master the co-parenting and where we can just work together and focus on the kids, we can just agree out of court and go on with our lives. Like, ain't nobody trying to talk to her like that. Unless it's just, you know, about the kids and just seeing what's up.
Right. Yeah, that's good. Okay. All right. So, are you still trying to move forward with the court system and everything with the attorney?
I'm trying to, before I force anything, I'm trying to get cooperation with the mom. Like, seriously, like, there's no reason to go to court or go, you know what I mean? Like, we were trying to do mediation, but there's no reason to go to court, you know, if we can just agree. That's what my lawyer is saying. That's a waste of time and money. So she, on her end, I was trying to talk to her about it this morning. She's somewhere like, I don't care, like, I don't, you know, take this to court. You barely seeing your kids anyway. And I'm just like, well, you have to understand, you know, things is different. I'm over here trying to hustle to get some money, and at the same time, I'm spending money on bills. I gotta pay for food now. You know what I mean? Like, it's already $100 to go get them.
Now we are once again in the thick of this more.
You know what I'm saying? Now I'm getting them, and I realize they're getting a little bit too big. Now I need clothes. Like, inflation's hitting me too. We in the government shutdown.
Yeah, that's true. You gotta think. I mean, that's legit stuff that's going on. Yeah, and then inflation with the cost of living, everything's going up at the same time. So yeah, I get what you're saying. Hopefully, she'll try to become easier to work with. And not see you more as a challenge, you know, see it as, you know what, this actually can benefit me because I can get a little bit of a break for myself, and, you know, I can go have my me time and stuff like that. Plus, she gets what? She'll get Friday night off, Saturday night off, and then do they go back on Sunday?
Well, I was trying to present to her that, you know, a whole yearly calendar to where we can have 50-50 schedule. And she's just rejecting everything and won't let me talk and communicate. And I'm just like, you know, girl, either you healed or you ain't. You know, get out the way so I can talk to my kids and be with my kids. Or, you know, she's just gonna lose all the benefits and everything that she's just, you know, she should be happy now, for real. The kids got the kids got a playground in their backyard. 2 kids have their own income. Not to mention that I helped them get their own income, but still.
All right, okay.
She's the payee of 2 kids with 2 incomes. Her whoever that she's with is her support system. She lived with them. She's a supervisor. She got a car. I don't understand why she's not happy. And, you know, all that around me and the kids is unnecessary. I don't want to be the one to be like, you know, I'm already working in content creating. I don't want to be the one that have to put up something to show the judge how stupid she's acting. You know, that's dumb. And I keep telling her that.
And so Microsoft has not been as fast of a repricing.
So that's how things been going. You know, that can trickle down and I can lose my place for the kids and everything. But I have my head up high. Everything's going to work out. You know, God is good, you know. We still gonna get this money. We holding, never folding. We diamond heads out here. Like
that we are within.
I swear, when I say positive, like
supportive zone,
I'm telling you, always positive.
Here near 488. Also
I hear, even though
so
you had like mom was or the children's mom was being a little bit difficult, I can still hear the positivity in your voice and how you're saying things.
She hates
and how,
it.
like, hopefully you were interacting. She doesn't like it.
Yeah, she'd be like, "Oh, he over positive," and I'm just like, "That's how you have to be it." Because if you're not over positive, that's how you gonna be depressed. First of all, like everything starts with your thoughts and your words and stuff.
And then that led to our collapse, which is where we find ourselves
I
now.
like that. Hopefully it'll rub off on her because, like, usually they say, like, with a smile, they say a smile is contagious. You smile long enough, and somebody eventually they'll start smiling or they'll change like their ways a little bit. So you never know. You keep being positive enough around her and keep showing like, hey, you about business, trying to take care of these kids, and she might be like, you know what? Okay, well, maybe I do need to change some things. This might actually be able to work out. Hopefully it does.
15, 514 level, that could be a point.
When did they have their? When did the kids have their fall break? Did it already happen or about to happen?
It already happened.
It did. When was it?
Last month.
As I said,
okay, so did you
would be a sign of further.
No, I got them one time out of that whole month, and I was trying to explain to her, you know, it just got kind of difficult for me. I ain't gonna lie, it just got kind of rough to where I was in a spot. And I'm trying to explain it to her. Yeah.
We have another slight volume node here.
I can't explain it to her because she want to out-talk me and be mad at stuff. Like, you ain't no good father, you this and that. You know, I got a whole bunch of stuff I'm working on. And then when it comes to the financials, like I said, like, it's rough out here. I'm trying. My money can only stretch so far as I'm trying to make money, too.
Right. That's true. That's facts.
So appreciate it too with DPAT for
Did it.
always bringing the technicals, of course, on this Friday.
But hopefully she'll become cooperative with you.
Yeah, different type of
Gotta make sure you.
This is
Oh, wait a minute. Do I need to pause?
this stock is
No, I'm here. I'm listening to you.
Okay, I heard you saying something. It sounded like you might have been talking on the other microphone or something. I was like, did he be quiet for a second?
Nope, never. He's more important than everything.
Okay, well, cool. All right, well, I'm glad to hear that there's positivity with that. And, you know, sometimes with positive progress, you still have to have a little bit of struggle with it. At least she still is having the kids come over. Did she just say, oh, I'm just going to drop them off? Or did you, like, finagle to get them to come over?
Well, you know, I just was trying to, you know, tell her, you know, give her an update. And she rejected the whole conversation. And she's like, why you calling so early? And this and that and the third, and hung up on me.
Yeah.
And then, you know, told me in the midst of, you know, I call it text fighting because that's what they really do. All that frustration turned into text. So in the midst of that, she said she was going to drop the kids off. Do I want them or not? And I'm never going to say no to the kids. And then she offered to bring food. So I'm waiting to hear a response if they're going to bring some milk and cereal. I told her, I said, bring some milk and cereal.
For instant reactions, earnings breakdowns, and hot takes that teach you.
Cereal, boy. She got to look at that shit and be like, what? I told her, bring some cereal.
Why you saying it like that?
Because she be like, I'll be like, what the kids eat? They ate some cereal. I'll be like, some cereal? What is that?
Bring your trades into focus on Thinkorswim Desktop. Robust charting and analysis tools.
What kind of cereals did they have? Like,
tailor the platforms to your unique needs with nearly endless.
But you know what? Now we're talking about
and track market trends.
There is. I know one of the case managers was telling me, like, she has a list where they're giving out like food and stuff like that to food banks and stuff like that. And I think they're doing Salvation Army and things like that. Hopefully, Terica can help you get hooked up with those resources too, so you can get the kiddos some Christmas stuff and everything.
Oh yeah. You talking about Salvation Army?
Yeah, well, yeah, and I'm thinking it's Salvation Army, but I know that they started it up with my case. The caseworker was telling me about the food, and I think if it isn't that just yet, then they're doing like a coat giveaway or something, or a jacket giveaway. Maybe Terica can help you with that too. So then basically you can have some coats and jackets and stuff, maybe even kept at your place, while they had some kept it with mom, so you don't have to like switch back and forth and be like, oh, this is what I paid for it. And you can just at least have those things with you, you know. So I don't know, like, so hopefully she'll give you some of those resources, like how the case manager does. That's why I said, like, they cross over. It's like when what they do is kind of like hand in hand, it's kind of similar. So that's why I want to know too, like when you do meet with her, like what actually she's going to be working on with you. Because I mean, pretty much you have your skill set down with a lot of things. It's just you could use some help with some resources. And it did say they can be like a mentor and it can also help you with resources. So hopefully that's where that case management piece comes into play for you.
Our active trading webcasts are designed.
But make sure y'all don't do it on the day that we have therapy sessions, because now she's dipping into my time possibly if she shows up at 1:30.
Best of all,
yes, ma'am. No, it was just because I had to sign some stuff.
It's interactive learning at its finest.
I get it. And so she must have to bring her computer, I'm thinking, and couldn't send it through the system. Probably like a treatment plan is what I'm thinking. Like how we had to do it and we messed up the first time and then I came back and we did it again. It could be one of those numbers too. Okay, well, all right, well, you already told me you haven't had any depression or any sad thoughts, so that's a good thing, and you're staying positive. How is your eating habits for you?
Just pretty much the same. I get up. I have a couple cans of vegetables.
Okay.
Just pretty much the same stuff. Try to eat healthy as much as possible.
They were all for it. So joining us now is Marley Caden.
Today I had pancakes and eggs though.
What? I can't believe that. I can't. What? What made you have pancakes and eggs? Because we normally don't eat heavy like that.
Yes, there's a lot to cover. Like you said, a lot of
Today's a good day. Like I was just feeling good. I was like, let me get right. I'm up early. I tried to call baby mama, and but that didn't work out. But I'm still happy though. I keep telling people you gotta be like Waldo. Let me use the restroom. Excuse me.
Before the vote about whether or not it was appropriate, anyone deserved such unprecedented pay, and there was a lot of debate and a lot of naysayers coming out and saying they would vote against. But an overwhelming passage of this, there are some very significant milestones that have to be hit for the pay package to actually be worth that full $1 trillion. Some of them are that they have to increase the value of the company nearly 6 times its current levels, deliver 20 million Tesla EVs to market over the next 10 years. Now, they've got much stiffer competition, and that's more than double the number that they've delivered since the founding of the company. Also having to deploy 1 million human-like robots. That's what Elon Musk is often referring to as his robot army. Right now, there are 0 of those. So those 2 of the milestones. Then we have these stages in terms of the valuation of the company. The first stage is to hit $2 trillion. That's not that far off. They're at 1.43 right now. That's the first payout level. Then they have to go up by $500 billion each of the next stages 2 through 10. Then when we hit stage 11, that's the second to last increase. That's
You're okay. I thought you said you had to go to the restroom or something. That's what I was hoping you said.
$8.5 trillion and sustain that level. At that point, he can max out the pay package.
Yeah, my eating habits has been good. I try to stay.
I think you're
I try to stay away from the meat and sugar so much. Salty stuff. I know, like my soups that I make have a lot of salt in them mostly, and my smoothies that I make have a lot of sugar in them. But I just try to replace it with water and stuff. I done picked up working out again.
Oh, you have?
Yeah, I move my iron around.
Market capitalization, because that you can
go for walks every day, runs every day.
I guess more
Right after my stream, I usually go for a walk or a run, get some sun.
Things like that, where it's like, if the company is doing that, one would assume they're generating
picked it
quite a
back
bit of
up.
revenue too.
Yeah, certainly. I mean, and
That's
I think
good.
that's the goal.
All right.
Obviously,
What about
it
I know
would
you've
be
been
a
doing your walks
symbiotic
and your runs
relationship
daily,
in terms of if
but
he
what
gets
about
paid out, because the company will be
Fly
doing very
Matrix?
well.
Have
and
you been doing
shareholders
any
will, in fact, be very
basketball?
pleased. But there was
Nope, but
other
yesterday
headlines,
was a good day for it.
two that really
It's
stuck
just
out to
that
me. He made a
I
comment that
haven't.
he's not made before about the potential for SpaceX.
I want to go. I might.
Said,
While the kids
maybe
are here,
at some point SpaceX should become a public company.
I might do
despite
something.
all the downsides of being
All
public,
right.
because he wants
But
to find a way for
it just depends how the
shareholders to
weather is. Like I don't want to.
in
I know.
SpaceX
I
space
get it. Because, like, have you
ambition.
noticed,
That
like,
one really
sometimes,
stuck
like,
out
yesterday I
to me
went
as
outside and
well
took the
there, but
garbage
the
out.
other
I'm
one,
like,
Alex,
shoot,
you talked
this
about.
is that weather,
He's
like, I
saying
could take my
maybe
boys
we'll
to
do
the park,
something
we could
with
hoop or
Intel.
something.
And
Then
we know how
today, I
important
went
this chip
outside, and then I've been in my
conversation
house and stuff like
Elon
that,
Musk,
too.
I'm gonna
I'm
quote him
freezing.
again.
I'm
super
like,
hardcore
and
on
it's
chips
64
right now, as
degrees.
you
I'm
may
like,
be
that
able
is
to tell.
crazy. I'm
I
like,
dream about chips,
how
literally.
you
Now
know,
one of
just
the
a
things
little
I'm trying
bit
to
of,
figure
I
out
guess,
is how
cloud
do you make
cover
enough
can,
chips?
like, change
Then he
how
mentioned
the
the respect
temperature
that he
is.
has for their current
So
partners, Taiwan,
definitely
Sony,
be
and
mindful
Samsung,
that if
and
you
then
do
followed
go
up
take
with
them to the
maybe
park,
we'll
you
have
may
this
have to,
deal with
like,
Intel.
you know,
Haven't
put
signed
something over
any
their
deal, but
ears
it's
if it's a
probably
little
worth
nippy
having
out or something like that, so
discussions
they don't catch
with
cold.
Intel. And
Yeah,
that is a
like
massive
Because
I
headline
love
that stuff
taking
goes
them to the
around.
park. That's our new thing now.
forwarding this
Because
conversation,
when
saying
they get a chance
it's
to
not
run
a car
out
company
there and
anymore.
be like,
Stop calling
they,
it a car
they
company. That's not
that's
our
when they get
future.
to
And if
be
this comes
kids
to
and
fruition,
play and
that will certainly
they
be
get away
a
from all the
positive
technology and stuff.
toward what he's been saying for years.
So I try to
So
do
I'm
that,
going
like
back
get
to
them
the pay
outside,
package
and
here because $1
it's funny
trillion
to see how they
is
interact.
so tied
Because
to
my nonverbal is
optics
trying
and
to pick on
robotics
everybody.
already, things that
Like she,
don't exist yet. And
she's
that
over
is
there
what,
pulling
and I'm not
hair
going to
and
argue
hitting
Elon
people and
Musk's
running and
motives.
stuff to
I've
get
been
people to
a
chase
loyal
her, and
follower of all the
like it's so much fun just
narrative
watching
and
it. I'm like,
all
what the
the
heck?
things he's had to say on AI. But
So do
I'm
you
not
ever
betting
try
on
to,
Musk.
like, chase them or
Consider that
anything
the average
yourself?
compensation for a
Well, they try to
CEO of
outrun
S&P
me,
500
but
company
you know,
$20
I tell the
million.
oldest,
So
you know, you
back
gotta be
when we
faster
saw
than
that
all of them.
2018 pay
And
award
then
for
eventually you gotta be
Musk
faster than
at
me. You
56 billion. So now
can't let me beat you.
$1 trillion, it's like,
I'm faster than
how
all
are
of
we
them.
getting
And
these
she try to
figures?
let
The argument
my
is
oldest,
easy
she try to be
of
lazy, and
supporters
I'm
of the
just
company,
like,
but there
you
is
let
a
you letting
massive
your
disconnect,
younger
it
sister
seems
be
like,
faster
with
than
what
you. You supposed to be
every
the
other
fastest.
CEO currently gets paid.
I would say though,
I can see you
just to
saying
kind of
that too.
play the other side, it's not like
That
he's
is
getting a cash payout
crazy.
for that.
So I'm like, hurry
less
up.
than 30 companies are worth $1 trillion.
Hurry up and get
anyway.
her.
It's like 10 or less than 10.
So I make her
What about the
run, I make
Tesla
her
is one of the
exercise.
biggest
Like it's
companies on
really
the
just a lot of
planet.
fun though.
And so if he's gonna
I
own,
put her on the
potentially
basketball
like
court
almost
with me,
20%
you
of
know.
the company, and it's worth $8.5 trillion.
It's just a lot of
like,
fun.
it's just paper wealth. Like I would
Yeah,
guess,
you never
I
know.
don't
They
this
might
for
pick
sure,
up something.
many
One of
these
them
sort
might end up being a
founder
track
athletes,
runner
though
or
he's
cross
not found,
country
he's been
runner
there for the
because of
majority of the
distance. If they
building
like really
of
running
Tesla.
around like
They get
that,
like $1
then the other one
salary.
could be a
So
bat, or any of them could be
his
basketball players. So
net
that's good that
worth,
you're
his
getting out there and you're
pay is
exposing
all
them to
just
different
equity.
things, and they can
That's
figure
also
out
a
as they
good
go
point,
along,
but
like,
also it does
this might be
bank on
something
the
fun
fact
I
that
can do
Tesla
when I'm
will
in
reach,
school.
I mean, like, an $8 trillion.
You know?
Yeah,
So
the nice
yeah,
thing, though,
like
this is a good
you
point
know,
of
I
yours,
have
which
a
is, hey,
piano
this is
here
all
for
built off
them.
hype. This is sort of what I
It
was
just be a
allude to around the moral
it's
hazard,
a bunch of stuff
guys,
like that.
if
They
it's
have like
all
a
this,
million
hey,
toys.
we promise we're gonna do something,
They
and
have
then
way
we
more
buy
than what
one
I
of our
had.
stock
Like
and it goes up, that
she
doesn't
would
really
think
incentivize
if
me
you
to
let the
act
mom tell it,
properly.
she'll be like,
But
well,
if
the
I have to
kids,
get to
you
2.5
wouldn't spend the
trillion,
money on the
and there
kids,
has
and
to be 10
I'm just
million
like the
active
kids
full
have more
self-driving
shoes, more
subscriptions,
everything to me.
for that tranche to
Everything
be
in
paid
here
out,
is full of
you
kid
have
toys.
to actually deliver on
So
these promises too.
that's
So it was
why I
structured
want
in a way, Marley,
them
I
to
would
do
say,
is to
that
explore and
is
figure out
trying
in
to
the world what
eliminate
they
some of
like
that
and
moral
what they
hazard.
don't
This is where
like.
it's like, hey, there's plenty of
You
huge
know,
football
that's
contracts
how we're
in
gonna
college
know where
football.
they're gonna be able
Make
to
the
excel
playoffs and
at.
you can
I
make some
think
more money. You know,
if
win the
they
national
just
title, make some
try
more
and
money.
err on a bunch of
Absolutely.
stuff
I mean, there is a motivation factor
instead of being shut
here,
off
and
on
it has
a
been
lot of
well
stuff.
constructed to ensure
I think that's a
that
great
what you
thing to
just
do.
brought up
That's what
can't
my
happen.
parents did
We've
with
made
me,
these
and that's how
promises,
we
and so
figured
now
out. They figured out what
everybody
things
came
I
in,
was
investors
interested
came in
in.
and
That
dumped a
was as
bunch of
far
money
as
into Tesla,
sports,
and now look, I've
non-sports
made more
things.
money.
So yeah,
David
I think
showed
that's
that's not
awesome
a
that
possibility.
you're
I mean, he'll
doing
continue
that.
to make money and
And
still
then they're going to have
fight
those
to be the
memories
richest
with
man in
you
the
too as
world back
well
and forth
because they
depending on
get
the
those
day. But
opportunities
there
that they
are
may not even be
clear
getting
marks
at
that have to
home.
be met
You
that
know,
will
when they're
simply
with
not
mom.
happen
You know,
by
I think that's really
investors just
cool that
coming
you're
into
doing
Tesla
that.
on promise. There has to
So
be
I told her about
actual
chess,
delivery
and
here. It's shut up
we
and
watched
shut on
chess.
time,
Yeah,
and
I'm
he has
just
to
like
do it if he
it's
wants
gonna
to
be
get
something.
paid. But
We're gonna be.
interestingly
You
enough,
gotta take
I
your
said it's a
frustration
real
and
potential pivot away from the car business.
something,
But there
strategize,
was a
fight
lot of
something
car
and
news
something.
that came out too.
Yeah,
Cybercat
So
that's
production
good.
expected to start in April
she
at their
don't like it.
factory
She
in
think it's for
Austin. Now,
adults
Elon
and
Musk said
that the
she's
car
more
is
like,
specifically built for unsupervised
she
manual
likes
driving,
writing, she
and
likes
it will not
math,
have
and
pedals or a steering wheel
different
or
stuff like
side
that. She likes to
mirrors.
draw.
But interestingly enough, that goes
So like
against
she'll
the
find
heavy
her way.
duty
Like
red,
she does
because
like
they don't want to have to
really
fight for that
really
sticky
well with like
regulatory approval
cartoons. Like she
to
can
have
draw
a car
cartoons
that
and stuff
doesn't
well,
have the ability for a
and
human
pictures well.
takeover in an emergency scenario with
So
pedals and a steering wheel. So
That's a
that
good
will
thing
be
to have. Make sure you
interesting
always
to
have
see
paper
what
and stuff
happens there,
around, a
because
pencil,
the
crayon,
regulatory
something
approval
where
for
she can
something
be
like
able
that, I was
to
trying to look it up,
draw,
and the
because
only thing
art
that I
is a
could
great
find
way too to
is
be
that
able to
Amazon's
express
Zoox
yourself
has
through
managed to get
emotion,
an
your thoughts, your
exemption
feelings,
because they
everything. I think that's
demonstrated that
really
their
awesome.
custom-built robo-taxis, which are devoid of those features,
Yeah.
can
Is she
function on
pretty
public
good though
roads.
with drawing?
They still do not
Yeah,
have the full exemption that will allow
I can
them
send you
to
some of her
operate
stuff.
a commercial robotaxi
Yeah,
service.
that's something you
So
definitely
they've
want to
been in
develop,
the
because
thick of
she can
this
actually grow up to
trying.
be really
They've
famous,
got the
drawing
exemption, but they
some
don't
really
have
good
the regulatory
portraits or
approval.
painting and
So
stuff
even
like
if
that.
they
So it's
build
good
these, and he's saying
that
that
she's
could mean
gifted. So
producing
who
2 to 3 million
draws or does
cyber
art
cabs
in
in
your
a year
family?
based on their production time.
There's a few people in my
If
family
you
who can
can't
draw.
get the regulatory approval, what
But
are you doing
I told the
with
mom
3
the same
million
thing.
cyber cabs?
I had got her
It's a very good question, and it's
you know, a
amazing to me
canvas
throughout
and a
this
paint
conversation
set.
we haven't even
Like I just
touched
keep
on
getting those and
the actual way that Tesla makes its
all
money
kind
right
of
now,
stuff.
and that's vehicles. We haven't
And
even
there's a
talked
whole
about
setup
that.
to where they can do that at too.
For you.
Great.
The Roadster
that.
2.
That's so good.
I
Alright.
definitely encourage
coming
that, but
in April.
you know,
Funny
it's
Yeah.
definitely
enough,
been
I thought this was a bit ironic.
you know,
It's going
crayons
to
on
be
the
tentatively
walls and all
debuted
that
on April
stuff.
Fool's Day.
Oh, there you go.
So I
But
don't
it's
know
all
if
in
it's
good
just a
fun.
really long
I
game
think
on an April
the
Fool's
mom
Day
might
joke,
not
but
do
it
it
is
over
April
there. I
1st,
don't know what they do
tentatively
over
they're
there
going
exactly
to
all the
reveal
time.
Roadster 2
But I don't think they
after,
do
I
it.
think, roughly 2 years
Let
since
them
they
be that
first
creative
teased
or
the
at least like
arrival of
that
this
with
vehicle. And then
with
once
coloring
the
and
demo
all
has
the
happened,
supplies,
they didn't
because
say
I
the
think they're
day.
probably afraid
Once
of it
that demo has
getting
happened,
everywhere and
production
on the
of that
walls.
vehicle is
Okay.
set to begin
But
12 to
I just
18
watch
months
them
I was
and
also
I let
saying
them
it
do it over
embeds
here.
like a 19-day cushion to
Okay,
get back
that's
to
good.
420.
I love it.
Too, but last thing I'm going to say too,
Yeah.
I think this is
Have you
really
put any
important in this
pictures or any of their
particular
artwork
scenario. I don't know
that they've
Elon Musk. I
done?
have no
Yeah,
idea.
it's like all over the
I mean,
walls,
it's
all
a
over
half a
my
billion at this point, so
hallways,
anyways,
all over
I'm
my
not
refrigerator,
sure money
on my
itself
cabinet,
is
on the
concern.
TVs.
He's even said it. It's about
Okay.
controlling.
Yeah,
the
like-
And how does that
company.
make you
He
feel? How does it
wants
make
to
you
be
feel like
able
when
to
you see their
continue
pictures
to
and stuff?
drive the vision of Tesla?
It's great. It's
And
a
to
great
do
song.
that through ownership.
Okay.
And he's trying to get that ownership stake pumped back up again.
I think if anything, it
Good.
shows his commitment to Tesla.
That's
That was
awesome.
at
And
one
right
point
now,
very
even
much
though I
a question
can't
as
see
he had
you,
various
I could tell
government
that you
ties.
was
I mean,
kind of
clearly
smiling
this
too.
man is not going anywhere
Yeah,
fighting
like-
Just by
this,
hearing your
this,
voice.
I mean, increased
I'll show you.
ownership
I'm gonna show
standpoint
you
of
a few
Tesla.
of,
I
like
was also
some
thinking
stuff.
the same
Like
thing, that I was
she's
surprised it wasn't
decent. She's
Bitcoin,
9
but
now,
as you know, that's been
but
a
some of
favorite
the stuff
date
that
of
she
Elon
did
Musk's.
was like
But
when she
now as
was
we
like
get through
7
trading
and 6.
Tesla here, we have been fairly
Oh, and you
range
could really
bound,
tell
and
that
we're-
she was
we're
gifted
selling
then
off
probably
today a
during
bit
that
with the
time.
overall market. We're down
Yeah.
about 6% this week, but
Cool.
we
And
sort
if
of
she's starting
jumped
off with
around these
cartoons,
levels
and if she didn't have to
and
start with
haven't really
tracing
seen
or
any
anything like
drastic
that,
movement to the
that's really
upside or
good. Because some
downside of
people
where
they'll
we've
take
currently
paper
been at.
and they'll put it over a
Neutral
picture
bullish
and then they'll
strategy, it's called a
trace.
skewed put butterfly,
And then
basically
that's how they learn how to
combining a
draw.
debit spread and a
But then
credit
others,
spread,
they
and
start out with
overlap at the
easier
same
things,
short
and
strike. In
cartoons
this
can
case,
be
it's the
one of them
415
if it's an
level.
easier
Had the
cartoon, of course,
opportunity to do
and they're able to
420,
draw
but
them,
I
and then
guess
they
I
go
missed
into
it here, but it
more
is the 420, 415
detailed type things. So I think that's really cool.
Skewed put butterfly.
So definitely
Now,
keep
done
that
for a
up with
credit
the
of
kids.
$1.50. If it stays
All right,
above
let's see. We done talked about
420,
eating.
all
We
of
done
these
talked
options
about
are
exercising.
expiring
How
worthless
is is
this
your
example,
sleeping
you
for
would
you?
simply keep that credit.
Good.
So in this case, that'd be $150 of profit. Where things get interesting, guys, if it gets down to that
I sleep.
415 line,
I'm
you
pretty
can actually
consistent
be the best of
in
both
a
worlds,
routine.
where that
and
Oh, wait a minute. I
schedule.
think your
swings towards
microphone is kind of
$5,
muffled a
the
little
credit
bit.
spread
I heard you
would
say
expire
sleep,
near
and then it was
worthless,
muffled.
and you get a
I'm in
possible
a
max
routine
$650.
and a schedule.
What I
Okay.
always like about these
All right.
strategies, personally, from an example trade standpoint, is less about that,
All right.
even though that
Routine
kicker
schedule.
is nice.
And so,
That
what time
kicker
do you typically
lowers
go
the
to bed
break-even
around?
even further than the traditional put vertical spread would.
No
So
later than
break-even is
12 or 1.
408.50. So
Okay.
you got
So
a
I can
pretty
get up at
decent
9.
cushion going out to November
All right.
21st. Doesn't mean it's not something that's in play. It's Tesla. It can certainly move there. But you risk 350, a chance to make
And when you
upwards
wake
of
up
650,
at
but also a
9,
scenario where if it
are
just
you
stays where it is
tired?
and
Do
moves
you feel
higher, you can
well
make
rested,
$150.
or how is
And
it for
Tesla
you?
down about 3.5%.
I can't wait to get up.
So we
I'll hop
have
out of
pulled
bed,
back
wash
now
my
about
face,
12% from highs that
be
were made
smiling,
really
all kind of
now
stuff.
almost a year ago at this point.
Okay.
I look in the
Like
mirror,
it.
tell
Thank you.
myself that I'm the coldest.
Tesla's credit.
I
We're
feel the
above
coldest.
April lows, but appreciated
All right, there you go.
really
Like
created
literally, I'm
thanks to
feeling
the Schwab
cold up in
network
my house right
giving
now.
us
But I get what you're saying. You the
several
coldest though as
headlines on
skin too.
Tesla today. We'll leave it there
She's
for
cold
FOMO.
too.
Coming up next, though, we'll
Yeah, I
discuss
wake
Yeah.
up and be like, I'm the
watch
coldest
any tech
ever.
trades, AI names
And I gotta go and
pull back
show
and
everybody I'm
momentum
great.
this week.
All right, so you got a little stuff affirmation.
Yeah, I'll be feeling good. I can't wait to get up.
Yes.
The market be my happy place.
All right.
I feel good to get up and see what's going on, see what the money doing.
All right, what it do?
Yeah.
Good thing. All right, like it. I'm just liking this positive energy and everything that you got going. Like that is a really cool thing to have, and that can actually rub off on other people, and especially your kids. If they see you like role modeling those type of things, they'll. I mean, like it'll rub off on them. They'll be trying to do it.
Oh, we have so really much fun when they come. They're gonna be over there playing Roblox.
Okay.
We're gonna be playing everything. Like they literally have too much fun. Just like it's a playground at their place. The reason why it's a playground at their place because it was a playground at my place first. I think so. Like they literally have like their own rooms. Everybody got TVs. You know they have space. Everybody got a bunch of toys. Like it's like literally too much stuff. And I'm gonna make them clean all this stuff up when they're done.
Yeah, that's the key, though. That's the big key. Have them start early while they're younger, because it becomes difficult when they get older to try to do it.
So,
try to break the habit.
With that being said, like she makes the bed.
Yeah.
You know, we get trash out. Like as clean as my place is now, it'll be clean when they leave. Respectfully, like.
Take a left here, please. But there's a Carl's Way is
I make sure she knows that she still has to clean up her room. I don't care how old she is.
Exactly.
No food in her room because that's the stuff I keep finding. That's what they beg me to go eat in their room. I'll be like, nah, family time.
Where are you going?
Everybody eating here with me.
Okay. I like that. That's good though, and it's good if they're not on gadgets and things like that. Hopefully, at the same time. Okay.
They don't like it.
Oh, they don't like it when they're over there. So basically, you all do have conversations and stuff like that when you're actually eating. So that's good.
I don't want to say that they don't like it. I guess it's just a little bit uncomfortable because I tell them, you know, I want y'all to sit at the table. We're gonna eat some vegetables. You know, we're gonna eat some good food, but we gotta eat some vegetables too. And then, you know, we're gonna watch some movie together. You know, everybody wants to either play the game all day and night or watch their own stuff and play, you know. So I'll be like, no, we're gonna eat together and have some, we're gonna talk, have family time.
I like that. That's good. It's a great habit to have. All right, good. Now, you know, the holiday's going to be coming up, and so you're going to have Thanksgiving. Are you going to be able to spend time with them, or mom and you are going to be able to get the kids together where you all can be like one family unit, spending the holiday? Have you thought about that?
I'll probably be able to get them, but I can never say for sure because, you know, I always have enough money for them and then something comes up. But things are getting better and better, so I'm gonna try to have them either Thanksgiving or Christmas or sometime before.
Roughly summer, you know, 70 to 95. But it'd be cool though, like if you can even have mom. I mean, if she's willing, I don't know, and if you're willing to have her around, like if you all can like spend together where they can see mom, dad, and them together. Even if she leaves afterwards, you know, and drops them off, you know, but still just a little bit on that day, being able to, you know,
they can't stand me. They can't stand me at all.
Get excited as these hyperscalers were investing in the infrastructure needed to meet those inference needs. But now, you know, the investment
hopefully
levels
gets
are
better,
getting
so it sounds like that's a challenge.
Investors are just
all right.
to get
So
worried.
What I was thinking about for today is I'm trying to see if I can make this worksheet. I don't know if it's up or not. Give me 1 second. Because you know I love worksheets.
Things like free cash flow. So I think that's probably really what triggered the concerns. Now, of course, there's some noise around OpenAI
there it is.
and
It is here.
Questions like the Brad Gerstner podcast with Sam Altman, where there's questions around how is this going to be funded, and Sam kind of
because we were sort of talking about some challenges today
how to
too.
answer that. And so there's questions around like OpenAI and profitability,
Hit
and
download.
obviously
What's it gonna do?
a lot of this infrastructure
Oh, no,
demand
we
is
ain't
going
doing
to AI labs like OpenAI.
Yeah, I don't like downloading certain things because then they can put like viruses on your computer. So we're gonna do the cheating way, and that's
okay, so
where
Austin,
we can still see the
interesting
document.
question for you. Then you mentioned earnings.
All right,
I
so
think
now I'm going to
objectively
share my
they're
screen
seen as
with
positive.
you.
You have like 82%.
And I know you still
rate
want to
in
get
the
off a little bit
S&P 500
early.
does fall a little bit closer to 75
I
in the
haven't
NASDAQ
forgot.
100.
There it is.
But
Okay, I
for
know there's a
growth,
lot
the
going on in this
one-day
background.
average
So
price
what I'm
moves a
trying to have
negative
you look
number.
at is
It's
over
almost a
here
full
where it talks a little bit
percent
about
negative, for
self-destruction.
NASDAQ 100
And so
components through about
I just want to hear you, since
80+%
you're
of
on this
those
positive
companies.
kick about
In your
all your
mind,
great
is that
basic
worrisome?
positivity.
Because good
What do you think
news
some
isn't
of your
enough,
greatest
or is it
strengths
always
are?
better just to have
My
good
greatest who?
news? And if it goes down, yeah, that's
Oh
not
yeah,
great.
I think
But
it's
at least
muffled
it's
a
not
little bit.
bad news
You're
dropping.
saying it's like you're far away.
What'd you say?
Yeah,
My greatest who?
I still
Your
have
greatest
conviction
strengths. I'm
that
over
the
here on the left
long-term
side right
narrative
here.
is
What are
solid.
some of
Just
your
There's
greatest
demand,
strengths?
just being
faster
resilient
supply,
and being
and that
positive.
Okay.
even on the end, like the OpenAI end of things, enterprises are figuring out still how to create value out of all this investment. Why is the stock
And
market
then
falling?
I was going to ask you
Maybe
too,
it's just that
what
things have
your
grown a little hot.
biggest
Even though the
challenge you
long-term
think right now
narrative
that
is
you
good,
have,
in
and it
light
could
of
be
earnings, there are lots of
something
beats,
that's
but there's lots of
personally happening
questions.
to
There's
you,
some
or
noise
it
out
could
there
be
that
like
I think
outside
there's probably a lot of
factors
people
that are
just
going on
pausing and
with you
asking,
that you can't fully
maybe for
control.
more signals, maybe waiting for
You said
Nvidia's
what
earnings.
personal
But I think
challenges do I have?
long-term,
Well, no,
we see
what's your
hyperscalers
biggest
that are
challenge
saying
that you think that you might
they're
have
not
that you're
just trying to
dealing with?
manufacture demand. They have demand, and as soon as
Do you
they
think you have
build
any,
that
or it could
infrastructure
be
and power it
multiple
on,
ones
they've
if
got
you don't have a
customers
bigger one? I
waiting to
mean, you
use
can
it,
always explain that
which
too.
suggests
But
all the way down to enterprises are still hungry to use AI and to figure out how to get more productive and do more than they could. I think we're just seeing maybe
I believe I
like
can
air
accomplish
pocket in
anything from
sentiment, and
my
maybe
mind
prices
to.
were running a little hot.
Okay, yeah, and
okay,
I
I
think
like
that's
that.
really well put, and I think speaks to the nature of
Now,
the
one
bulls
of your,
still that
because
are
I
still
was
like,
hearing a little bit
hold
of
on
a
a second,
challenge from
this
you
was
when you were
probably
talking
a
about
healthy
trying to
correction
be
for the
able
overall
to
market here that
co-parent
we've
with
seen this week.
your
Not
children.
every
Do you
week
think
can
that's kind of
be,
a challenge
as
for
strong as
you?
what we've seen now over and over. And so as far as like recapping what we've already learned from earnings, are there any
Could
themes
you hear
that
me?
stand out to you
Yeah, I heard you.
that clearly resonated as far as like
Do you think
performance
that's a challenge, like trying to be able to co-parent with your kid's
Or
mom?
is there any themes that stuck out that maybe didn't work so well?
I think one theme that stuck out is
she
the
gonna.
hyperscalers like
What's
Amazon,
gonna happen with her
Microsoft,
is.
Google that have clouds. Investors were still confident
about to
that
say?
those companies
say
would turn
something
all
crazy.
the
What's about to happen with her is.
spend into revenue.
She better
There's
get her
there's
stuff
clear
together
line of sight. Obviously,
before
they're
she's
going to, like,
embarrassed
Google
herself.
uses a lot of their infrastructure to
And,
train their models,
But
for
do you
example,
think it's?
or, of course,
Do you
to
still
serve
think it's
all
being a
their
challenge for you
amazing
because
products
he
that
ain't
have
fully being
incredible
cooperative?
distribution, Google
No, I
Maps,
can only be
so
the
on and
best I can be,
but
and the
of
stuff
course,
that I
they
can't
have,
control, like
clouds where they can just
stuff that I
turn
can't
around,
control,
take
they
some
that it is what it is, type stuff like that.
I think we saw
You
Meta
know,
get punished. They don't have a cloud, so they're talking about
it's gonna be all right.
accelerating their infrastructure build out.
She's gonna like fall in line eventually.
Wait a minute,
Just like I had to fall in line, or I'm in line somehow way. She gonna have to fall in with like I don't like she. I don't. Whatever she's doing is how she's always been. It don't. I don't. Some days she's bipolar. Like some days she'll be positive and cool, and it's not difficult to co-parent with her. She just wants things done how they are, and she don't realize the big scheme of things, how things can be changed still. How the way things, the way. What am I trying to say? The way things are for her now, that's how they were for me, and they can switch like that, vice versa, like that, through the course of time, and that's what she's not seeing.
I don't want to put words in your mouth, but you'd probably be comfortable with risk here for a long time frame.
Even though she has that way, like she's mad at me. Anybody gets mad at me, I have to just, control my emotions, control the situation. I'm not getting mad because she's getting mad. It's just I'm just really just trying to talk to the kids or know about the kids or see where I can do something. And it's some friction or resistance there, but
we're limited by supply, which is obviously TSMC.
If I can't talk to the kids, I'll talk to them next time. Overall, I think they all right. Like I said, they got all the money in the world. They should have everything. They're really good. So I can't stress my brain or focus too much on them to where I can't get my work done or I can't, strategize or budget my own life. So I don't know it. No, co-parenting isn't hard, but she tries to make it hard.
Oh, she tries to do that on purpose, you think, or is it something that she doesn't really notice that she's doing?
She's just mad at the past or whatever it is. Can be mad at anything. it could be anything to be mad about.
Tools to make that happen, but that just takes
And then with
time.
you
But
all though,
I
do you think that? And I know you brought up the past, but do you think there's still like any like feelings where she might be wanting you all to be together and you're not feeling that way, or I don't know, like.
No, she just doesn't want to talk to me. She doesn't want me in the kids' life. She doesn't like that I call and want to know about the kids. She doesn't feel that I should know about the kids. The only thing she wants me to do is pick them up on the weekends, not ask her no questions, just talk to my daughter about everything, supply all their food, all their clothes from my end. You know, it's just very selfish. That's what she wants. She doesn't want to go to mediation, and she wants this to be taken to court to where she feels like the judge is going to tell me and feel what she's saying.
Opportunities don't stop when the market day ends.
Wow, but the kids are going to suffer in the long run when you think about it.
I keep telling her, like, the most important thing is about the kids, and it's like, she in the way, you know. I'll be like, just get out of the way, or just tell me fully what the kids need or what's going on in school and doctor's appointments. But like I say, like, she don't be wanting to open up and communicate about. If she is, she's like over talking to me, and it's just like all this anger and negative energy to where it's not a conversation. It's like either an argument or, you know what I mean? Anything could just make her hang up anyways.
Okay. So the slightest little thing pretty much is a trigger for her, and then she's like, you know what, I'm done.
Yeah, it's like, it's that bipolar stuff, so.
Okay. Well, I get it. Okay.
All I told her in text, and everybody has to understand, you know, all that stuff is not healthy for her, the kids, and whatever she's happy with, she can really just lose it all.
That's true.
Purchasing an LA airport and spending a good deal of equity.
So, you know, the next question that we have on here, you kind of answered it a little bit, where it talks about, can I use my strength in any way to help me meet the challenge? Because you know how you talk about, of course, being resilient and being positive. And you sort of talked about, too, I can be the best that I can be. And, you know, that whole thing. And then you also mentioned that you understand that things that are not in your control, they can still maybe fall in line eventually. So you still have that whole positive thought process that, you know what, there's still hope, things are going to try to work out. And so I thought that was pretty cool with that answer. And I think that's where you met that last question that talks about using your strength to meet your challenge. I thought that was pretty good. Let me ask you too, before we try to get off of here, because I know you want to get off of here early. Anxiety level, where it's 0 to 10, where 0 is none, and then 10 is high. What do you think your anxiety level is right now?
It's probably like a 2, because you know, some stuff could happen that's bad, but it's all right. So it's not like the end of the world.
Okay.
Everything is gonna be all right.
Electric vehicle takeoff and landing, or eVTOL.
It's almost like investing. You know, we gotta have a little pullback, a little friction sometimes, but when you invest in the long haul, you know, everything is really gonna work out. We're gonna see some returns.
All right, like that. Okay. Now, wait a minute. Before you get off of here, what I'm going to do is I'm going to send you this meeting invite. Now, do you want these to be where they recur? Because I can turn yours into where it recurs each week. Oh, wait a minute. It does recur each week. Okay, yeah, I got yours repeating. Do you want me to change it from recurring and make it where I do it each week?
So that's obviously something
that you talking about appointments?
And they're actually going to be
yeah, because yours does recur. I have only a few people that have them recur, and you're one of the few people that do. Are you okay with leaving it as is, where you just go to that link and you click on, or are you wanting me to make it where I have to send it each week to you?
I mean, I could use the same link.
Okay, yeah, no, same link. Okay, so then we'll leave it alone. So
That's why I was
get on
wondering, like,
today?
if all the
Okay.
like if all of the messages that you were sending for the appointments, if the link is the same.
Yeah, it is. Yeah,
All
it's
right.
still the same for right now. And I think
It's
we got
interesting
it
to
going
see some of the
till
discrepancies in just where the analysts were at,
it
but
going
moving
through
forward,
it goes
they do
until
expect to
March of
continue to narrow that
March
loss as
13th,
well. But the stock
2026. So
lower
we got it
today,
going through the
trading
middle
at
of
about
March
$7
next
and
year.
change
So yeah,
right
same
now,
link
and
if you're cool with
13%
that.
down.
Alrighty.
Off the
Is
back
there
of
anything that
this
we need to
share
talk
sale
about that we
disclosing that
haven't
it's
that you may want to
$55
go
million
over or anything
stock
like that?
offering, over 81 million
No,
shares
ma'am.
is going to dilute the value for
All
current
right, well, I'm going to go ahead and
shareholders.
let
So
you
these
off
investors
early, and
aren't so
hopefully you have a
thrilled
good
about that piece of
first
news.
experience with Terica. Just let me know
Sam,
how
I think
that goes.
it's a really, really good point. This is something
Yes,
that
ma'am, I
George
will
Tillis
do.
talks
All
to us
righty,
a lot
well, you
too,
have a
which is
good
the
rest of your
dilution
day.
some of these pre-revenue companies.
Yes, ma'am. Thank you. I'm about to send
And that's
you this,
just
All right,
the
this
nature of the
message
beast,
in
right? They
a
either
minute.
can go to debt
Okay, that's
markets
cool.
and dilute
You're good.
shareholder
All right, well, I'll see
value
you.
there,
Bye.
or
All right, thank
issue
you so much.
equity when the shares
no problem.
are doing a little bit better to raise capital as they're working through and getting some of these regulatory approvals. But final thoughts real quick, 10, 15 seconds.
Yeah, I mean, so this is going to help this share sale, that $126 million acquisition of Hawthorne Airport in LA, as it's going to be, of course, the official provider of the Olympics. But hey, look, this downward momentum that we've seen actually in the company year to date hasn't stopped the likes of Kathy Woods, for instance, doubling down on this name. She's bought into it, and so she's taking advantage of the fact that this stock is trading lower. I'm just looking at this year to date. It's down almost 21% on the move today as well.
Yeah, so again, seeing, I think the overall cost of growing at the pace that they're expecting is going to be expensive. So we will leave it there, but appreciate all of the help breaking down Archer Aviation that Sam brought us, host for the Schwab Network. That will also do it for Alex and myself for Next Gen Investing for today and this week. Thank you so much for tuning in. We have the watch list coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Exchange coming up on 2 p.m. Eastern Time. Let's start out with our roadmap. Here's what's coming up on today's show. We'll be joined by NFL Hall of Fame quarterback Fran Tarkenton to discuss the privacy and security threat that generative AI he sees posing to businesses. Then we'll discuss the state of Japanese markets following the election of the new prime minister and take a look at some Japanese stocks you may want to consider for your portfolio. Plus, we'll bring in our panel to discuss November consumer sentiment, which came in at the lowest level in more than 3 years. All right, let's get right to a check of your scorecard with about 2 hours left in the trading day. You are looking at equities off the lows of the session. The S&P 500 lower right now by more than 0.5%. Where you still see the weakness has been the three laggards pacing the weakness. That's communication services, information technology, and consumer discretionary. But again, all of those off of the lows of the session. You have more sectors of the S&P 500 higher versus lower right now. We'll see if the bulls continue to fight back as we get closer to the end of today's trading session, but still on track for losses this week. NASDAQ 100 still the weakest of the week today, down about 1.25% right now. Dow right now lower by a little bit more than 1/3%. Small caps off by 0.5%. Again, investors coming off the mat right now, or at least bullish investors. Maybe this is some of the buy the dip crowd, given the weakness that we've seen this week. Let's take a look at some of the other asset classes that we are watching in today's market. The dollar right now off by 0.2%, just below 100. Gold catching a little bit of a bid, up 0.5% above 4,000 an ounce, 40.12 there. Crude oil higher by 0.5%, approaching $60 a barrel for West Texas Intermediate. Bitcoin having a little bit of fight back right now, up 1.5%, a little bit more than 1.5% above 102,000, approaching 103,000 right now. For some of the biggest stories in the markets, we want to welcome in Kevin Haynes, co-host of Fast Market here on Schwab Network, my buddy who's over there at the other exchange. All right, so let's talk about Block, the artist formerly known as Square, ticker XYZ. There's so many things to remember around this one. Now, this has been under pressure off the back of its quarterly results. What's your take here?
I don't want to talk about Block. I want to talk about Fran Tarkenton. You have the best job, Diane. Come on. I love Fran Tarkenton.
I know. Come on over for that interview.
I just had to say that. I remember Fran Tarkenton playing for the Vikings. Guy was awesome. Anyway, Blocks or Square or XYZ, whatever you want to call it, it's been so many names. Miss on earnings.
Man, this bullish divergence is crazy.
Miss on earnings, 54 cents versus 60.
Bro, hello.
Expected.
Email
revenue 6.11 billion.
Bro, why am I Dr. trying to still stay on here
billion.
until
so
2 o'clock?
Miss on earnings, miss on revenue.
Try to get off early.
Gross profits were up 18% to 2.66 billion. Cash App profits up 24%. Remember, Cash App is that platform that competes with Venmo. And Cash App monthly active users, 58 million. Square gross profits, remember, that's how small businesses do their collection. Square gross profits, 898 million, up 9%.
I thought my kids was going to come,
Square
but
gross payment volume, up 7.2% year over year. So, this is a company, when Square started, it was such an amazing innovation. But
you
this company has just kind of failed to grow as much as originally expected. Stock down about 8%.
I said, you're not going to be playing 2K. Is he still out there
Okay,
sunbathing?
so that stock is under some pressure, but it's off the lows of the session, similar to what we're seeing in terms of the broad market. But let's talk about winner Expedia. It has been rallying today off the back of its results, and to me, it shows that consumers are not willing to give up their experiences. What's your take?
And this is something you and I just talked about on Fast Market. The airlines are going through some struggles, but people are still trying to travel. Expedia put up great numbers.
Well, the market is showing some crazy bullish divergence. This is a great bottom buy.
That beat by 60.
And I ain't gonna lie to y'all, I'm holding this because I got Cody
billion. An increase of 9%, beating analyst estimates by 150 million. Gross bookings up 12%.
I got diamond hands on the market, bro. This is bullish divergence. This is a great bottom bounce.
Shareholder returns, they were
I'm trying to get this whole motherfucking move
for 451 million and declared a quarterly dividend of 40 cents per share. So,
I told you how Archer moved with the SPY. Look what Archer doing. The same thing with the SPY doing. Showing bullish divergence. Archer done fell like 20% today and recovered half of it.
Not in the travel
I'm in the
companies,
money on
certainly
0 GT on Archer and wasn't even looking at it the whole time. Just knew it was gonna go up because it moved with the SPY.
Big move there over there at Expedia, and even Airbnb
me how to trade.
Did better than expected. So it's nice to
The
see
market
that. All right,
giving
thank you, Kevin.
and it
That is Kevin
taking.
Hincks, co-host of Fast Market. Now let's widen out, get a big picture take with David Apple,
Frost is
host,
great.
CIO of
I'm
Mount
up
Lucas
$16 on
Management.
my Archer
David,
play.
thank you so much for joining us today.
Yeah,
I know
we're
you've
about to
been
take
paying
profit.
attention to something that we've talked about a lot, the bifurcation of the economy. We often talk about the K-shaped economy. Today would have been a day where we'd be having a conversation about the job report and the
if I get out
impact of that,
soon
but
enough, I
that's
can do
not
another
the
day
case
trade.
today. What's your take on,
My King U Lead ain't even
when you
moving.
look out broad strokes
That's why we
about
done
how
hedged it
investors
anyway.
should think
Though.
about the
They
health
really
of
had
the
to
U.S.
mess up for
economy?
real. Because even the
Yeah,
market
thanks for having
know I'm
me
the
on.
coldest.
Yeah, it's really difficult at the minute, right? I mean,
You know what I'm
as you
talking
said, we should have
Somebody
had
know what I'm
payroll
talking about
data
somewhere.
this morning. This is the second one that we've not seen.
You know what I'm saying?
It's not
Somebody
clear
know
if
who
we're
I'm talking
likely to
about
get
somewhere,
that,
y'all.
Or what's going to happen going forward. The jobless claims data is
I was
coming
on the
out
phone
by the
with my
states,
doctor.
but it's not coming out at the national level. There's lots of data that we're missing, and a really difficult time for the Fed and for the economy.
My doctor be liking me,
It's
boy. I've
not
been
great.
that
We really
lad.
don't know what's happening at the minute. And
It's
it's
real
not
stuff.
just the fact that we can't see what's going on because of the shutdown. Part of the issue itself is that as the longer the shutdown goes on, the more people miss paychecks and the more uncertainty goes up. The shutdown itself is going to start causing economic problems as well.
I'm gonna try to make
It's really not a
100+%
great scenario
on
to be
Archer,
in.
right?
Yeah, no, it's a great point. I was talking
And
to
then
Jan Hatzius this morning about this. He's the
load the boat
chief,
up on
chief
my
economist over at
King U
Goldman.
Lead.
And one of the things he pointed out was that there is another risk right in front of us in terms of the job
Dang,
report
it just-
because the survey week,
Whoa!
for instance, for November,
What
is
did you?
coming
What
up
y'all?
in November 12th.
Whoa!
That's next week, right?
Shit,
So
what
there's
you
a
talking
risk
about?
that even if we get the November job
Look for a
report, we're
retest
supposed to
right
get
there.
October today, that we still may be missing. It may not be as full, right? Because you can't do both sides of it if you miss that survey period.
You get in
When
the
you
money,
think about
boy,
that, and in terms
in
of
the money
how
plays are
you
printing.
apply what you know in terms of the market, do you lean into momentum, or is this about hunting for value now?
I think both approaches can work. What we do is we trade a managed futures strategy.
Somebody
So
say
we're
boom,
about
boom, boom for
momentum
me.
in broad asset markets, which is around the dollar, fixed income, and commodity markets as well. So for us, what we do is we look for markets that are shifting either in large directions, either up or down, and then we try and ride those trends, thinking that they persist longer than is priced. So either way, whichever way the
people
economy
came in
breaks,
when I
whichever way
had
the
to talk
dollar
to my
breaks,
doctor, bro.
I think we're just looking forward
I
to
need
some
everybody
large
to come
moves
back
in these markets.
and come get some of this Monty.
David, let me ask you this. You were talking earlier about the Fed, right? And, given the conversation that we're having about missing data points, I want to go back to something that I know was on your radar with the operating in a fog and you slow down, but we got a rate cut last month. There's still the consensus view is that we're still more likely than not to get a rate cut in December, although it's not as baked in. And the Fed chair himself said it's not a foregone conclusion. Are you anticipating the start of a broader easing cycle? And do you see that happening in December or kicked over to January?
Yes, that's right. I think so. We did cut, but then Powell kind of walked some of it back to say that the next rate cut wasn't a foregone conclusion. I can see why he does that. He likely doesn't want to have markets price things at the level that they were priced. I think a December cut was priced at around 95%. It's back down to maybe 65, 70%, something like that now, which is probably closer to where he wants it. I think they'll end up cutting. Again, it's hard to know without the data, but I think that the slowdown itself, the rest of the data that you do get around employment will justify the cuts. But I think it's going to be quite contentious. I mean, they've cut 5 times already. The big discussion is going to be around, at least for the next year or so, is how long does it take to get back to neutral? And then also what neutral is. I think people generally think neutral is somewhere around 275, 3 or so. There's some people on the Fed who want to get there very quickly. Stephen Myron wants to get there in 50 basis point chunks. I think they're going to end up doing that
right here.
and getting
What a day, what a
closer to
day.
neutral quicker because inflation
Hold on, come here. What you trying to do?
It's an issue. And then I think that the next
See if they got
question
more upside or not.
is to what extent is the economy actually responsive to the rate cuts? If you get to say 2.75 or 3%, you're sort of naturally assuming that the interest rate sensitive sectors
even if they do go down, they bullish as hell right now.
It's not 100%.
If they go down, they're probably gonna bounce either off this slope of resistance,
so I think it'll be really
this
interesting
support,
to see. I think they will cut in
this
December.
support right here.
They cut a bit quicker than is priced. And they get to neutral somewhat more quickly. And then the big discussion then is, if you cut, how much is the economy going to respond to that and how quickly?
Okay. I want to get your thought on this. There's been pullback in markets this week. But you and others have pointed this out that the major indexes do look expensive. So maybe this is not surprising. But you do say there are opportunities underneath. There's some reasonably priced stocks. Where do you have conviction, whether it's sectors or individual names?
I think that's the issue is that the overall index is quite expensive. Obviously, people have been chasing the growth story through the AI names, and they're fantastic businesses.
I ain't gonna lie, boy. Somebody
well, but lots of them are priced
on this call.
Are priced like it, and you're seeing some of that come out.
Wait for them to fill up the gas on
what's happened
one
on
of
the
these
other
supports.
side of that is that a lot of quality companies have come off a lot. They're high quality businesses that are growing well. Those have struggled. There's a lot of companies. I think there's a lot of companies in the energy space and in the natural gas space in particular that are likely to be big beneficiaries of the AI and the data center boom over the coming few years that are not really priced for that yet. That people still view, I think, natural gas as a very cheap item, and people are nervous of those types of companies. But I think it's going to be really hard to have an AI wave without natural gas. And I think some of those names look quite compelling. But there's a lot of names across the sectors, particularly the quality names that look good. There's sets of names in healthcare that look quite good also.
Okay, yeah, I've heard some share a similar view, David. And I just want to get a quick final thought from you, if you have like 30 seconds, thought on where we go from here as we wrap up the year.
Yo, I got Archer pulled up.
The shutdown, I think, how long the shutdown
I believe
last, what happens with it
this baby
to the
is
Fed,
moving like a spy today.
The main question
I don't know what's going on.
Of the year. I mean,
bullish divergence.
I think they're going to end up cutting because the data, when it does come out, assuming, as you say, they're collecting it, that the data is going to warrant more
moving
cuts,
like
so
the
people
spy
will get more
today,
comfortable
boy.
with it. And then we're just going to have to wait and see on the jobs picture, and then what we look like next year on the fiscal side as well.
All right, David, we'll leave our conversation there for today. Thank you so much for joining us this Friday. I hope you have a wonderful weekend. Appreciate your time. You got it. That's David Aspel, co-CIO at Mount Lucas Management. Coming up, we've got Options Corner. Tom White joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news as it relates to JD.com, Starbucks, and NVIDIA. We'll be right back.
Bounced right here.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Welcome back to the watch list. Time now for Options Corner, where we analyze unusual options trades seen throughout the day. For that, let's welcome in Tom White, co-host of Fast Market here on Schwab Network. So I got to talk to both of my buddies today. All right, so you've come across a few unusual trades today, unusual options activity. Let's start out with JD.com. You found a bullish trade here. It's got earnings in front of us next week. Take us through what you noticed.
Yeah, I think maybe that's going to be the catalyst for this stock. Out of all the Chinese-based stocks that we kind of follow, Alibaba, Pinduoduo, or PDD, and then also Baidu, this one severely underperformed. It's off about 9% so far this year. Alibaba's up nearly 100% so far this year. We saw a lot of activity from hedge funds and money managers that were piling into Chinese stocks just based on valuations compared to similar names here in the U.S. or comparables. JD is the largest technology-driven e-commerce site over in China. They've got a logistics division, their advertising arm. They don't have the cloud type of business that Alibaba does or maybe Amazon does here. So maybe that's why it's been one of the laggards in this space. But if you take a look at their competition, it's Alibaba, it's PDD, expansion costs and regulatory uncertainties going into this report. But like I said, it's underperformed, and I think this trader's setting up for maybe some upside surprise here in JD. The trader bought 8,000 in the November 14th weekly options, so those expire in 7 days. You're going to capture next Thursday's earnings event. They bought 8,000 of the 33 strike calls, paid an average debit of only 46 cents. These aren't expensive options. So the break even of 33.46 over the next week is about 6% above the current share price in there, Diane. So yeah, positioning earnings type play here in an underperformer out of all the Chinese names.
Okay, all right. So next on your list, Starbucks is perking up today, and you found a bullish trade here. What'd you notice?
Perking up today. You nailed that one, Diane. Of course, little caffeine for this one today. It's pushing against of what's going on in the overall market. Up 3%, still down about 7% so far this year. Brian Niccol trying to turn the transformation of Starbucks into a little bit quicker than maybe the streets anticipated. That's why the stock's been a laggard. They did report recent earnings. EPS missed. Revenue was a little bit above expectations. Comparable global same-store sales increased only 1%. That's actually better than what they've been seeing recently. So that was a bonus for them on their earnings. But they're also they divested or agreed to a joint venture with Boyu Capital for $4 billion in their China-based business. Starbucks is going to retain about 40% stake and continue to license and own Starbucks brand and intellectual property to the new entity. But this was probably a big weight off their shoulders because China sales had been lagging a little bit. And then throw on top of it, the union members voted to strike at the company's U.S. stores next week unless it finalizes a contract agreement, which doesn't seem like it's going to get done. But the stock's still doing well. They got new protein drinks there, Diane, that are supposed to be doing really well. And we saw some bullish activity in here also. November 21st monthly cycle that expires in 2 weeks. Trader bought over 3,000 of the 86 strike calls. Paid an average debit of about $1.42 on those, so that break even of $87.42 over the next 2 weeks. is about 3% above the current share price there in Starbucks. And I think there's a lot of investors in Starbucks over the last year since Brian Niccol got in, that have been waiting for a turnaround story. It just hasn't taken place, but this trader thinks we're going to see some more gains over the next couple weeks.
I think you're right. I think that's certainly clearly banking on Brian Nichols over there. And I haven't traded in pumpkin spice for protein yet, but maybe I will. All right, the final one on your list, you brought another bullish one. This time it's for NVIDIA, which, I mean, listen, it's pulled back this week, but what did you notice here?
Well, it's getting a little bit of a lift. I mean, the stock was down over 4.5% at the lows of the session. Now only down about 1 3/4% on the day, but still down about 8-9% so far this week. But still up about 38% so far this year. It's had a good run. Jensen Huang came out with some recent commentary saying no active discussions to sell their Blackwell chip over in China. And the information reported that even the lower impact AI chips, they're not going to, the U.S. government's not going to allow them to sell that. And this comes on the back of, all-time highs for this stock recently after their GTC conference. Jensen Huang was all fired up about their business where demand is outstripping supply, and that continues. But seeing a nice pullback here, it's given maybe some traders the opportunity to get in here. And we did see some bullish activity in here also. But this was all the way out in the December 12th weekly option series, 35 days to expiration. The trader bought over 20,000 of the 200, 220 strike call vertical. So they bought the 20,000 of the 200 strike calls, sold 20,000 of the 220 strike calls. So a bullish $20 wide call vertical. They paid an average debit of just under $3.60 for those. So the break even just at 203.59 over the next basically 5 weeks. About 10% above the current share price in there. With call volume, even on a down day, Diane, I think a lot of call activity in there. Call volume is about double normal daily average volume that we've seen over the last 5 trading days. And I think there were some, people trying to pick the bottom here in a lot of these tech names. We saw it earlier in Meta Platforms ahead of their news. That stock was down pretty significantly. It's turned around. A lot of the tech names have been leading this bounce off of session lows, and a lot of call buyers in these tech names today.
Okay, thank you so much for the breakdown there, and some unusual options activity in names in a variety of sectors. JD, Starbucks, NVIDIA. Thank you, Tom. That is Tom White, co-host of Fast Market. Coming up, from the football field to the front office, we'll be joined by NFL Hall of Fame quarterback Fran Tarkenton to discuss the privacy threat that generative AI poses to businesses. That's next on the watch list.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network. Schwab Network.
Hey, you know what, y'all? I'm up almost 300% on Archer.
Trading at Schwab is powered by Ameritrade,
I'm up
giving
almost
traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more.
Let's go. A little bit
All
farther,
crafted
too.
just for traders. And with
Well,
guided
make
learning
us rich
paths,
today,
stacked
boy.
with content curated to fit your unique
They're
goals,
trying to give us
you
all
can
that
spend
money
less
back.
time searching and more time learning. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Welcome back to the Washington Banking Hall, live from the floor of the New York Stock Exchange. Let's start with some of the movers in the market right now. Shares of Take-Two under pressure after releasing its quarterly report card. But here's really where the hit is, announcing another delay for Grand Theft Auto 6. The video game maker did post a top and bottom line beat on earnings. It raised guidance for the upcoming fiscal year. But Take-Two has now pushed the release date for GTA 6
Tell them
to
again.
November of 2026.
I keep telling
They
them
say in
that.
order to
Tell them
finish the
again,
game
though.
with the level of polish gamers expect. The much anticipated release was originally scheduled for release this fall. So basically this is the new deadline is about a year after when it was anticipated. Airbnb is now slightly lower today after posting mixed earnings for the third quarter. It was higher earlier in the session. The travel services company posted gross bookings value growth of 14% while seeing fourth quarter nights and seats booking growing in the mid-single-digit range. Airbnb said it saw strength in longer lead time bookings while noting its forecast was hampered by investment in new growth and policy initiatives. It's been trying to grow its footprint globally. Meanwhile, the increasing popularity of generative AI in the workspace has started to pose a potential security threat to companies. Smaller businesses, some say, are most at risk. To discuss this trend and a way to mitigate the threat, we want to welcome in our next guest. We have Fran Tarkenton, NFL Hall of Fame quarterback for the Minnesota Vikings and CEO of Tarkenton, and Will Adams, president of Tarkenton, joining us now. So, Fran, thank you so much for joining us. One of my colleagues, he wants to be here doing this interview because he said he watched you play. So, you know, you've gone from the football field to the front office. You've gone from calling plays on the football field to business. Let's talk now about how you're pushing into innovation and AI. How did you get here?
Well, I played football in the National Football League.
What you got this up?
And I kind of changed how quarterbacks played football. They were go back in the pocket. They would never run. They would never scramble. And then they throw the ball down the field. Now we look at these great quarterbacks playing today. They can run the ball, and they can also throw the ball. But the whole thing has changed up. Business is no different. I've been in business all my life. And if we don't look to how can we get better, how can we serve our clients better, how we can be a better partner, if we don't do that every day, we lose. And that's what's happening now more than ever before. And we just finished building a product called Pimp IQ. And, you know, I've got my president here, Will, young guy. He can go more into the details. But remember, the number one thing is this. Pimp IQ is the most trusted source of information inside of your business. So your people can find what they need to succeed. And so Will can do that in a much better way than I can.
Where are you trading this at?
AI is taking over the world, and it's making us better.
Damn it, I gotta get back on Robinhood.
We are doing that.
If we use it properly.
I can't trade
so,
this.
Will, that begs the question, what does properly mean? And let me also add this context. I was hearing a couple of ladies at work have a conversation, and, you know, you could tell they were trying to work through something, and one said just chat.
I'm about some of this
and it's
Coinbase.
like, wow, we're at a phase where it may be becoming a verb, like where you would say just Google it. So what does that mean, use it properly?
Yeah,
this is the bottom right here.
That's a funny term you say.
This
Just
is a good
chat it.
buy right now.
And that right there is a trend that's really happening right now. All across the landscape of business. KPMG came out with a report saying that nearly 80% of employees are using AI in the workplace, and about 50% of those have admitted to pasting sensitive company information into those chats. And thinking about that, it's creating an absolute minefield of compliance, security, and intellectual property risk for companies like yours, companies like ours. So that's one thing that we've really set out to go and tackle head on. AI-driven productivity headlines are all over news networks like yours. We're seeing it all over the headlines. But small businesses are really wrestling to achieve those same results. Clear goals, tools that just aren't made for the untrained and unprepared employees. So that's one of the things that we're out tackling in the marketplace right now with the private intelligence platform. It's designed specifically for those small businesses. Simple to use, secure by default, and really focused on measurable business outcomes. We're focused on the dirty work, the operations, the admin, customer service, communications, reporting. So those companies can see, real meaningful ROI quickly, not having to wait months, large investments,
I need about 100 of them
but getting it,
cryptos.
in a matter of weeks.
Well, let me ask you this. You all talk about the shadow AI problem. Can you explain what that is?
You printing on them. Let me hold it all there.
What people should and businesses should keep in mind when you think about that.
A physical cash.
Yeah, so shadow AI. So that is it's a paramount problem. So again, going back to what previously stated, about 80% of employees using AI in the workplace. Lots of companies today, the pace of AI right now is just so rapid, and the accessibility of the numerous chat tools that are out there available. Employees most are out trying to do a great job for their companies, and there's different tools that are in the marketplace that they believe can help them go and achieve, better results, faster results for the companies they work for. They're going to go and reach for those tools if they believe that they can achieve those results, faster, if their company is not providing those resources for them. Unfortunately, a lot of those tools are not designed for this. They're not designed to keep that kind of company data secure and private and protected. So oftentimes those employees are out taking contracts, taking customer data, copying, pasting, dropping it into a public chat tool. That information is now it's part of the data model and is now exposed, much to the detriment of that company or to the customers that data was now exposed. And meanwhile, the company has no idea that that's happening, even if they put in guardrails or safety measures in place, because employees are resourceful. They're going to come off the network, go around the firewall, again, just in an attempt to go and do their job faster, more efficiently.
And then, Fran, I want to go back to you and ask you this question.
I'm up almost 400%.
You've lived your life through various decades and have seen the rapid acceleration of technology. When you think about where we are now, we're in this world where we're constantly having this conversation about AI, artificial intelligence, how productive it can make us.
Wherever the spy going,
is it friend or foe?
Right now, today,
and
Trend Rogue,
we live in today, we need friends.
This is a $6 move from the bottom, y'all.
And it's friend. I look back in my football career. What we did on offense and defense back in 1961,
market call,
I played for 18 years.
$1 million.
You wouldn't recognize it today for what they do today. Technology touches every business. It touches all the football games, the baseball games, how you train, how you do to get better. And this is really an important step for our country or the world. AI is here and it's helping make us better. And that's why we put our guys together. We built our product and we've got it out on the marketplace. And these type of things are so important for us to be able to take care of our customers better. And our products can be used in a better way.
And then, Fran, what do you think about when you think about, because I think, I don't think it's actually an easy answer on friend. I feel like you have to make it be your Hugh's place in this.
Well, yeah, and it really is a safer way for us to run our businesses. And it makes us able to do more good things for our customers. A number of things, we want to be sure that we protect our customers in any of the products that they use that we have. And this is helping us do that in a very advanced way. AI is here, and it's just beginning. It's changing the world, and it's going to change it a lot more than it is right now.
All right, thank you. We'll have to leave our conversation there for today. That's Fran Tarkenton, NFL Hall of Fame quarterback and the CEO of Tarkenton, along with Will Adams, president of Tarkenton. Thank you so much for joining us and giving us your view on the lay of the land as it relates to AI and what we need to think about. Still ahead, we will go global, take a look at Japanese markets following both the election of a new prime minister, along with the landscape there and the growth we've seen in the Nikkei this year. The watch list, we'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch from Dining Hall. Joining me now to discuss the landscape for Japanese markets following the election of a new prime minister. We want to welcome in Masa Takeda, portfolio manager of the Hennessy Japan Fund. Masa, thank you so much for joining us today. First, I just want to get your thoughts on, kind of the historical nature of Sanae Takaichi. Excuse my pronunciation. Correct me, especially because I know that's very Americanized. And what that means in general, and what the market interpretation has been.
So I think so far she's been received very positively by the market, and that's because she's been calling for proactive fiscal policy, and also she's a little bit more dovish on the monetary side. But The long-term market implication is still uncertain is because Japanese economy currently is
what are you doing?
from
What are you doing?
demand
Take me with you.
more about
Take my money
supply
with you.
constraints.
Boom,
So we
boom,
will find
boom.
out whether this is going to be
Hey,
really
take my money with
conducive
you.
to the current
Hey,
economic
you ain't
conditions.
finna leave me
So I've heard that
down here
there
with
is
these
something now
rascals
called the
who don't want to come get this bread. I told them to subscribe and follow. You ain't gonna miss nothing. We up 500% on this play.
Lower today, but it's been it's
We're
top
holding
50,000.
never
It's been record
folding,
after
boy. I keep
record.
telling y'all that.
How
This is
should
my happy
investors
place,
foresee
boy.
that, you
Look
know,
at
is there
this.
risk
We caught the
to, you know,
bottom
kind of
of the
betting on the
sky,
Takaichi
bro. Look at
trade?
this. We caught the bottom of
I
this,
guess
and I'm
the other
holding
thing
the whole
that
time.
Takaichi,
Let's go, market.
is focused on right now is to
Let's go with it, baby.
strengthen the domestic capabilities
with you.
for key industries like semiconductor.
Take me
AI,
with you, baby. I want that bread. I
space
need that
program,
bread,
and so
man.
on.
I'm trying to see my
So
kids.
these sectors
I'm
will
trying to put
probably
food
continue
in
to
her.
garner attention. The other thing is whether Takaichi or not, whether her long-term agenda is positive or not. One thing that is going to continue in Japan is the corporate governance reform, and I think that has been the biggest driver of the market, and it will continue to be so.
Okay, so you think that's going to continue to be so, the corporate governance reform? I have been reading a lot about that. It doesn't sound sexy, but tell us why global investors should care about that.
So, Japan has been, for better or worse, dubbed socialist capitalism. So companies didn't really focus on capital efficiency as, measured by ROE or ROIC. That is now slowly starting to change, and that's because of back in 2014 with the launch of Abenomics. We embarked on corporate governance reform journey, and it's about 10 years now. That kind of culminated in 2023 Tokyo Stock Exchange's request, asking Japanese companies trading less than 1x book to do a better job of increasing corporate value. But that is only focusing on these corporate underperformers. Now, going forward, the key message by the market regulator is to encourage companies of all types, including the ones trading above 1x, to be more capital efficient, because still there are a lot of blue chip companies whose businesses may be going strong, but when it comes to capital efficiency, the capital allocation has been pretty much substandard.
Let me ask you this. I want to talk about the positioning of the Bank of Japan because, often here our conversation has been about what the Fed will do in kind of managing between inflation and employment here. There was this expectation that the BOJ would hike rates recently, but they did not. So where, and you've been, I know, across this, inflation has picked up in Japan. What's your expectation on where this leaves the BOJ next?
So, given the current interest rate environment and inflation environment, if you look at the short end of the curve, overnight core rate is only 50 basis points. However, CPI has been trending above 3%. So clearly something is not right here. So I myself, look at BOJ as being on a solid path towards gradual rate hikes. But that does not mean the rate hikes are going to happen all in one go. What this means is that the BOJ will likely do this slowly, such that monetary policy will remain accommodative. So the gradual rates increasing and monetary policy staying loose, that should mean that equities and asset class should be attractive.
Okay. Masa, let me ask you this. Is there a similar signaling where you can kind of read the room like we can with the Fed here on more dovish or hawks on the BOJ?
Well, so there's one concern that Takaichi is, because he's known as dovish, that there's passive pressure on the BOJ. I don't really see it that way, because looking at the tone of her recent comments, it's actually a bit more nuanced. So there's no explicit, well, definitely she's not been advocating for aggressive rate hikes. But also there hasn't been any explicit pressure on the BOJ. I think she prioritizes the independence of BOJ. If anything, it's the BOJ that might choose to move rather slowly.
Okay. One of the things we've paid attention to, and anytime this bubbles back up, there's a lot of attention on, is the yen carry trade. What should we be watching on that front here in the U.S. right now in terms of how the strength of the yen currently?
Well, so actually actually, the yen has not been strengthening in my opinion. Rather, I think it's weakened a bit in recent weeks. And I think because the yen is pretty much the only currency currently that's, where the real interest is still firmly negative. So, that means generally there's a downward pressure on the yen. And also, if you look at the balance of payments or current account balance of the country, there's no really, strong demand for the yen. So I've been, talking about yen's weakness to continue for some time.
Okay.
But that does not mean it's going to weaken a lot from here further.
Okay, so let me ask you this. I also know that you have some picks that would be on your list. So where is there opportunity that you're seeing, especially in individual names, where investors here could gain exposure to Japanese companies?
So we primarily invest in Japanese global companies and companies with wide economic moat and sustainable long-term earnings growth. And so, for one, we're invested in 7 & I Holdings, which is a 7-Eleven convenience store operator. Now, we know that same-store sales trend in the U.S. as well as in Japan has been quite sluggish. But that's all the more reason that we are actually excited about the long-term outlook is because recently there was a CEO change, and that management is now taking a new step in the right direction. If you recall, there was a Couche-Tard merger proposal, and that was withdrawn a couple months ago, and the stock price dropped. But it did not drop nearly as much as feared. And that's because the company is now being under tremendous pressure, getting their act together, and really trying to globalize their franchise going forward. And it's it's a pretty attractive business model as a retail format.
Okay, any other on your list that you want to highlight really quickly?
Sure. So Sony might be another example because Sony has now transformed into an entertainment conglomerate, and with a recent spin-off of Sony Financial Group, it's solidified as a pure entertainment player. So it's PlayStation franchise, movie, music, and anime now.
Okay, all right, awesome. That is Masa Takeda, portfolio manager of the Hennessy Fund, joining us here on the floor of the New York Stock Exchange. Still ahead, we bring in our panel to discuss the November consumer sentiment print, which came in at the lowest level in more than 3 years. That's next on the watch list. We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades.
I feel like Fridays be the best days.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Let me see if I see divergence on the...
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Nah, fool. They look like they might be reversing the whole damn trend. It's too early to say that, but today, they are going today.
Welcome back to the Watch List. Let's bring in our panel to discuss the state of consumer sentiment. Joining us now, we've got Mark Hamrick, Washington Bureau Chief and Senior Economic Analyst at Bankrate, and Sveta Kalinska, Consulting Founder and CEO of Rela Global. Thank you both so much for joining us this afternoon. Happy to see you all on a Friday. Mark, I'll start out with you because I have not talked to you in a long time. Normally we'd be discussing jobs this Friday, but that's not happening. We do have the consumer sentiment data. Weaker than expected, the lowest level in more than 3 years. What's your take on this?
Good to see you again, Diane. It has been too long. Can you blame consumers for having a rather downbeat feeling with the government shutdown being emblematic of dysfunctional government in the United States? And the real impacts that has on the economy, everything from food stamps to air traffic.
I told
and
y'all
of course,
about
less of an optimistic tone with respect to the outlook for inflation over the next year. You see where the damage has occurred, really where consumers are most downbeat is with the longer-term outlook, with expectations down 36% from a year ago. It's less of a hit with the current situation. So job market obviously at some risk here. We wish we had better data on that. And as you said, we're sort of driving in the dark, looking at the GPS and hoping we don't hit anything.
Okay, yeah, hoping we don't hit anything. It sounds like that sounds similar to what we heard from Fed Chair Jerome Powell, like driving in a fog, so you slow down. Sveta, I know you also collect consumer data. What does your data show in terms of like how this compares to this latest consumer sentiment data that we're talking about here?
High quality with our
Good to see you, Diane. Listen, the data tracks, and we see the same thing across the board. So when I analyzed the last 30 days of consumer discussions on social media, there were about 4 million posts that very clearly showed a pattern of economic anxiety that's very much tied to inflation and the overall cost of living. 33% of it was explicitly negative consumer sentiment as people expressed their frustration online. And listen, the core message was very simple and again tracked pretty much with what we saw today, which is prices went up and they just never came back down.
Yeah, okay, that's a great point, because one of the things I notice about the weakness in this report is, of course, it's clear that it's impacted by the government shutdown, but it's the lowest level since 2022, and 22 is when, Mark, you'll recall, we saw that high inflation, peak inflation around the time. The University of Michigan survey director is saying this, quote, consumers perceive pressure on their personal finances from multiple directions. They also anticipate that labor markets will continue to weaken in the future and expect to be personally affected. I'm curious to know, especially because Bankrate also collects data as well, what you're seeing on that front about either consumers or the job market right now and any concerns around that.
I can tell you we will have some data on the outlook for 2026 on the part of consumers coming up next month. Look forward to checking in with you about that, Diane. But you look across the landscape and it's hard to come up with solid reasons to be optimistic or to change the outlook to a more positive take. And I think that's essentially what consumers are feeling here. They would like to be relieved of the burden of inflation, elevated prices, the result of inflation. They wish that the risk and the reality of tariffs would go away. And so there will be a point, I presume, in the not-too-distant future where the government shutdown is resolved, and there will be some prices to pay from that, including the fact that federal workers need to be restored with their pay. And that's going to be a process. But even we get past that, we're still going to be dealing with this volatile environment, both economically and politically. Oh, by the way, we've got a midterm election year coming up.
Okay, yes, that's a good point. Sveta, I want to go back to you and get your thought on this. You talked about inflation and what you're seeing on that front and how it lines up with what you're seeing across different surveys, whether we're talking about this University of Michigan sentiment survey. I'm curious to know what you're seeing, if you're seeing data points on this yet, on how consumers are feeling about the upcoming holidays, which are coming faster than I think, well, at least I'm prepared for.
I did see that consumers actually discussed the holidays, of course, at a higher rate than in prior months as they were gearing up to spend some money when it came to holiday spending. One of the interesting things that I keep on seeing month over month, Diane, is actually that vehicles and anything related to vehicle conversations has been to go and spend money on new cars and new vehicles in general. And they were both discussed for commercial vehicles and for personal use as well.
Mark, I want to go back to you and get your thought on this. You know, we often have this conversation about the K-shaped economy, and I know this stood out to you. Households with significant stock holdings saw sentiment rise, supported by market strength. What do you think that signals?
This bifurcated economy is as significant as we've seen, perhaps. Obviously, we did see a big part of that during the pandemic, but think about the divide between those who own homes, those who have significant exposure to the stock market, and essentially everybody else who do not have those things. And so I sort of resist the characterization within the economy of the consumer, because we're talking about many millions of consumers and their results may vary. And so, you know, the National Retail Federation came out with a prediction this week that essentially holiday spending should rise. Let's just put it in the middle of their forecast, about 3.9 or 4% year-over-year basis. Well, you adjust that for inflation, and that's, you know, very minimal increase. And so we know that wealthier individuals have accounted for about 50% of consumer spending. They'll again do a lot of the heavy lifting during the holiday shopping season, and then essentially you'll have the have-nots just struggling to make it.
All right. It's certainly a worry, I know, for a lot of people. We'll have to leave our conversation there for today, and hopefully we get some economic data sooner rather than later from the government, provided the shutdown ends soon. That's Mark Hamrick from Bankrate and Sveta Kalenska of Relo Global. Thank you so much. And that's going to do it for us on the watch list. Download the free Schwab Network app. It's in the App Store. Tune in 24/7 on SchwabNetwork.com. I'm Diane King Hall. Thank you for watching. You've got Market on Close with Sam Vadas and Marley Caden up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Vardas, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll be joined by the CFO of AvePoint to discuss the company's latest quarter that has the stock under pressure and hitting its lowest levels in over a year. Later on, we'll be joined by the CFO of Herbalife after its latest quarterly report and what lies ahead for that company in 2026. And in Options Corner today, we'll check in on NVIDIA, which is down about 9% this week. We'll break down the technicals and look at options trends later in the show. But for now, Marley, take us through what you're watching today.
Well, of course, this Tesla announcement that Elon Musk has a chance to become the first trillionaire in history. Tesla shareholders approved his potentially $1 trillion pay package, but he'll have to meet some very ambitious milestones to get that full amount. We'll tell you the details and discuss some other major announcements that Musk made coming up. But Expedia shares are soaring today after reporting a third quarter earnings beat and offering a strong sales forecast for the final 3 months of the year. The company grew room nights in the U.S. at the fastest pace in more than 3 years, while delivering its 17th consecutive quarter of double-digit growth in B2B. And Block shares tanking today following weak third quarter results that missed Wall Street estimates. We'll break down that full report in just a minute. But first, let's take a look at where the markets stand as we head into the end of the trading day. We are seeing a bit of a mixed picture here. We are still down on the S&P, but considerably better than earlier at 67.17. NASDAQ down 0.5% at 25,005. But the Dow and the Russell have since moved into positive territory after reports that Democratic leader Chuck Schumer is offering a new plan to Republicans that will allow the U.S. government to reopen since the shutdown. This proposal calling for Democrats to agree to pass a so-called clean resolution for short-term funding. It would agree to a 1-year extension of existing enhanced tax credits that are used to reduce the cost of health insurance purchased on the Affordable Care Act marketplaces. So that's just breaking right now, but we are seeing the market reaction in real time. The Dow now trading close to a 10th higher at 46,949. And the Russell 2000 also reversed its earlier losses, now up about 0.5%. U.S. dollar trading down 99.48. Gold, though, higher above the 4,000 threshold at 4,011. Crude oil also rising 59.84. That's up about 0.7. And Bitcoin making a gain here. They were down to 101,000 last I looked, now above 103,000, up about 2.5%. Now, Sam, what is catching your eye today over in New York?
Well, that deal that you just talked about to potentially reopen the government, no doubt will be music to some people's ears because we've been tracking those travel disruptions ahead of the weekend. Hundreds of flights have been cancelled, thousands of customers affected as a reduction in flights across dozens of airports did take effect today. And we're talking 10% across 40 airports. This comes as the longest government shutdown in history has been dragging on. And airline stocks, interestingly, have appeared to be taking this in their stride today. And analysts have been sort of pointing to the shutdown in late 2018 when travel disruptions actually led to a reopening. So Transport Secretary Sean Duffy saying today an end to the impasse wouldn't necessarily restore things straight away, as it will take time for those air traffic controllers to actually return to work, adding that flight cancellations could rise to 15% or even 20% if the shutdown doesn't end relatively soon. So certainly tracking developments on that front given that breaking news. The government shutdown has also been weighing on the minds of consumers. The latest survey out of the University of Michigan, I should say, showing sentiment at its lowest in nearly 3 years. Now, consumers are expressing concern about the potential negative consequences on the economy from that shutdown on top of the elevated prices and job worries they already had. It caps off a mixed picture for the economy this week as the markets digest a batch of non-top tier reports in the absence of that official government data. But I'll send things back to Marley for now, who's with Jenny Horn in Chicago with some of today's top news.
Thanks so much, Sam. Yes, like you mentioned, Jenny Horn, co-host of Next Gen Investing, joining us here in studio to talk about some of these big movers we're seeing. Let's start with the biggest, Expedia, the top performer in the S&P 500 today. New all-time high, showing high travel demand and stronger than expected results.
Yeah, and I mean, only seeing this move today fueled by the overall markets making a stellar recovery here. So it's looking even sunnier right now as things have only firmed up throughout the session. Earnings did come in widely ahead of expectations, but the company did say travel demand was strong. And I thought very important they mentioned, but not just for these richer customers. So we did see a 12% increase in their gross bookings, 9% rise now in revenue from a year ago. and also did see booked room nights climbed 11%. That was the fastest growth we've seen in the U.S. in more than 3 years. These results, though, per their CEO, they said reflect an improved demand environment and disciplined execution. Their business-to-business segment delivered standout performance, 26% growth. Business-to-consumer segment rose about 7%. And total gross bookings also were higher than what we saw a year ago and higher than expectations. So additionally, outside of all of that good news, they repurchased $451 million worth of shares during the quarter. They declared a 40-cent per share dividend payable December 11th and increased their guidance from earlier estimates, now calling between 6 to 7% growth for their revenue. I mean, there was so much to like, especially because as we see, macro U.S. lodging data has been very soft and I think very concerning as of late. This really bucks that trend, but also speaks to the fact that consumers are still deal hunting, and that's typically why you book through an OTA like Expedia.
Yeah, certainly. I mean, a strong performance, up 20%. This adds now to their gains, up more than 50% on the last 12 months. Now, I want to move to a company you are very familiar with because you are a fan of Monster. Monster Beverage up 5%, posting double-digit gains in sales for the latest quarter as more people want energy drinks.
As they should. I'm here to be the voice of support for the energy drinks. I feel like there's so much stuff right now online about like your health and being chemical free. I'm here to be pro the energy drinks. So also helps that we are making a pretty decent move today in Monster, which frankly has been in a really nice quiet recovery this year, now up almost 33% on a year-to-date basis. And I will say, staples, while they have not at all seen resiliency, Monster looks pretty good here. So double-digit gain in sales for its latest quarter, also highlighting that increased demand for energy drinks, saying that the global energy drink category remains to see robust growth and has also remained healthy. While a growing number of households are buying energy drinks on a regular basis, to right now see a degree of actually price safety because this is cheaper than perhaps going out and shopping or using your local Starbucks. But coffee, they mentioned as the standout, is becoming really expensive. And I mean, we talk about some of the prices of like Starbucks that they're dealing with. It frankly is. And you can tell, obviously, my bias. I do purchase Monster energy drinks on a very regular basis. But profit came in well ahead of expectations, also signaled growth on a year-over-year basis, and also did say they're, again, specific to their drink segment, climb 18%. We've also seen sales of their strategic brand segment, which includes brands acquired from Coca-Cola. Those actually rose 16%, while Monster's alcohol revenue was a laggard, falling 17%. And yeah, not worth trying. I've had it. It's not good. Stick to the non-alcoholic Monsters. That may be too many chemicals for even me.
And that's following sort of the more broad trend that we're seeing where a lot of the alcohol sales are falling off as people move into more health conscious or other alternatives. But I was also really struck by that coffee comment. He said, the CEO said coffee is becoming really expensive and energy drinks are seen as a more affordable alternative. I don't know how we got to that point.
Like, I don't know either. And I know, like, to me, this is a vice type of like habit-forming consumerism, where if you have a habit, you're probably going to figure out other ways of your life to justify that habit. Like, to me, there will never be, I should knock on wood, there will never be a price tag on Monster that has me trading down to, like, the other brands. But obviously, that's my loyalty. I think also if you're a coffee loyalist, to his argument, I kind of disagree with that. I think you're probably still drinking coffee and scoffing at me and the energy drink consumers.
Perhaps, but there's no argument that coffee is too expensive for what it is. Coffee should not cost $7.
It shouldn't.
It shouldn't. Let's move on to Block, one of our worst performers on the S&P 500 today. Down about 6.5% right now, was down a lot more earlier following a weak third quarter.
Yeah, I mean, we saw revenue that rose, 2%. That missed consensus. Net profit did improve on a GAAP basis, but operating income fell short. Adjusted earnings also missed. So I think that anytime you're looking at earnings, we talk a lot about what worked, what didn't. This was a clear miss across its headline numbers. But Cash App, I will say, saw its gross profits jump 24%. That was a sharp acceleration from last quarter, driven by this 21 basis points improvement in a 134% surge in their borrower originations, which I thought was kind of interesting. Now, Square's performance as a namesake also was softer. Gross profit rose about 9%. GPV was up 12%, just slightly ahead of forecast. But the margin drag from higher processing costs, which are tied to a new partner deal, really continue to bite. But right now they're trying to find some of this strength within their other products to offset that weakness. So they do seem to have at least a handle on some of the more weaker aspects of this report. But what was the most interesting takeaway, bar none, was the fact they reported that their G&A costs rose 14% on a GAAP basis, which is kind of a lot. So that was because of a one-time $68 million company event that actually, if you strip that out, it would have been basically breaking even with last year. But if you consider that their headcount of their employees was just around 11,300 through the end of last year, that means that this event cost roughly $6,000 a head per employee. That is insane. And, I mean, a concern. I know the company has a decent market cap, but I mean, I want to know the details of this event so badly.
Yeah, there is probably a lot of shareholder questions happening right now about what sort of event has a price tag that high, and is it warranted to then have a reaction to this, to earnings? But I do want to move on to Tesla, the story that unexpected story for me. Frankly, I thought with all the naysayers coming out that I was not sure that this pay package was going to get approved. Certainly not with the approval rating that it did for Elon Musk at more than 75%.
I know. I mean, this was not even close. And I mean, back in 2018 when they voted, it wasn't even close either. But I do think, consider sample size is how I look at it. You have shareholders voting on this. So I can assume if you're a shareholder, you're probably a very heavy believer in Elon Musk, or else why do you own Tesla shares? I mean, he is truly, I'd say, almost synonymous with Tesla brand itself. So I get why his believers are approving this. There are some major stipulations of the package. So the package is not equity-based, or is equity-based, not cash. Musk earns a $0 salary. It's worth up to $1 trillion in 10 years. That would be the largest core CEO compensation plan in history, and by a lot. But the key milestones to be made, of course, we know Tesla must achieve both operational and market cap goals, growing Tesla to $8.5 trillion within the decade. So production targets must deliver 20 million vehicles, deploy 1 million robotaxis commercially, deliver 1 million humanoid Optimus robots, and achieve 10 million active full self-driving subscriptions. These are big targets. This is not something that's going to happen tomorrow or even in the next 3 years. I mean, these are huge targets. So Musk currently owns roughly 15% of Tesla. This package will increase his stake to 25 to 29%. So that gives him a stronger voting control. And I think that that's exactly what he's after. I think that the $1 trillion figure you see in the headline doesn't speak to some of the achievements Tesla has to make before he obviously is paid out. So perhaps that's also why there's this overwhelming approval. It's like, hey, if you're a shareholder of Tesla, why wouldn't you want this company to achieve these very lofty, very ambitious goals as you go forward into a more robotic and AI-focused world?
And this is certainly one of the most motivated that we've ever focused that we've seen Elon Musk in a very long time. So, and rightly so, $1 trillion is a lot of money. But Jenny, thank you for being with us. Tesla reversed its earlier losses. They're up about 0.2%, but we appreciate you breaking down those headlines for us. That's Jenny Horn, co-host of Next Gen Investing. And I do want to send it back over to Sam in New York to hear what we have coming up in the show.
Thanks, Molly. We'll discuss the state of the economy, look ahead to the Fed's December meeting, and even check in on the Chinese economy. Market on Close. We'll be right back.
Hey, investors, you know the market moves. And Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Vardas on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. Let's just check in with a quick market update. About 44 minutes to go in the session because we actually have seen things turning around. So we are off the session's lows. We've got the S&P 500 just on the line to the downside. We've reclaimed 6,700 right now. We've got the NASDAQ also off the lows here at about a 0.5% lower, 24,990 points. And we do have the Russell 2000 and the Dow Jones in the green now. And this coming off the back of the headlines that we've been tracking about the potential for the Democrats to now offer to reopen the government if healthcare subsidies are extended for a year. So that is one of the headlines that we're seeing coming across in the last hour or so. Maybe a catalyst for a little bit of upside here as we are now seeing things turning around from the start of the day when we were very much seeing tech under pressure, the AI valuation conversation continuing, and obviously we got some more data out this morning, the University of Michigan with consumer sentiment that's deteriorating. The US dollar has been backing off today. We've seen some euro strength coming through. We're at 99 right now, so off the multi-month lows that we've been seeing this week. Crude oil ticking higher. We're still below $60 a barrel. But plenty of moving parts for the energy complex right now, geopolitics and also data. Bitcoin is catching a bid now. Remembering it actually fell through 100,000 earlier this morning, but it's now picking up steam, and we're at 2.5% higher at levels of 103,000 right now. So as we've certainly seen this risk off in tech, we have seen Bitcoin very much following suit, but we are seeing things turning around now for the cryptocurrency. The 10-year yield off that 416 we'd seen earlier in the week, it dipped at around 408 or so in the session this morning. We're now at levels of 410 on the benchmark as, of course, we continue to pass over a number of Fed speakers, commentary, and also some of the data we've been getting. Not top tier, but certainly some of the other points that have been indicating some softness there for the consumer. Technology still under pressure right now, 0.8% lower. However, off the session's lows, as I mentioned, communication services also underwater. But we do have very much a rotation today into some of the defensive names, the cyclical names. 0.3% higher in consumer discretionary right now. Consumer staples also higher. And here are the rest. Actually, we do have green arrows across the board for utilities, real estate, industrials, materials, and energy, which are both higher right now on the session. So we did see a bit of a mixed picture across the sectors, but we are seeing more green now. And here's your mega cap tech. It's been a bit of a mixed performance, actually. Apple was the only bright spot this morning. Now it's Amazon, but we do have Nvidia lower. It was much lower earlier today, but it is now just 0.7% of a decline that we are watching. Microsoft lower, so is Meta, and Alphabet is the laggard on the session, 2.5% lower. All right, let's bring back Marley into the conversation and bring in our next guest. That's Rita Jansen, economist at Kepler. Thanks so much for your time.
All right, y'all. I think the market might want to pull back, though, right here.
News of the hour, and that is, of course, that we're seeing the potential for maybe a deal on the table. At least maybe they can hammer out some of their differences here.
Like, I'm dead serious.
Government shutdown
we
to
caught
end.
the bottom of the SPY.
The
SPY went
is this to get this solved right away?
662.
I think it becomes more important as the shutdown continues. It's our estimation that you're looking at roughly
that means
a 0.1 percentage point cut to GDP per week that the government remains closed. So again, as this kind of shutdown continues, you kind of see a building impact on the U.S. economy. 4 weeks ago, impacts were pretty limited. The impacts now are becoming more noticeable, and of course, you see this showing up not only in places like food benefits, but just ability to fly, right? So I think the pressure to get some kind of agreement done here is definitely rising, and so we'll have to monitor it over the weekend, I think.
And Reid, I saw that you're forecasting for U.S. growth to finish around 2% this year, assuming that we don't have this ongoing government shutdown. How would you describe the health of the economy right now?
summer, we were a lot more pessimistic on the outlook for the U.S. economy. You had tariff issues, you had concerns around a declining labor force. We've seen a lot of resiliency. Q2 was pretty strong. We saw a stronger than expected consumer that will likely continue into Q3. And so our expectation is kind of, focused on that 2% level. That's in line with the historical trend. Important to keep in mind, though, that the U.S. economy right now is very K-shaped. If you're in the top 50% of American households, you own a lot of assets, you own almost all U.S. equities on a percentage basis, you're feeling okay, and you're spending through the inflation. The bottom 50% don't own a lot of assets, don't own a lot of equities, higher structural inflation from last decade, not feeling so good, right? So I think it's important to keep in mind right now that top line, the U.S. economy is doing pretty well. That top 50% is really driving that consumption growth. But the bottom 50% of American households not feeling as good right now.
And just switching gears to the second biggest economy in the world, and that is China. We got some pretty ugly export numbers out of that country last night. And that certainly raises some concern because very much the outbound shipments have been sort of seen as the last leg that China has left standing on right now. I see that U.S. exports were down 25%, while the rest of the world was up 3%, which just goes to show that demand is not enough to fill the void left by America. I'm just wondering, how significant that is as far as what you're seeing as we now enter next week, where there's going to be a lot of focus on some of those Chinese earnings from the favorites, Alibaba, JD, Tencent, Bilibili, and
Amazon went green.
It's been really important, and the Chinese this year have gone back to the model that we have seen them play out over the last decade when they're having growth problems, and that is, extend credit to the economy. Most of that flows to the investment side, and in this cycle, that's been manufacturing investment and infrastructure at the expense really of domestic consumption. And this has really led to a large surplus of output, right? And net exports this year, despite the weakness, maybe a little bit weaker number we saw last month, the net export growth figure out of China this year has just been eye-opening, right? Even with the step up in U.S. tariffs. And so I think when you're looking at the Chinese economy right now, it's highly imbalanced, it's highly reliant on investment, and it really depends on demand from abroad to continue driving towards that 5% growth target. And so if I'm looking at China right now, my view is they will find a way to get this excess production into the international market. They may need to use pass-throughs or final production in alternative countries if they're trying to get volumes into the U.S. But China's really doubled down on this investment-led growth model this year.
So if China can fix its imbalance by fixing the demand picture, but we know that Chinese demand is softening, what does that mean for global commodities in the meantime while they're potentially looking to fix this imbalance?
Well, I think just focusing in on the oil piece in particular, I think folks often think, when China's stimulating, which is what we're seeing right now, you tend to see an impulse towards higher demand growth in China. Ironically, though, a lot of this investment in China right now is going to EV production. We've seen a huge build out in EVs in China, and it's actually limiting future oil demand growth there. And so I think when you're an analyst looking at the market and specifically looking at the Chinese economy right now, you need to be careful how you consider what has historically been, again, more domestic credit in China is going to lead to more oil demand. Not necessarily true this time around.
Yeah, and I've just seen also that iron ore is seeing its biggest weekly drop since February, which certainly mirrors the disappointing or at least surprising contraction in Chinese exports as we look across the energy complex. And, Marley and yourself obviously raise a really interesting point about crude. I'm just looking at, some of the soybeans, but also some of the conversations around rare earths as well. And, the Trump administration also talking about how copper, silver, and uranium are the sort of new rare earths as far as what they see as strategically important right now. How you're looking across the entire commodity space and what is really driving the biggest narrative in your mind?
it really depends on the sector you're looking at. If you want to focus in on precious metals, it was the debasement trade. There may be some shift away from that now into the end of the year. Maybe that debasement trade has shifted to equities, not sure. I think when you're looking at iron ore, probably coming under pressure here into the end of the year, especially if China does struggle to get its products to market. And of course, the domestic property markets very much struggling from here. However, I think one area of strength will be diesel markets in particular. So if you want to play the bullish side of energy markets right now, those Ukrainian strikes into Russia are actually restricting Russian diesel flows into the international market. And so I think if you're looking for some areas of strength, global refiners could find some strength, especially across that diesel production side of the market.
And Reed, thank you for being with us today. That's all we have time for, but really compelling stuff there. Thanks so much. That's Reed Ianson, economist at Kepler. And coming up next, we're going to be joined by the CFO of the software company AvePoint after its latest earnings that has shares under pressure today. Market on close. We'll be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better.
Yeah.
Same goes for where you invest.
Huh?
Level up and invest smarter with Schwab.
Market on close. I'm Marley Caden alongside Sam Bonnet in New York. The government shut down in its 38th day now, which of course is the longest shutdown in our history. Coming off of reports yesterday saying that the wheels came off during bipartisan talks, and Senate Majority Leader John Boone said that they would work through the weekend on ending the shutdown. But we are just getting breaking reports that Democratic Leader Chuck Schumer has proposed a deal for Democrats to agree to pass a so-called clean resolution that would supply short-term funding if Republicans will agree to a separate one-year extension of existing enhanced tax credits meant to reduce the cost of health insurance, reportedly, for the Affordable Care Act. Now, details still coming out about this. This is a breaking story.
I went
we thought we might take a look at how the shutdown is affecting everyone right now. Of course, these FAA cancellations,
because it was moving just like the spine
across the nation, reductions at 40
bro, I'm screaming
airports.
the whole
We've got
time.
fatigue plaguing
The
air
market
traffic
is
controllers, all
screaming
who haven't been
bullish
paid since
divergence
October 1st.
right
Just today,
now.
we're seeing a 4%
The market,
reduction at
listen,
those airports.
the market is
It will
about to
be
retest
6%
right
by
here.
November
Listen, look
11th
at this
if
chart.
the shutdown is still
the
low
market
at
is
that point
retesting
could be 10%
right here.
if it
This
continues
is a
through
retest.
November 14th. So many people already being affected by this, but as I said, there is some breaking news that the Democratic leaders have offered a potential
Facebook
plan to
is
Republicans
ripping.
to extend
Meta is
healthcare tax
ripping.
credits for 1 year.
This is a
but
trend
that vote
reversal
has
of the
not
market
happened,
right
and we
here.
do not have a time on that yet, but we will, of course, keep you posted if that changes. With
Yes,
that, I want
the
to send
whole
it back over to
time.
Sam in
From
New
right
York.
here, I caught the bottom of this shit.
Thanks so much for
Right
that,
here,
Marley.
I
Let's
told
turn
you
our
I'm still
attention now
holding
to
the
Ad
market
Point.
call. I was
Shares
holding
are under
Archer the whole
pressure after
time.
its latest earnings report, which saw them topping estimates and raising sales guidance for the full year. So joining
This
us
red
now
right
to
here?
discuss that report and the company is Jim Cassie, Chief Financial
This
Officer
this
at Ad
red
Point. Thanks
is
so much for
them
your
trying to
time,
scare
Jim.
people
Happy
out.
Friday
They
and
bounced off the
congratulations on the
sloping
report.
support right
Just
here,
give us
bro.
a sense of
All
what
this
Ad
was
Point
bullish
does, how you fit
divergence,
into
crazy.
this entire AI
The market is still
ecosystem.
going up.
Great. Nice to see you,
Still.
Sam, and thanks for having me. So AvePoint is really
They
the
try to
global
scare
leader
people,
in data
but the
security,
market is
governance,
crazy bullish
and
right now.
resilience. We really help enable our customers really safely take
This?
advantage and leverage AI. So that's kind of how
Bro,
we fit
that's
into
them
the
bouncing off sloping
really the landscape
support.
and where we're headed with AI.
Yes.
Okay.
Yes, I held through
Total
that shit.
revenues
Everybody
for
held through that
Q3
shit.
were $109.7 million, up 24% year over year, actually above the high end of your own guidance. So no doubt you were surprised
Yes,
there.
everything
What
is going
drove that?
crazy.
Yeah,
I
again,
told my
customer
mama, and then
demand, key focus.
King Tucky
We had
came
a
in
really
here.
strong performance for the quarter, both in revenue, in new customer additions, expansion with customers.
Wow.
So really good demand across
What
the
are we doing,
globe.
Options Corner standing up?
We play in all three major segments of the globe: North America, EMEA, and APAC. All grew
Yeah,
over
bro.
20% in terms of
So just
year-over-year
like
growth.
Tucky said,
So we saw really good demand
I
for
want to
kind
get
of our
some.
governance and really data
I
security
want to get some
products. As
a
again,
World
people
Liberty because it's
look
only
to
10
enable
cent.
AI,
I'm about to
and
load
I
the
think
boat up.
that's where we can really help them.
Can you give us a sense of, some of your clients, or at least if
It's
you
a
can't give any
crypto.
names,
It's only
the
10 cent.
sectors that you help?
At the
Sure.
he's in
I mean,
at
the
the
beauty
bottom.
of
I'm about to get
AvePoint
into
is
it
that
at the market window
our
because that
solutions
shit
are
is
really helping
it's showing
customers
bullish
across
divergence
all
today.
industries.
It
You
looked
know,
like
it
the
used to be
side.
just highly regulated industries. We're concerned about data security, governance, compliance.
I know,
But
bro.
as I'm
You
sure
be
you're
treating
well
me,
aware,
bro. I'm trying to
every
be here for you, though, bro.
company today is very concerned about data security,
I'm trying to be
particularly as
here
they
for
look
you,
to
though. You
adopt
get me?
AI. So what
Yo,
was
bro,
once
telling
a
me,
more highly regulated
yeah, it's time to
industry
rack up on these
focus
and
is
disappear
now
on everybody.
literally every industry,
And
every
take front with
company,
you,
large
yeah.
or small, that is, number one, has concerns about data
And
security, but is also a
take
potential
fraud and
customer
have
for
me with
AvePoint.
you,
So it's great
yeah.
opportunity for us and great demand.
Okay, you're listed on the NASDAQ, but I
Frost gonna
also
be the
see
butler,
that
boy.
you've
Watch what I
announced
tell
a
you.
listing on the Singapore Stock Exchange. When do you anticipate to do that, or have you already done that?
We actually, in Q3, we've had a long-standing relationship with Singapore. We first established a presence back in 2009, and more recently, it's become our kind of Asia headquarters and also our international hub for R&D. So we've had this very strategic relationship with Singapore, and then it was just a natural extension to continue with our success on NASDAQ in terms of our listing back in 21. That we felt that this was a great opportunity to extend our global presence and continue to enhance our reputation and image in the region and list on SGX. We've often talked about, meeting customers where they are in their kind of digital journey and their transformation, getting to AI. And this was another way for us to meet our potential investors where they are. And so we're really excited about the opportunity. And so far, it's been a great partnership, and we're excited to be on the SGX as well as NASDAQ.
Yeah, I also have a relationship with the SGX. It's where I called home for the last 4 years of my career. So that's an interesting take. And so I just want to pick up on that as to what sort of demand you're seeing from some of these international markets, most notably out in Asia. What are you seeing over there versus what you're seeing, for instance, here?
Well, it's a great point. And APAC is actually our fastest growing region. So it's smaller than EMEA and smaller than North America, but it is our fastest growing. And we have pretty good diversity across all three of the regions, where North America still represents our largest piece at about 44%. EMEA is about 35, and the balance is in APAC, which is again the fastest growing. So we see really a bright future, not only in regions like Japan, but obviously Singapore. Australia is a key market for us, and then even up and coming markets like South Korea. So there's great opportunity in all parts of the world, but in particular in APAC as well.
And what's next for your company? Have you got anything in the pipeline? Because you've got some interesting research that you have actually done yourself about how, in fact, some of these organizations are pulling back or at least delaying AI rollouts because of some of the governance concerns. I'm just wondering what you can do to sort of speak to that in particular.
Yeah, it's a great question, and appreciate the plug. We actually just recently published our annual survey, essentially on the state of AI, and there are lots of takeaways in that survey, a lot of statistics that are really important. But the one that probably resonated the most with me was that about 86% of those respondents, and there were about 775 respondents, and literally they were small companies, large companies, and all across the globe. But the consistent theme was that about 86% of them have delayed AI rollouts up to 12 months because of their concerns around data security and governance. And so obviously that plays right into our wheelhouse in terms of what we're helping customers really deal with. And it makes sense, right? That if you're going to have agents in particular combing through your data, that data needs to be secure, number one, and it needs to be properly governed so that the access to certain information is properly restricted and not accessible to anyone or any particular agent that may not need or should have access to that information.
All right, Jim, it's been an absolute pleasure. Thank you so much for joining us here on Schwab Network. Happy Friday. Have a great weekend, and we'll talk to you next time. Jim Cassey, Chief Financial Officer at AvePoint, joining me there. I'll send things back over to Marley in Chicago.
Thanks so much to Sam and Jim for that. Coming up next, we've got Options Corner. Rick Ducat will join us here in our Chicago studio to take a look at NVIDIA, as shares have now fallen almost 8% this week. That's next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Shares of NVIDIA are down about 8% on the week as the rest of the overall market has lagged. Comments from CEO Jensen Huang earlier this week spooked investors when it was reported that he said China is going to win the AI race with the U.S. He later clarified his comment, saying that he thought that China has very good AI technology. Now, it's time for Options Corner. Of course, NVIDIA is the focus. Joining us, our lead market technician, Rick Ducat, here to take a look at NVIDIA, some of its recent performance, and some of the technicals here as well. I was just mentioning it's under pressure along with the broader market this week. But as we look at NVIDIA, against the market and also the semiconductor space, how is it stacking up?
Kind of in the middle of the road, the pack rather, I guess you could say. The semiconductor sector has been kind of the strongest of the strong for a while, but NVIDIA, which was once such a big outlier, has now kind of come back to earth a little bit here. You can see it's up a little less than 26% versus the SMH, which is up about 32%. If you were to look more specifically at the direct competitors to NVIDIA, Broadcom, AMD, Intel, Taiwan Semi, they're all doing better. They're up 44 to 88%. NVIDIA is down here 25%. The beleaguered Qualcomm is the only one who's kind of below at about 1.6% down on the year here. But, it's been a not very good week for this whole space here. Another story that caught my eye, OpenAI CEO Sam Altman had to clarify that he didn't want government bailouts, basically, if things started to go poorly for OpenAI. And, remember, too, Jensen Huang, He's saying these things about the AI race. He also wants to export the chips to China. It's kind of a grain of salt type of thing to consider these comments with as well. If we were to look a little bit more specifically, though, at this chart, our candle chart here, we can see that our white trend line here has been fairly consistent for the past couple quarters here. That's about where we bounced here today in terms of our opening price. We did make some intraday lows beyond that, but rallying a little bit here as we conclude what's been a bit of a rough week here. Crucially, we did not test this 177 level, these old lows that we established here from a few weeks ago. We are holding on above 185 as well, which was the ceiling from this period. We since breached it, but recovered back above it here, still off significantly from those old highs near 212.19.
Barely holding on to that 185 line right now, trading at 186.99, 98, moving around, right around there, but barely off that line. As we look at some of the trading action today in terms of the options activity around NVIDIA, knowing it's been a bit of a rough week in the space, what's it looking like?
About as heavy as you can get in the stock market for options trading. At the time I checked, it was over 4.7 million contracts changing hands. Extraordinary numbers here. 65% or so were calls. Sizzle 2.0 at the time I checked, so heavier than the 5-day moving average. If we were to consider looking ahead, our November 21st expiration here, about 11.2% expected move plus or minus, so it's moved a little bit since I set this up here. But still, generally speaking, that's about where we would expect things to go based on the options market. Notice as well that lower end lines up very closely with the 165 level here, a notable low point, a high point before our gap, and then another low point here. So that kind of stands out to the downside here. To the upside, 207, pretty close to the +1 standard deviation channel. So that gives us at least some rather larger extreme ranges to consider in the coming days here for what's been a rather interesting week, to say the least.
It certainly has. As far as open interest goes with calls and puts, how are we seeing that weighted? It's been under pressure. So, I'm imagining we're seeing some put action maybe a bit more than normal.
For sure. I mean, the month of NVIDIA is much larger than the total open interest for all the dates of expirations possible for many other stocks here. But what stood out to me for November, on the call side and the put side, the 180 strike is the most active. So that seems to be one really important area based on that options market to consider here. You can also see, too, that we saw some pretty notable trading activity as well across the board here. But what really caught my eye was some very long-dated options. There was minus 29,836 January 21st, 2028, 300 calls. They sold these at a $23 credit here, a $68 million credit received for this opening trade. Really huge numbers.
That is a huge number, and their earnings will be inside of that window. So a very interesting trade there. Thanks to Rick Ducat, our lead market technician, for joining us for Options Quarter to highlight NVIDIA today. I do want to send it back to Sam, though, and find out who we'll be talking about for overlooked stocks.
Thanks, Marley. Well, Alex Coffey has his eye on JFrog today, heading into the close as shares have rallied to a more than 4-year high. He'll break down the news and what you need to know about JFrog coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
How's it going?
First day, so...
Sometimes, you know...
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Bartis, live from the floor of the New York Stock Exchange. It's now time for overlooked stocks. The shares of JFrog are rallying after its latest earnings report, where it topped estimates on the top and bottom line and raised guidance for the full year. So I'm joined by Alex Coffey to get us across this one, host of Next Gen Investing. So JFrog leapfrogging today off the back of this earnings. Talk us through that report and just the sort of moves we're seeing in the stock today.
Yeah, incredible run here today, Sam. Now, most of this move did happen after the close yesterday in response to earnings, as you said. But for those unfamiliar with JFrog, it's a leading DevOps and software release automation tools provider. So its main competitors are kind of in the GitLab space, if you're trying to think of any. But when you look at this company, it's up 25% here today in terms of where it closed yesterday. Again, much of that in the first few minutes post these earnings releases hitting the news wire.
And you put me to work, though.
Revenue grew 26% year over year to $136.9 million. That was ahead of estimates. On the cloud revenue front, it was up 50% year over year, now accounting for 46% of the total revenue. Adjusted EPS beat the estimate and was higher than last year as well. An adjusted basis, 22 cents per share. Now, they are still losing on a GAAP-adjusted basis, but on a non-GAAP diluted EPS front, as I provided that 22 cents. Operating cash flow is $30.2 million. Free cash flow is $28.8 million. And then cash and cash investments. So how much they actually have available in cash, up 39% as well year over year to 651.1. Now,
whenever we're talking software, Sam, it's important to get into these metrics when it comes down to what are the customers, what is the makeup of those. So they now have 71 with annual recurring revenue over $1 million. So these are the most important but hardest to sign kind of deals within software. That's a 54% increase, though, year over year. Those with over 100,000 in annual revenue is 1121. That's up from 966 last year. So a lot of impressive things, record type, quarter for the company.
Yeah, and I mean, it seems to be doing something right, because even before this rally that we've seen today, it was actually quite on a run. I mean, as far as their year to date, I mean, now it's
took some of their money and
I think about 100% on the year. So certainly impressive as far as the gains. And I've seen just across some of the analyst call sheets as well, it's earned itself off the back of this quite a number of price target boosts and upgrade here. KeyBank, for instance, I see Morgan Stanley also with a note out. The folks over at Oppenheimer as well. Can you just sort of talk us through what you're seeing there as far as the analyst reaction and some of the commentary that's coming through today?
Yeah, so first off, what I would say is this isn't obviously the biggest company in terms of, it is still almost a $7 billion company after this move, but it's not NVIDIA, it's not Microsoft, it's not Meta, it doesn't have the same level of analyst coverage, but there are still 19 analysts compiled by Bloomberg that do provide coverage for JFrog. 18 of 19 are in a buy-equivalent rating camp, with just one lone hold being Piper Sandler. So Piper Sandler has a $60 price target, which would be the street low, and that's still 50 cents higher than where we are now. From a street high standpoint, that actually comes from the update from Oppenheimer that you mentioned, where they upgrade the stock to outperform, and they have a price target at $75. They say that they're upgrading now, and it took too long to fully appreciate the differentiation and ability to expand this sticky customer base that JFrog has into emerging opportunities like AI models. So fascinating stuff on that front. I saw another commentary from Barclays calling this the largest beat in the company's history. So again, anytime you can say largest, best, record setting, it's important day.
Absolutely. I noticed some of that commentary as well. Alex, thank you so much for getting us across this name, JFrog. Leapfrogging today up 26% as we are closing out the session for this Friday. I'll send things back over to Marley in Chicago.
Thanks to Alex and Sam for that. We're nearing the end of this market session to close out our week. We'll bring in Kevin Green to break down the levels he's watching on the S&P 500, as well as today's action. That's next on Market on Close.
Yeah, it's probably like a quarter. It's probably less than $1 or so.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Bro, it's a service.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Yeah, we're about to put all that shit into the staples.
Sometimes, you could have done better.
I want to see about $7.
Same goes for where you invest. Level up and invest smarter with Schwab.
I love $5 done.
Morning movers bring traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning movers only on Schwab Network.
connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
US is fun.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support.
They got a little more bullet in it.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how
Well, I say I was
complex.
going to get liquidated, but I never even sold
Plus,
my
get
position.
24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you
I wish
covered.
I had some more money. I would have been printing today.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of
So I wish
change
I
in
had some
sales
more money.
based on their
I'll
guidance,
be
not the
printing
same
today.
rate of change on EPS.
Follow the big
Like even
headlines,
more.
live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for
What you
action,
mean?
we break it all down in real time with speed, accuracy, and precision.
Oh, I
think
did.
one
I
of
got
the
back
most
in the
important
archer.
things is you're making a
On
play
a
in a
longer play, but
risk-defined way.
it's a
You're
little
going
bit
into
farther out
earnings.
the money.
So that would be a further
So I'm gonna need
downside area to watch.
Smart
a
insights,
similar move next
actionable
week.
data, veteran
Like,
traders,
what I need right now from the market that I'm about to foresee is that they got to be bullish into the bill, be bullish into the after, and I need them to be bullish tomorrow, or I mean not tomorrow, but Monday.
So back here on Market on
That's
Close,
what I need
I'm
them
Sam
to do
Barnes
on
here
my
on the
archer
floor of the
play.
New York Stock Exchange alongside Marley
Yeah, they
Kagan
bullish
in our
right
Chicago
now.
headquarters. There's just a few minutes left in today's session for this Friday.
Like I had an
Nearly
archer
made
in
it
the money
across the
play,
finish
bro.
line. So
That
let's
went
just take a look at where things stand right
500%,
now
bro.
because we have seen somewhat of a rebound of recovery for stocks
I'll
late
take
in the
that money.
session to cap off what has been a
Yes, I
pretty
took that money.
bumpy old week, wobbling a bit, but we've got the S&P 500 now just on the line to the
I'm up
upside, and we've
50%
seen
okay.
the Dow Jones also turning into positive territory, the
Yeah.
Russell 2000. So on that note, let's bring in Kevin Green, senior markets correspondent, to help close
I
out
didn't use all
the
my
session as
margins
he
for that.
always
That was
does.
on
And
my
we've
margin
seen the
trade.
S&P
Because
500
I held
actually
archer, so yeah,
reclaiming
long.
6-7
Archer
as
at
the
80 cents right now.
say,
That
it
is
made
money
the
play. I was
2025 dictionary the word of the year. I'm not sure
That
what it
mother
means,
was
but
nice.
what
I
does
got
it mean
it.
to the market?
I bought that play at in money play at
Not sure
$12.
either, but we are seeing a nice little rebound.
I
here
told
in
everybody
today's
this is
session.
full
Actually, if you're
diversion,
looking at it,
bro.
we're going to see around
And the
let's
market
say
gonna
80%
take
of the
off.
stocks, close to 80%,
And the
76%
market went
stocks.
$10 after
The
that.
S&P 500 in the
It
green
was
so
bullish
far
the
here,
whole
and we
time.
did see obviously some red on the screen, but it is turning around. Not only the broadening out that we've been kind of talking about over the last 24 to 48 hours here,
Hey,
but you are
Kate,
starting to see technology
Kate.
getting off the mat, if you will. You are
Me,
seeing
I'm a
NVIDIA actually
fucking
taking a little bit of a
rockstar.
dip after testing around that $180 level, and now we are seeing it actually move a little bit aggressively higher here. If you kind of look at the levels from this morning, for the most part, we did violate that lower end of that range.
stop by
We
IWM
consolidated, we
call
started
is-
breaking a little bit
is
higher, and now we're above
break
the
even
6,600
right now.
and
I
6,700
should take that
area,
money.
and we're trying to proceed even higher here. I mean, we only have
That's
2
the
more
money
minutes left to
we
go
need
to
to be flipping
close,
right now.
but we obviously do see a little bit more of a risk on tone.
I'm gonna try to get a little bit more on
Kind of
both
looking at the
all
close
these
here,
plays I'm in right now. They
67.20 is really
crunching.
where I'm looking at.
Oh, my other money's printing. Oh, let's go. My good contract is printing. Let's go. Let's go, Archer. Let's go, market.
So far, and then maybe we don't see any type of move to the downside, but if you are looking at a downside move here or a pullback,
Bro, Archer is glitch, bro.
6,700 will be your pin risk area for today's
The market broke out.
Okay,
It's
so we
touching.
are certainly off the session's lows for this Friday. And the
It's
turning
literally,
point really
look at
feels
the market
like
literally
we've
going
got
crazy.
those, developments, or at least those headlines regarding the Democrats offering to reopen the government, or at least maybe a deal on the table around healthcare subsidies being
But
it's
nobody's
traded for
listening
1
to
year,
me
so we've
right
certainly
now.
been tracking
I'm in
the
the stream by
developments
myself.
around that. But as far as stocks are concerned, we have certainly seen a bit of a recovery. Even Nvidia has just picked up and popped its head in the sunshine now. So it very much looks like we have seen somewhat of a rebound for this Friday off some of the worries that had very much been weighing on the minds of investors this week with AI valuations and this U.S. government shutdown as well. Here's your bell. Now in positive territory to close out the session after being in the red for most of the day at 67.28. So we did see very much things turning around late in the day. The Dow Jones are also about 0.2% higher at 46,987. The Russell 2000 also taking part in the recovery and the rebound for these equities today. However, the Nasdaq still off the session's low, but not managing to just make it into the green today, ending the session down 0.3%. But as I said, well off the lows, as we did see very much tech under pressure today. Let's take a look at some of the sectors on the move as well, as far as how we closed things out, because it was a bit of a mixed start to the day. As we see here, as I mentioned, technology coming off the lows here, ending the session just 0.2% lower. So just some marginal losses there. Also for communication services, as we did see this sort of pick up late in the session. Consumer discretionary was higher by 0.25%. Financial 0.7% higher, and consumer staples was 1.5% higher on the day. We certainly at the start of the session, as we started to see some risk off very much at the index level, some rotation under the surface into sort of more defensive, more cyclical parts of the market. But we did see things certainly turning more into the green in positive territory throughout the course of the day. Utilities ended up 1.3% higher. So did real estate, materials and energy, both putting on about 1.4% respectively, and industrials ending the day up 0.6% as well. And as we take a look across some of the big companies, the Mag 7 as well, because we did see very much a down day for actually most of them to start the session, but we turned things around. Here we are, Nvidia actually just managing to hold the line to the upside there after losing about, before this, 10% or so of the week, given the headlines that we've been tracking. Meta ending up the day 0.5% higher, so did Amazon, but we did have Alphabet being the laggard on the session, down 2%. Microsoft not managing to poke its head through there, just on the line to the downside, and also Apple lower by 0.5%. So that's your scorecard for this Friday, off the back of what has been a wobbly old week, as I mentioned, with some of these AI valuation conversations creeping into the markets, as we've seen the economic impact, certainly from the U.S. government shutdown, some data to chew on. Kevin, what were your thoughts and your takeaways on the session and on the week?
Yeah, for the session, this is exactly what you would like to see. If you're looking at the S&P 500 on a daily chart going into the weekend, obviously we did see some weakness this week, but we did test that 50-day moving average, and we do have a hammer candle on the S&P 500. That's exactly what you would like to see. That hammer candle was actually bullish. What that really just means is that we opened up the market, we flushed lower, and then we were able to finish higher than what that opening print was. And so that's actually very bullish for right now. Let's see if we're going to have some follow-through. We are now pinned between the 50-day moving average to the downside and that 20-day moving average. If we're able to recapture the 20-day over the next, let's say, session or 2 sessions or so, I think that would actually be a pretty decent catalyst for us moving forward into next week. We also have to just be mindful. There's a couple of different points that we wanted to kind of highlight here. Breadth was actually expanding over the last couple of trading sessions. S&P 500 moving to the downside and breadth expanding is not a net negative for the market. If we start seeing every sector selling off very aggressively, that's when you get a little bit concerned. Also, when you're looking at volatility, if you look at the VIX index, we've been talking about it moving higher every single day, but usually volatility does not re-rate higher and higher every single day for, say, 3 weeks, 4 weeks or so, especially those major spikes of 30 VIX or 40 VIX. Those are usually quote-unquote type of black swan type of events. We haven't had that quite yet. So could volatility crush next week? I think that could be the case. I think you also have a significant amount of put positioning happening in the market right now. Put side skew is very aggressive compared to the calls. If we do get another green extreme day, or two, those puts coming out of the market could actually fuel dealers to buy into this market again and trying to push this market higher. I'm not overall bullish, but the trend right now is still higher highs, higher lows, and until we break 6550 on the S&P 500 and sustain below that for, let's say, 3 sessions, 4 sessions or so, you gotta go with the trend. The trend has been a friend for the bulls for a very long time. You shouldn't change that right now. And right now, once again, we're making higher highs, making higher lows. We haven't broken a lot of structure yet. We've broken some, but not a lot.
All right, and we did, get that news that the Democrats were proposing a potential end to the shutdown just in time to see this reversal. But I do want to offer an update here. No formal vote has been held yet, but it does appear that Republicans on the floor, which is currently ongoing, I have the live stream going here, have rejected it, outright rejected it. Majority Leader John Thune calling it a non-starter, saying it doesn't even get close. His point being that the Affordable Care Act will not be a part of whatever they agree to end the shutdown. That is a negotiation that must happen once they have agreed to end the shutdown. Senator Lindsey Graham also commenting, calling it terrible and political terrorism. So that vote will happen today at some point, but thankfully the market already closed because it is looking like we may not end the shutdown today based on that commentary. But with that said, we saw the NASDAQ as the only indices that closed down after we saw that reversal, KG, looking like its worst week since April from what I'm seeing. When we saw some of these massive tech companies really pull back this week, do you expect that to continue into next week, or is there some sort of catalyst that we're going to see where everything normalizes?
Well, that's the headwind that we are seeing, especially when you're looking at NVIDIA. There's no question that we are seeing institutional distribution when it comes to NVIDIA and its shares right now. You can see it within the volume. You can see it within the price action. We saw a lot of sellers stepping in anytime that we had any sort of incremental bounce to the upside on an intraday basis. And maybe that selling is going to continue next week. Who knows? I do know that the 170 puts expiring for next week were printing pretty aggressively early on this morning. Maybe that has shifted. So there's still some downside positioning. But if you are looking at the options complex, a lot of bearish positioning when you're looking at the Mag 7 names. But at the end of the day, once you start seeing some buyers really stepping in, a lot of those puts will be rolled off of off the books there. And that could actually be a positive catalyst. We have seen in the past, Apple's a really good example, a recent example that we saw back in June, July. No one loved Apple, and now everybody loves Apple. Apple's leading the way over the last couple of days compared to these other Mag 7 names. But when you're looking at Meta right now, do people really like Meta trading at $600? I mean, they were buying it when it was at $725, $750, but no one loves it right now. I think there's actually some opportunities for individuals and investors to try to pick up some of these stocks that have sold off fairly aggressively for the long-term portfolio, to say the least. A lot of re-ratings taking place. I think NVIDIA is the biggest wild card that we have. We have earnings coming out, not next week, but the week after next. Usually the earnings reaction for NVIDIA is not that great, so we have to be mindful of that. It's a very big constituent in the S&P 500. But if you get some of these other players, some of these other stocks really start to find bases here, especially when you're looking at Meta and some of these communication services sector stocks, that actually could hold us up at least for now. And as long as we are broadening out, I can tell you, institutional investors are going to be looking for how can they chase alpha over the next 8 weeks to make their mark when it comes to benchmark indexing. And right now, it doesn't look like that's going to be tech. It could be other sectors. It could be other areas of the market that are trading at a very cheap valuation compared to these tech names. And I think that's probably where you're going to see a lot of this alpha over the next 2 weeks. Maybe it's not out of tech. Maybe it's not out of communication services. It could come from materials. You're seeing energy catch a pretty decent bid over the last couple of days. Even if crude oil is moving to the downside, I think that's signaling something.
Yeah, absolutely. Certainly some interesting moves, particularly across the energy complex that you and I have been discussing on Morning Trade Live each morning as well, KG. You mentioned obviously some of the pullback that we've seen in some of the tech names, and we've very much seen this consistency as far as this pattern is concerned, that any sort of pullback, we do see the dip buyers stepping in and supporting the market once again. There have been a lot of conversations this week, particularly around the levels that the metas are at right now of the world, particularly around the fact that, maybe this is some healthy questioning in the market about, show me proof of all this spend and ROI as well. At least there's some of the commentary, or at least the remarks that I'm hearing in this market too. As we throw it ahead, you mentioned what you're sort of looking at as far as on the horizon. What sort of major catalysts should we be watching out for come next week, KG?
I think the Fed commentary is still going to be key. I mean, if you had Fed member Williams earlier this morning actually signaling that QE could be on the table here, and you are now starting to see some investment banks pricing in the fact that we could actually see quantitative easing taking place in Q1 of next year. Now, initially, that probably won't be great for the markets because of the conditions around it, but over time, more liquidity entering the economy is going to be conducive for equities moving higher here. And we'll probably try to run this economy hot with inflation running a little bit hot and QE taking place here. I mean, that's not really that great over the long term, but in the intermediate term, especially if you're an equity trader, that is going to be conducive. We also have the 10-year Treasury and 30-year Treasury auctions next week as well. We have gotten the update from the Treasury as well as far as their offerings that we're going to see in the future. We're going to increase some of those auction sizes, especially when you're looking at T-bills. Let's see what the appetite is for the Treasury complex as a whole here. And that's really what I'm looking forward to for next week. I think technically in nature, you'd like to see a follow 3-day taking place. I think you probably will see some bottom feeders in the meta space here. And even though, Marley, you were actually talking about some of the what's going on in Washington right now, and you're seeing this rejection, they're at least coming to the table and having a discussion, and that's enough for the equity markets to move higher. If you're looking at the futures right now, even on the back of that news that you're talking about, futures are still moving higher. That's all the market really cares about. Give us enough anxiety to have us continue to put money into this market, but once again, at least try to form a form of a resolution. I think that's going to take place. They're going to talk and chatter all over this weekend and kind of push back, but at the end of the day, we're seeing the impacts day by day when it comes to these airports. I don't think that can sustain for too much longer.
No, we got some very angry flyers. But KG, thanks for being with us on this Friday. Have a great weekend. That's Kevin Green. And coming up, we'll be joined by the CFO of Herbalife to discuss the company's latest earnings report, which saw a return to growth in North American revenue. We'll dive right in on next on Market on Close.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Hayden here in our Chicago headquarters. It's time now to turn our attention to Herbalife after the company reported earnings for its third quarter on Wednesday. Joining us now to break down the numbers and discuss, John DeSimon, the Chief Financial Officer of Herbalife. John, thank you for taking the time to be with us today on the heels of your earnings on Wednesday. If you wouldn't mind just starting with walking us through some of the key takeaways from your report.
Sure. First of all, let me extend my appreciation for you having me on the show. The third quarter is really a combination of a lot of initiatives that have been launched over the last really 8 quarters, building on momentum. And I think we just accelerated that momentum in the third quarter, both on the top line, where we had basis is 13.5% compared to 11.3% 2 years ago. So we're elevating our margin profile. We paid down a lot of debt. We generated free cash 40% higher than a quarter ago. I mean, there's a lot of good momentum going on in the business, all driven by the initiatives that have happened over the last year and a half. And those initiatives are building a new distributor base. We have this really strong foundation of good distributors, but we lost some momentum coming out of COVID, so we had to rebuild with some new distributors, some new training tools and technology that came out, some new products that came out, and most recently, some really advanced next generation technology that's really helping the business.
John, you mentioned momentum here. You just delivered your strongest sales quarter since 2021. As I was looking through your numbers, what is driving this turnaround, and is this momentum sustainable into 2026?
Oh, great question. So, what's driving it is the initiatives I just talked about. So again, it's kind of 4 buckets. It's new distributor growth, which we're up substantially, up double digit over 2 years ago. It's the launch of new products. We've launched some substantial new products. It's new training techniques. So when the distributors come in, we're training them how to be successful in today's world. And then lastly, the new technology that we've launched. And we've launched a significant amount of technology, especially in the US. And that's what's driving the momentum. To the second part of your question, is it something that will continue into next year? We actually do expect, we haven't formally give guidance, so I'm going to choose my words carefully, but we do expect to have growth next year also.
You can always feel free to give it here on Schwab Network if you ever feel compelled, John. We will happily take any of your guidance.
I'm so worried about saying something I shouldn't when it comes to that, but because we haven't given guidance. We'll give guidance in February. But as it stands right now, I expect that guidance to be net sales growth next year.
Right, so
in the U.S. and globally.
Okay, so let's talk about some of these new initiatives that you're talking about, particularly this lean into personalization with these platforms. I see you have Protocol and Link Biosciences. Can you tell us a little bit about each of these?
Sure. So first, the wellness category is moving into digitization at a really fast rate and personalization. And so our entry into that space was through Protocol. Protocol is a health and wellness app. There's lots of apps out there, but this app helps in 4 ways. It tells consumers what to measure in a very personalized way, what activities to do. It's as basic as drinking the right amount of hydration to something as complex as taking pictures of the meals you've eaten during the day, and the app can suggest what type of meal you should have for dinner based on your macros that you've had today and what's been missing. For example, if you haven't had enough protein, it can give you a suggestion of salmon for dinner. So it's what to measure, what to do, which products to take, so you can interface your Herbalife products that you purchase, and it'll give you reminders to take that. And lastly, it's wrapped in a community environment. One of the strengths of Herbalife is our community. It's our reach into thousands of communities around the globe. We have 2 million distributors in 95 countries. This community, and that community helps people be successful on a health and wellness program. So that's Protocol. Link Bioscience is controlling interest into a manufacturing company that can create an ultra-personalized formula. For example, if your needs are different than other needs, through the app, through some interface, we determine together what the right formula of supplements are for you. We will then just make you your very specialized, personalized supplement. So think of a packet coming in with powder with your name on it, with all the ingredients, and you just rip it open, dump it into a shake or into your water, and drink it, and you've had your supplementation for the day, and it's very unique to your needs. That's what Link Bioscience does. We will launch that in beta form in the U.S. early next year.
And you mentioned the broad reach. You saw North American revenue return to growth, Latin America doing well. But these are very diverse communities and markets that we're talking about here. So as you roll out more of these digital and personalized tools in the wellness space, how do you ensure that they resonate across these very distinct markets and countries?
Yeah, that's a great question. So one of our competitive advantages is that we have local distributors in each of these communities that will help us adapt the technology to the needs of their consumer. So I think one of the things that Herbalife does best is how we interact with those salespeople to determine what the best initiatives are locally. So what works in Barcelona might be different than what works in Bogota, which might be different than what works in the Bronx. but the distributors with the company work together to make sure what we're launching in those local communities resonates with those consumers.
And John, the global wellness market is now worth nearly $2 trillion. I mean, just a massive growth figure there. Where do you see the biggest white space opportunity within that massive ecosystem?
So the white space falls across both categories, but I think the white space is mostly in geographies. So we're in 95 countries. A lot of the health and wellness advancements struggle to get into the local communities out in these 95 countries. Right? They don't struggle to get into Los Angeles or New York, but they struggle to get in parts of Colombia or Bolivia. That's where we're the strongest. There's a lot of white space in the geographies which we're already strong in. We already have customers in those geographies. We can bring the advanced technology, the advancements in health and wellness to those consumers without much customer acquisition cost because we already have those consumers.
Well, John, we appreciate you taking the time ahead of your weekend to be with us here on Market on Close. That's John DeSimone, the Chief Financial Officer over at Herbalife. And I do want to send it back to Sam in New York.
Thanks, Marley. Well, coming up next, we'll close out the show with our final takeaways and what we're watching for next week. Market on Close will be right back.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at npetalides and connect with
Man,
me,
what a
Nicole
day, what a
Petalides,
day.
on LinkedIn,
That was crazy,
Facebook,
man.
and Instagram.
That was incredible.
Market built for traders who want more than
One
just
step closer to
headlines.
my kids,
We walk
man.
you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings.
Y'all keep your
to
head up. We
volatility
can do
plays.
anything.
We bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Welcome back to Market on Close. I'm Marley Caden here in Chicago alongside Sam Bottis at the New York Stock Exchange. We'll close out our show the same way we always do with our thoughts on the session today and also closing out our week. This morning, we got the University of Michigan's Consumer Sentiment Survey. Came in near the lowest levels ever recorded. The index posted a reading of 50.3 for the month, indicating a decline of about 6.2% on the month, about 30% down from a year ago. Concerns about the government shutdown topped consumers' fears, outweighing a boost in sentiment from the fresh record highs we've seen in stock markets. It is interesting to juxtapose this data against the earnings we've gotten, though, from companies like Airbnb and Expedia this week, indicating that the consumer is still resilient, is still spending, is still traveling, and feels confident to do so. Also want to talk about Tesla, this major headline for Tesla, that the shareholder meeting finally happened. Elon Musk got his $1 trillion pay package. It does have a significant amount of milestones to reach, but it was overwhelmingly passed with more than 75% approval. That meeting also had some very, very big headlines come out of it as well, with Musk teasing a potential chip deal with Intel, hinting that SpaceX could eventually go public, announcing production timelines for both the Cybercab and the Roadster 2, as well as commenting on when full self-driving could get full approval in China. It was a very busy shareholder meeting with lots to cover there. And Sam, how about you? What caught your eye today?
Well, NVIDIA was extending losses today, but it just managed to pick up in the last final minutes and actually
only just, but that came off a bit of a tough week, certainly for the stock. In the latest, the CEO Jensen Huang saying that there are no active discussions on the Blackwell chip going to China, adding that currently they're not planning to ship anything to China. Now, this comes after the NVIDIA CEO had told the Financial Times earlier this week, which caught a lot of attention, that China would win the AI race, before actually clarifying that, saying that he actually said that China has very good AI technology and they're moving very fast, and that the US has to continue to move incredibly fast as well in order to compete. So there had been also some speculation a couple of weeks ago that Presidents Trump and Xi would talk about the Blackwell chip at their meeting over in South Korea, but then we found out that that had been, quote, torpedoed by government officials. And now, in the latest as well, the information has been reporting that the White House will not allow NVIDIA to sell its scaled-down version of the chips to China. So we're talking about the Blackwell B30A, which of course China and NVIDIA have been very good at sort of adapting to that market and trying to get around some of those export controls. But sticking with the tech theme, shifting to the memory space, SanDisk was rallying today, and that came off the back of a beat on the earnings, the revenue, and also raising guidance. Now, this stock is up over 500% year to date amidst that strong demand that we've seen from AI data centers, which need a lot of memory and storage. So these massive investments have led to tightened supply and higher prices for these memory chips. And just today, interestingly, to highlight, Chinese media was out reporting on how the world's biggest electronics wholesale market over in Shenzhen is seeing a dramatic increase in the prices of memory chips and other storage products, which could drive up the cost of consumer electronics goods. So that's something to keep in mind moving forward. But heading into next week, Marley, what will you be looking out for?
We've got another big week of earnings, Sam. Two of the names that stand out, Applied Materials and Cisco. Applied Materials will report Thursday after the market closes. Analysts expecting EPS of $2.11 on revenue of $6.7 billion. Now, both of those numbers would mark year-over-year declines. Analysts are bullish going into the report, though, with more than 60 of them maintaining a buy rating. For Cisco, its stock's trading at a pretty elevated multiple, so investors likely looking for better than expected growth in 2026 and strong results from its networking segment. For the first quarter, they want revenue of $14.78 billion on earnings of 98 cents. How about you, Sam?
Well, it's actually a big week for those Chinese ADRs, as I mentioned a little bit earlier. So we're going to be getting report cards from some of the favorites, including Tencent, Alibaba, Meituan, JD.com, Li Auto, and Bilibili. And of course, this is important because it will give us a sense of, where the Chinese economy is at, but also where China is up to in some of its AI ambitions, because some of these companies, like Alibaba, have really been at the forefront of some of the self-sufficiency drive that we've seen. We've got Fed Speak as well, Anna Paulson from Philly Fed, Raphael Bostic from the Atlanta Fed, Susan Collins from the Boston Fed too. And just remember, of course, it's Veterans Day. We'll be here, Marley, of course, as always, but the bond market, of course, will be closed, so we'll be keeping an eye on that.
Yes, we will be here, but right now it's going to do it for Market on Close. We're going to start the weekend. We hope you all do too. For Sam Bottas, I'm Marley Caden. Be sure to download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Market Overtime is coming up next. We hope you have a great weekend.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to
Yeah.
the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hello, Overtime. I'm Sam Bottas. Our next guest is an MIT graduate
Bitcoin. I'm very pleased to introduce now Michael Saylor, Executive Chairman of Strategy. Welcome to Market Overtime here on the Schwab Network.
Thank you for hosting me.
First and foremost, congratulations on becoming the first Bitcoin treasury company to be rated by S&P. How does it feel and what does it mean?
Well, I think it's a very legitimizing step. It's auspicious for the industry. This year, we launched 4 digital credit instruments, Strike, Strife, Stride, and Stretch. They were all IPOs. They all publicly trade. Those are backed by Bitcoin. And they've been very successful, but they've been unrated. And so many fixed income investors and insurance companies and large pools of capital, they would like to buy them because they have superior yields. They're really cool instruments, but they can't without a rating. And so part of the maturation of the entire asset class is getting the traditional credit rating agencies to begin to acknowledge digital credit. And this was the first credit rating of a Bitcoin treasury company ever in the industry. And we've been at it for 5 years, so I think it's a big milestone.
It certainly is a significant step, and I just want to sort of talk about what you do, because you mentioned some of your product offerings, and we will dig into that in just a little while. But what is the best way to understand what you do and how?
Well, it all starts with Bitcoin, a digital commodity. Bitcoin is digital gold. It turns out that it's also a global asset. It trades 24/7, 365. You can sell it short with 20x leverage on a Sunday morning, and then you can reverse and go long 40x a few hours later from Singapore, cross-trading with someone in Europe, and that makes it very volatile but very desirable, and for a conventional investor, makes it a little bit scary. The history of Bitcoin for the past 5 years is it's been appreciating about 50 to 55% a year, and it's been about 50 vol, so 3 times as volatile as the S&P index. If what you wanted was 50% ARR and 50 vol, then you would just buy the raw commodity. But it turns out that if you walk down the street and you ask people, would you like to generate 50% returns a year, but you might wake up and lose 25% of your capital in 1 week, most people don't want that. So they don't like the volatility. What our company does is we buy Bitcoin and then we issue credit instruments against Bitcoin. So for example, some people would like to have 75% of the upside, 5% of the downside, and an 8% dividend while they wait. That's a convertible preferred, and that's what Strike, STRK, is. It's most of the upside of Bitcoin, very little downside. It's like 6-7 times over collateralized, and it's a dividend. Other people, they don't want that. They just want, for example, 10% dividends forever. I don't care about anything more than that, but if you pay me 10% dividends forever, that's interesting. So we just take an asset that's very volatile that we expect Bitcoin to go up 30% a year for the next 20 years. We expect it to go up more than 20% forever. So it's not a problem for us to give 10% dividends because that's our business model. But for the investor would like to see that we're 5x or 10x over collateralized, right? So for every $10 billion of Bitcoin we own, we might sell $1 billion of that credit with that $100 million dividend stream. And so, the credit investor, you're just getting a pure yield. And from our point of view, we're paying 10 and we're getting back 20, 30, right? So it makes sense for us. And then, there are other flavors, like we created this product, Stretch, STRC, which is a treasury credit instrument. The idea of that higher performance than Bitcoin. And what you have is some people want more Bitcoin performance and they want to be on a roller coaster and they buy the common stock, and some people want less and they just want the pure dividend stream. And of course, the people that just love Bitcoin and they don't want any counterparty risk, they don't want no security, they just buy the commodity Bitcoin. And so that's how we sit in this ecosystem.
Right, so it's almost like a levered bet. I mean, it's a way to be exposed to Bitcoin without having to actually buy the actual commodity yourself. There is so much to unpack there, Michael. I mean, you've just talked about how much Bitcoin you have, $75 billion. Just talk to us about how much that actually represents and what's your end game here.
Well, we own about 640,000 Bitcoin, and that's about 3.1% of the network. 3.1% of all the Bitcoin that will ever exist, we have acquired. Most of that we've acquired with equity capital. About $50 billion plus of common equity, about $6 billion worth of preferred equity, and so the company is substantially equity, and our primary business line is to issue this credit instrument, and every year we sell a bit more equity and we sell a bit more preferred equity and we buy more Bitcoin. So like this week we bought like 390 Bitcoin. Every week we'll acquire a bit more and we just continue to grind up. And as we do that, Bitcoin becomes more scarce. And because we're buying so much of it, that means the price over time has to appreciate because all the natural sellers get taken out of the market and no one wants to sell unless you raise the price for it.
Right, so you're really a pioneer in what you do with regards to Bitcoin treasuries. I mean, how many companies are out there now doing what you do, and do you welcome that?
Yeah, in August of 2020, we were the first public company to make any meaningful commitment to crypto assets or to Bitcoin specifically. And we bought $250 million worth of Bitcoin in August, and then we followed up with another $175 million a few weeks later. We were the first, then came Block, then came Tesla, then came half a dozen or a dozen other Bitcoin miners, and by about a year ago, there were maybe 60 companies that owned Bitcoin, and then it doubled, and now I think there's probably 180 companies that own some amount of Bitcoin on their balance sheet that are publicly traded. We're 10x larger than the next largest one in terms of holding, so we're the 800-pound gorilla in the space. I think probably 1.1 million Bitcoin are held by public companies, and we own about 2/3 of it. So we're the largest player. We're the first ones to actually issue digital credit instruments like these preferreds that are trading in the public market. But I expect that others will follow. There'll probably be about half a dozen companies over the next 12 months to 24 months that will follow and issue those kind of credit instruments. We welcome those companies. I mean, the truth is every single company that capitalizes on Bitcoin takes more supply. There's only 21 million Bitcoin ever. So, if Microsoft turned around tomorrow and bought $100 billion of Bitcoin, that would be great for us. Right? So the more companies that buy Bitcoin, the better. Most are just capitalizing on it. They're just buying it in lieu of holding treasuries or holding cash. Right? It's like a company can own real estate, a company can own any other asset, a company can own Bitcoin. So most do that. There'll be a few pure play treasury companies that will also issue digital credit against their underlying Bitcoin, but you need to have, more like $10 billion of capital before you can get to critical mass where you could do 500 million and billion-dollar IPOs of credit instruments that would be liquid in the market.
Okay. Let's just take a step back. I mean, obviously you founded Strategy in 1989. I just want to get a sense of what Bitcoin is to you. I mean, you've called it digital gold, but you've also talked about how, the fact that it's evolving faster that people can digest, but also the fact that there's a lot of criticism out there and it will continue to be misunderstood. How do you speak to that? I mean, how do you reassure the markets about what you're doing out there?
The best way to think about Bitcoin is it's the world's first example of a technology that allows individuals or corporations to tightly bind economic energy to their person. You know, you have 100 families, and they all have some money, but they don't trust each other, they don't trust their bank, they don't trust their government, they don't trust any company, but they want to keep their money. So they come up with the idea of a digital bank. You write it in software, and the digital bank has 21 million coins, and anybody can buy any amount of the coins in the bank, and that becomes their bank in cyberspace. Now, the question is, who runs the software? Well, I might trust you, but I won't trust your great-great-granddaughter. So we all run the software. Everybody runs the software, and then the software continually cross-checks everybody else. And so it's a very elegant, decentralized way to create a property network or a decentralized banking network. It's a protocol for economic prosperity, right? Just like you speak English, I speak English, we can communicate. You use Arabic numerals, I use Arabic numerals. We could do math together. When you offered me nine bananas, I know what 9 is, right? Because we both use the same numbers in the same language. Well, what if we want to trade together and we don't want to rely upon any government or any bank, and we want to do it for 1,000 years? So Bitcoin represents that breakthrough. It's the first time in human history that an individual can own anything without asking the permission of someone more powerful than them. If you have 1,000 Bitcoin and you have the private key, nobody can take it away from you. You can carry it with you. You can send it anywhere on earth. You can take it with you to the grave. You solved the problem that the pharaohs in Egypt couldn't solve. How do you take your money with you? Right? So that's a big idea. Let's just call it a bank in cyberspace where you put your money and no one can steal it. And it's currency in the sense that there's never going to be more than 21 million. So when you buy a Bitcoin, you're buying 1/21 millionth of all the money in the world forever. That's the idea. What do we call that? I call it the world's reserve capital network, right? It is capital. What is capital? Long-term store of value. You're a rich person. Where do you save your money for the next 100 years? Not in the currency. You don't buy pesos, you don't buy euros, you don't buy the US dollar, you don't buy the yen. If you're a rich person and you want to save your money for 100 years, you're buying equity, private equity, public equity. Maybe you're buying scarce desirable art. Maybe you're buying real estate, commercial real estate. So the capital assets of the 20th century were like the S&P 500 index, or New York or London real estate, or maybe sports teams if you're lucky enough to be able to buy one. But what Bitcoin represents is digital capital, right? If I have a bank and it's a network, a bank, I can move the money. I can move $1 billion from here to Tokyo in a few minutes. So then that way it's a network. But it's also capital itself. If I gave you $10 million and I dropped you in the middle of Africa, and I said, buy anything you want, buy any equity, buy any land, buy anything, buy any bond, buy anything, but you got to keep it for 30 years in Africa. Or I said, or you could buy $10 million of Bitcoin, and by the way, you can send it to Singapore or London or Paris or New York in 2 minutes from your phone. I would submit to you, there's not a single thing you would buy in Africa. There isn't the capital asset that you want to give to your family or your great-grandchildren. The same is true if you actually talk to people in China. They don't want to keep their money in China. There's a law against removing it from China. In Russia, in Ukraine. If you talk to Europeans, they don't want to have their money locked down in any country in Europe, right? They want to have their money. Where do people want their money? They want it in the U.S., right? How about Brazilians, Argentinians, Venezuelans? Most of the world doesn't want to take all of their family's wealth and store it locally in real estate, local stocks, local currency, local banks. That's why there are laws against them removing the money. And the problem with gold is if you have all your money in gold in Africa, you can't take it through the airport. You can't take if you have all your money in gold in Argentina, you can't bring it out of the country. So the value of Bitcoin is it's digital gold. So if you have your family's assets in Bitcoin, you can take it anywhere you want. No one can stop you from removing it from the jurisdiction. And the more insecure you are about the country you live in, the bank you do business with, the nation state you rely on, or your economic future, the more desirable it becomes. So in a nutshell, Bitcoin represents property rights for the human race. It represents economic prosperity, and we'll call it colloquial digital gold, but it's 100 times better than gold. You cannot teleport gold from here to Tokyo with the blink of an eye, right? And if you have gold, I can shoot you and take your gold. If you have Bitcoin, I can kill you, but I don't get the Bitcoin. And so it is a state change difference in the economic vitality of an individual, a company, a family, a nation state, the human race. And so that's why all of us in the crypto community, we really we revere Satoshi, and we think about the world before Satoshi and after Satoshi, because before Satoshi, everything you owned was subject to the permission of someone more powerful than you. And after Satoshi, after January 3rd, 2009, you could own something for yourself that no one can take away from you, and that is what's caused the entire 750 million person crypto movement.
And it certainly has been gaining traction. I mean, crypto has got so many tailwinds this year. I mean, more regulatory clarity and support, more corporate adoption, institutional appetite, and also legislative wins. I mean, which one has been the biggest tailwind for the space, and what continues to drive it higher?
There's been about half a dozen massive milestones in the past 24 months. The first one was the approval of spot Bitcoin ETFs in January of 24. And that sparked the explosion and the explosive success of IBIT, which went from $0 to $100 billion in less than 2 years, and it's the most successful ETF in the history of Wall Street. So that was a big deal, the endorsement of the SEC. The second big deal was the red sweep in November, when you had a pro-crypto, pro-Bitcoin administration. We went from one supporter in the cabinet, Gary Gensler was a Bitcoin believer, 1 out of 12, to all 12 cabinet members, the president, the vice president, the head of the SEC, the head of the CFTC, the head of the Treasury, the head of Commerce, the head of, RFK, the head of, the head of, the Housing Authority, Bill Pulte, Kelly Loeffler, and Howard Lutnick. So you all of a sudden have 12 positive cabinet members from one, and that was a big deal. The third big milestone was FASB's adoption of fair value accounting for crypto assets. Before that point, and that took place at the beginning of this year, beginning of 2025. Before that point, if you're a public company, you could mark down your losses on Bitcoin, but you could never realize the gains. Right? It's literally an asset where you could only lose, you could never win. Right? So the entire accounting rule is a deck stacked against you. And so fair value accounting meant that our equity, for example, went from $3 billion to $50+ billion in 12 months. Right? But if it was not for fair value accounting, we would still have $3 billion instead of $50 billion. So that was very prejudicial and hostile accounting, and that flipped in January. I think the fourth big milestone is all of the pro-crypto and pro-Bitcoin guidance that came out of Treasury, the OCC, the FDIC, and the Federal Reserve. And the key point there is most banks in the United States and the rest of the world were afraid to custody Bitcoin. They were afraid to lend against it. They were afraid to do business with it under the previous administration. And I think the guidance that came out of the current administration delivered a message, which is not only is it safe for you to custody and extend credit against these assets, it's really imperative because the United States wants to be the crypto capital of the world, and we want to lead in digital assets, and that means our banks need to lead in digital assets. So that you can attribute to the president and to the Secretary of the Treasury, Bessent. I think the next thing was the passage of the Genius Act, championing by Senator Haggerty, and that created a stable coin environment in the United States. And the idea there is, why can't we tokenize the US dollar and ship $1 trillion of it to the rest of the world, or maybe $10 trillion of it to the rest of the world? Because money wants to move at the speed of light, and this is the critical part of the crypto ecosystem. So the last two banks that moved crypto dollars around were Silvergate and Signature Bank, and they were assassinated by the previous administration. They were shut down on a weekend for no good reason. They were perfectly well capitalized, and they were literally murdered by regulators. So you can imagine that the banks were afraid to get involved with crypto under the previous administration. You know, getting a supportive White House, a supportive cabinet, a supportive head of the Treasury, and then a law that says that it is legal for you to do this, I think was pretty important. And that has resulted in an avalanche of institutional adoption. And now you have companies like J.P. Morgan, right, and Bank of America, and Wells Fargo, and BNY, Mellon and PNC Bank, and Citi, that are all announcing their support for this asset class. And if the trillion-dollar banks are willing to custody, and they're willing to extend credit, and they're willing to handle the asset class, and they're willing to bank the crypto industry, that's really the necessary condition to 10x from here. Like, Bitcoin got to 100,000 without their help, but getting to 1 million requires the banks to bank the asset. And so the next 4-year period is really about banking Bitcoin and the support for digital assets in general by the major establishment of bankers in the United States. And everybody else in the world, right? You can imagine the bankers in Australia, Canada, Singapore, the Middle East, and Europe, Mexico, they all follow the U.S. banking standard. And so what you have is an avalanche or a sea change here, and the headwinds have become tailwinds.
Mm-hmm. Okay, so that's what got us here. Let's just talk about the short term, 2025 year end. Where does it end up? Because I've heard everything from 100 to 200,000.
Yeah, well, the consensus of all the equity analysts, there's like a dozen of them that cover our stock, is north of 150,000. Our corporate guidance is targeted at $150,000 by the end of the year.
Right. Okay, and sort of looking further out, have you got a sort of a 2030 target?
I don't have a specific target, but in the 4 to 8 year time frame, I think Bitcoin goes to $1 million a coin. My 21 year expectation is Bitcoin appreciates about 29% a year for 21 years, and that leaves it at $21 million 21 years from now. So I think that Bitcoin will appreciate in the range of 29 to 30% a year for 20 years from this point.
Okay, you seem to like that number, 21. Just as far as what we have to work with through the end of the year now, I mean, you know, is there a favorable macro environment to support that as well?
I think the drivers right now will be Fed decisions with regarding monetary policy. Clearly, that drives every asset class, and we've had a fairly tight monetary policy right now, and if that policy loosens, that'll be a driver. I think other than that, the industry is volatile, and the primary actors in this case are the banks, and every time a bank makes a major announcement about Bitcoin acceptance or crypto adoption, those are all very positive for the asset class, and those should come progressively.
You know, it's interesting, just as far as the more recent price action that we've seen off the back of October the 10th. I mean, we did certainly see risk on for equities, but it feels like Bitcoin's kind of been stuck and sort of lost the momentum. Why is that?
I think it's a $2.5 trillion asset class that's been unbanked. So imagine that you started a company, NVIDIA, and you gave 90% of the stock to the employees, and they went from $1 to being worth $3 trillion, but no bank would give them a loan against it. So you're an employee, you've got trillions of dollars of capital gains, but no one will give you a nickel loan against it. You cannot get a loan. You could post, you know, you have $10 billion of Bitcoin. You can't get a $1,000 loan from a major bank right now. So what happens is the OG crypto holders, the ones that actually had the capital gain, the only path they have to liquidity is to either rehypothecate the Bitcoin and it gets shorted in the market, or to sell the Bitcoin. So I think we're working through a period where 10% of the supply, or it wouldn't. What percentage of the equity in your big tech company would be sold by employees? You know, when they all got insanely rich, probably 10-20%, right? They would sell at least. So we're waiting for that to boil off, and we're at the point where everybody knows that Bitcoin is digital gold and it's got institutional acceptance. But banks are very careful, bureaucratic, and process-driven creatures, and they should be, right? I mean, if banks get out of control, right, there's hell to pay. So I think it'll take 4 years for the conventional traditional banking establishment to get spun up where they're custodying the asset and they're extending credit against the asset. And it's worked its way into systems, right? I mean, Bill Pulte has directed Fannie Mae and Freddie Mac to start to recognize this as good collateral, but how long will it be before you can post your Bitcoin as part of your conforming loan collateral? And it's a government, quasi-government type agency, and the credit rating agencies, they're starting to cover us like we just got covered by S&P. But how long before they acknowledge Bitcoin as collateral or capital that's just as good as holding a share of NVIDIA stock or Apple stock? And I think, reasonably speaking, that's a 2 to 4 year adoption curve. So between 25 and 28, the traditional finance infrastructure to bank and collateralize and issue credit against this will come online. When that happens, if you think about every asset class, if you can't get a loan to buy a car, and if you can't get a loan to buy a house, what happens to car prices and house prices? Right? At the point that the credit market forms over the asset class, the prices move up. So what you see right now are the bank credit markets, the corporate credit markets, right, and the public credit markets are forming on top of Bitcoin. And as they form, that's going to be very positive for the asset itself.
It's about those believers, isn't it, as you say? And you actually have previously said that each quarter you gain more believers. Can you give us a sort of sense of what you've seen in the most recent quarter?
Well, I think that we started with the early shareholders of Strategy. They were Bitcoin and crypto believers who were prohibited from buying Bitcoin due to regulations in the various markets. So you're a Bitcoin believer and you're a retiree and you live in the UK and you have all your money tied up in your UK retirement plan. It's illegal, impossible to buy Bitcoin with that money, but you could buy a stock, so you'd buy MSTR. Same in Australia. Actually, everywhere in the world, there are large pools of capital that are tied up in these tax-advantaged accounts, IRAs, 401ks, etc., where you might be able to buy security, but you can't necessarily buy, you can't just say, I want to buy a bunch of my favorite artist paintings that are, at Art Basel. So the early believers were the crypto enthusiasts that had capital tied up. And mainstream investors, big investors that actively manage funds at Capital Group or Morgan Stanley, that they believed in the Bitcoin thesis, but they had pools of billions of dollars that were mandated to make equity capital investments. 99% of the professionally managed money is mandated to equity or credit. They can't invest in a commodity. So we offered the first equity to the equity capital investors. And what we followed on next was a set of convertible bonds. We became the biggest convertible bond issuer in the world. And they were the most successful convertible bonds, and there was a lot of money earmarked to convertible bonds. So after we became a substantial part of that market, we outgrew it. And then we went on to preferreds, and in the preferred market, we started creating these publicly traded digital credit instruments. They were targeted at a different user base. I mean, the person that wants to collect a 10% dividend forever, but they don't want the Bitcoin upside. It's like, okay, I hear you when you say you expect 30% a year for the next 20 years, but just guarantee me the first 10 and you can have the next 20, but take the volatility away and then take the risk. Like, right? There's a lot of people that would rather have 10% after tax with 1/100th the risk, right? And so that's a different class of investors. So we have rotated from the true believers to the hedge funds that, like, the Millenniums and Soros and Citadels that wanted to trade and hedge the convertible bonds, to the credit investors that want long duration sophisticated credit. And then with Stretch, it's just money market investors. I have some money, I just want more than zero, but I don't really want to risk the principal so much. And so that last set of investors are, retirees, mainstream retail. I think we had $600 million of retail demand for our stretch IPO in 2 days. So in 48 hours, we had $600 million of demand, and that was an order of magnitude larger than the retail demand for our other, instruments. So right now, this is migrating to family offices, retail investors, high net worth individuals, and of course, fixed income investors like, PFF, which is like BlackRock's preferred fund. I think like 3.5% to 4% of that fund is invested in our credit instruments, which didn't exist 12 months ago. So we're now starting to move into credit indexes. Of course, you're a credit investor, you have to buy credit. You're an equity investor, you have to buy equity. We're also in equity indexes. For example, our biggest shareholders are Vanguard and BlackRock through their passive equity index funds. So there's a lot of pools count in the world. Some of them, if you lived in Africa and you needed to flee the country and you didn't trust your bank, I would say buy Bitcoin, put it on your own hardware wallet, because you can't trust the bank. Right. But that's one class of Bitcoin investors. But if you're an investor in the United States and you have pools of capital earmarked to equity or credit, then you probably want something created by a company like ours.
Mm-hmm. There had been a view out there that crypto was uninvestable without the regulatory framework and guardrails in place. But we have seen these sort of legislative wins, as you mentioned, and we still got to 100,000, to your point, without that. I'm just wondering, talk us through Strategy's involvement in the latest legislative efforts now to really regulate and create those guardrails and construct the infrastructure for everyday people to understand and access and have that exposure to crypto.
If you look at the digital assets industry today, you can divide it broadly into two segments. One segment is digital capital, and that is Bitcoin. It's dominated by proof-of-work networks. Bitcoin is 99% of all the energy and all of the capital in that side of the industry. And digital capital means digital gold, and that means, I want to buy something without counterparty risk and hold it for 100 years. And what do you do on top of gold? You issue credit. For 300 years, the Western world ran on gold-backed credit. All of our currencies, all sovereign debt, all corporate debt was, in essence, a form of gold-backed credit. So the part of the industry which is most traditional and conventional is digital capital, digital credit, all basically centered on Bitcoin and Bitcoin treasury companies, and that's what our company Strategy does. The other half of the industry is digital finance. And that is all about tokenizing currencies, tokenizing securities, stocks and bonds, tokenizing real-world assets, tokenizing brands, right? It's Joe Rogan token, right? It's a meme coin, but it's also the dollar. Right? It's also a stable coin. So that opportunity is, why don't we create $10 trillion worth of stable coin and export our currency to the world and move the money at the speed of light and let the computers trade with themselves 1 million times a second? Why not? And that's also about capital formation. Like, there's 40 million companies in the United States. Why can't they all just issue their own token to raise capital, right? Tokenize your country club membership, tokenize your restaurant, tokenize your hotel chain, whatever, Katy Perry token, Joe Rogan token, everybody token. Right now, you want to go public, it's $40 million in 4 years and an army of lawyers. Well, what if I just wanted to spend the weekend or 4 hours or 4 days and I wanted to raise money for my $2 million company or $20 million company? So capital formation is another killer application of digital finance. The third killer application is I tokenize a share of Apple stock. Okay, why can't I just send Apple stock between India and Pakistan on Saturday afternoon on an Android phone? Okay, what are you doing? You're basically moving the securities market at the speed of light. Everybody wants 24/7, 365 trading. And if I can self-custody my Bitcoin, why can't I self-custody $1 million worth of Apple stock? And if I can self-custody, maybe I can actually, get bids from the highest bidder, and I can send $1 million of Apple stock to Singapore and get paid for it. So this entire area of digital finance, this is very entrepreneurial. It's all about innovation. It's much more sophisticated, and that is the other half of the crypto market. Now, the first half of the market, digital capital, digital credit, that's got regulatory clarity now, right? Bitcoin is digital capital. The President of the United States has said it. It's been the Secretary of Treasury. They've all clarified that. So that's pretty much just about issuing traditional conventional credit instruments, taking them public on capital markets. And if there's any hoops to jump through, it's like, how do I sell stretch in euros in Switzerland and get the sign off from the European Union, the Swiss regulator, the exchange, right? But it's not new law. It's traditional finance law. The other part of the equation requires clarity. I mean, literally the act clarity. And so the next big crypto bill is the bill that defines and creates the bright lines and empowers. What can you do with digital currency? What can you do with a digital token? How do I tokenize my share of stock? How do I tokenize, STRC and let it trade at the speed of light in Singapore on the weekend on a crypto exchange, right? It's not clear how to do that yet. Is there demand?
Man.
Yeah, there's $100 trillion of demand. But I think that there's bipartisan consensus that we need that bill. That bill will get passed. We don't know what the final bright lines in the bill will be. And once the bill is passed, then it'll be clear, what you can do and what you can't do. And so I think that if you're an institutional investor or a conservative investor, right, you can buy Bitcoin, hold it as a store of value. You can buy digital equity or digital credit instruments backed by Bitcoin. That's all fairly straightforward. I think in the other part of the industry, the digital finance part of the industry, it's very driven by technology. It's very regulatory intensive, and then it's unclear, how will every jurisdiction, view every regulation. So it'll be a bit more complicated, but, we're talking about extraordinarily exciting new ideas, an artist, a celebrity that could own their own brand, and a membership that could be tokenized, a ticket that could be transferred. So there are a lot of things that will happen, and they'll be transformational and innovative, but, they'll require more legislation before you're going to find your favorite celebrity do it. They're going to want to make sure they're not getting sued by the SEC.
Okay. And speaking of these new ideas, I mean, why should the U.S. government have a Bitcoin reserve?
I think that the key to understand Bitcoin is it is like owning a piece of cyberspace. It is the world reserve capital network. So if you're looking at a world that's going to have hundreds of trillions of dollars of capital on this network, and if we're looking at a world where you're going to see trillions and maybe tens or hundreds of trillions of dollars of credit on top of the capital in the network, right, you might want to own a piece of it, right? What I say is the United States purchased 79% of the land mass of the country. 79% of the United States of America was purchased for $40 million. That's all of Louisiana territory. That's all of Texas. That's all of California. That's all of Alaska. We purchased it before we knew there was going to be Hollywood, before we knew there was going to be a Silicon Valley, before we knew that we would want oil, right? We purchased Alaska in 1867. It was Seward's folly. He was a fool for doing it. It's got trillions of dollars of oil underneath it right now. So, if you can actually purchase the future, if you can own cyberspace, you ought to, right? The Dutch, I think they purchased Manhattan for like a few billion in glass beads or something, right? So, it's very valuable real estate. In the same way that you want to control the world's reserve currency network. The corollary is, why should the U.S. actually sell $10 trillion of stablecoins? Because money wants to move at the speed of light, and if we sell the 10 trillion of stablecoins, and if our companies run that network, we will control currency for the next 100 years. And so I think the United States ought to dominate the world reserve currency, and it ought to dominate the world reserve capital network. We're the biggest holder of gold, and if I said to you, would you like to own the majority of the oil in the world?
Maybe said the N-word
John D. Rockefeller thought yes, and we were the biggest generator of energy, due to Standard Oil.
But you keep saying that, bro.
And that's why we won World War I and World War II, because we were the energy dominant leader.
Let me tell you something first.
is digital energy.
First of all,
right?
I'm the
Either
coldest.
you
All right.
control it or
Let's
somebody
just
else does. And so
let's just let that be known.
one more point. If the U.S.
Number
does
two.
they should encourage U.S. banks,
Number two.
U.S. investors,
I might, bro. I ain't
US
even took a shot since I played this game.
and
Like,
taxpayers to own it. Right?
and I'm still probably gonna give my man 20.
Right? But it's very,
that's
very
what makes it so
critical
bad.
that
I know how to hoop.
U.S. investors, U.S.
You
corporations
coming at me?
control it in the same way that it
Rob,
wasn't necessary for the U.S. to own all the oil, but it's pretty
you know
necessary for a
do you
U.S.
know what I be
corporation
doing?
to own the oil.
What about the energy side of it? I mean, so many Bitcoin mining
I pay
companies
for
are
it.
pivoting to focus on AI data centers.
No,
Talking to a number of
I'm a
them,
father. I'm an investor.
CleanSpark,
I'm a businessman.
What are your thoughts on
I be doing a bunch of shit.
I think that
So I don't even be on 2K like that this year. But when I am on 2K, I get to it. I create. But you know, all last year I held purple for like 8 months straight. And the year before.
Unlimited, clean, scalable energy, and we shut down the program for 50 years. And in 2020,
I retired my power forward the year before because he was literally too good. Like I literally was.
Asking the question, how do we get this nation to
I swear to God, that power forward was too good, bro. I retired him, and he had purple for like a whole year down there.
The most efficient way to do it is with nuclear.
I swear to God, I wasn't playing with no Last. I wasn't playing with no Tucky. I was carrying randoms. Like I literally stream for a living. Like all this stuff is real. I had screenshot to screenshot.
And that's what AI is.
Send me a spot, but look, I'll show you right now.
Digital
I'll get to it.
is you feed it extreme amount of energy.
That's the reason why I stream now, chat, because I'm always having to prove myself to either myself or to somebody.
NVIDIA chips, GPUs, and out comes digital intelligence.
I shoot 60% from three.
What the Bitcoin industry discovered is the way you create digital money, digital capital, is you take gigawatts.
Oh yeah, okay. My last game was bad. My last game was bad.
And you generate a wall of encrypted energy to defend the network, and that's what Bitcoin is. So what happened in the last 4 years was
Look, they got my stats lined up in
Bitcoin
2K.
miners were under pressure for using too much electricity by the environmentalists.
I only shoot 50 and average 11 or 12.
Actually going to create a new banking world.
I only shoot 50 and 50 and average about 12 points.
Trillions of dollars, and so it's a good use of electricity.
Me,
but we had a hard time
it's
winning
built.
that battle. Then all of a sudden we have the chat GPT moment, and people discover
I'm a small
that
forward.
they also need power in order to create digital intelligence, and that turned Apple, Amazon, Facebook,
Bro, I got Larry Bird build. I'm really ready to drop like 25 points on somebody.
And that entire debate about whether electricity good or electricity bad just went away.